all of the input to making decisions is very, very low right now. So I would expect that this soft data will translate into hard data over coming months, unless there is some real confidence restoring action. Candidly, I can't think of what that will be. I think we've taken this hit. We're going to have to reprice lower on the back of it. But these surveys, whether it's UMich or the Richmond Fed CFO survey, these are things we have to watch very closely.
Paul wants to get in here. I got to shut up in a moment. I need to rest Kate. But Kate, this is too important. I got 38 VIX, but I don't see Bruce Kasman over at another bank who's talking about blood on the streets. I don't see panic, Kate Moore. I don't see catharsis or that wipeout to buy the dip. And I'm in a 38 VIX. Discuss.
Yeah, I have to say, watching price action overnight on Wednesday and throughout yesterday, and then overnight again last night, just like everyone else, we haven't been sleeping much over it today. I will say it felt really orderly. There was obviously some dislocation or repricing. We talked about that earlier in the hour, I think, in the consumer stocks. But that was prudent when you consider these supply chains. It was not, really spastic moves. And I think as long as we can continue to have an orderly market today, people are not going to be rushing in to step in and buy the dislocations. Look, the other thing, Tom, no one likes to say this, but people don't want to be long a lot of risk going into the weekend, especially if there's going to be a huge amount of news out from DC and our global counterparts. It just makes sense to kind of neutralize, to take down risk, add to cash. And we're seeing that across all client segments.
We're security here. Paul wants to get in one final question. Are you long risk, Paul, into the weekend with Duke? I mean, are you long Duke in the Final Four?
I am very long Duke in the Final Four. Feeling good about that. Hey, Kate, earnings season. Boy, I'm not sure what these companies can say about the outlook here. How are you guys going to
brilliant? Continue, Paul.
Yeah. So
this is the most important question of the morning from Paul Sweeney.
So how do you expect, Kate, corporate America to kind of talk about their future?
Well, here's what I don't want to hear them say, Paul. I don't want them to say, we're pulling guidance altogether because we have no visibility. I want them to at least present scenario analysis and some ways that they may be able to buffer the challenges over coming months and quarters. This scenario where companies pull guidance would be so sentiment negative. I think we'd see actually a big leg down in that scenario. And I'm going to be watching very, very closely what companies talk about, not just for the next 3 months, but for the balance of the year. Whatever they talk about in terms of their first 3 months of performance, yes, that's going to be important, but it's really going to be the earnings revisions that come out of this reporting season that are going to be critical for risk.
Kate Moore, walk up Lexington Avenue when you can to be with us. Kate Moore was Citigroup this morning. Greatly appreciated from her calling there. Paul Sweeney asked the brilliant question that matters. Earnings into Q1 earnings. David Sowerby joins now. We're commercial free in this hour with Ancora of Detroit in the Midwest. David, did you sell and go to cash?
No, absolutely not. And you certainly wouldn't sell today, given if you look at the combination of large cap, mid cap, small cap stocks, the average stock is trading nearly 30% off its 52-week high. This is a time to think about putting your shopping list together.
Ooh. So if your shopping list, where does your shopping list start here?
It starts with the what's a company's cash flow generation, free cash flow valuation? If they're paying a dividend, are they continuing to grow the dividend at a double-digit pace? That's really starts the triage out of 1,000 stocks or more that you could potentially buy. And you want your shopping list ready now. Maybe you don't get into buying today, but here's one number.
Please, give us one.
Pardon me?
Give us one. Give us a stock here, David Sowerby.
Sure. Wyndham. Hotel, leisure, travel is still going to be taking place. Wyndham operates in more of the middle markets. Stock's down more than 20% from its 52-week high. And people are still going to travel. This isn't $500 a night Midtown hotels. These are $100 a night La Quintas. The consumer is still going to be relatively resilient, and travel in the lodging space still represents an attractive play.
On that front, David, just talking about the consumer here, we've seen some recent studies, whether it's University of Michigan or others, that are kind of reflecting the consumer is getting concerned. The consumer is increasingly concerned about higher inflation. How do you kind of account for that?
You do, absolutely. Yesterday's number was quite telling that the individual investor sentiment now is 60% bearish. The consumer is worried about the eventual high cost of tariffs. We know they are a tax. Tax reduces profitability and the potential of stocks to grow. But you still have to, at the end of the day, say that the U.S. consumer, more often than not, defies gravity, continues to manage through adversity. They did it during COVID. They did it during the bear market of 2022. Right. And since the pre-COVID stock market peak, stocks are still 70% higher with a 35% down leg, a 20% down leg, and now a 15% down leg. Stocks have compounded 9 to 10%. Bonds have been flat.
But this is really important observation by David Sowerby. And David, what it basically comes down to is many of our guests see a...
Hello, my name is Dr. Paul Cottrell, and we are live streaming on Rumble. We're live streaming on YouTube and my website, the-studio-reykjavik.com. On Rumble, you see the larger screen. On YouTube, you can see the market telemetry as the different ETFs and positions start to emerge throughout the intraday trading. So I'm going to go over that. Everything's real time. The New York session has already opened up. We're almost 15 minutes into it. This is April 4th, so we're doing the live stream. I also have a simulcast on X Spaces. If you have a question or if you want to give me your opinion about the news, please go to X Spaces and join the call-in. Just ask for the mic and you're live on the show. It's an interactive show. If you have any questions, type it in the chat box or, again, go to X Spaces. So thank you for joining. I greatly appreciate it. Please help support my work by making sure that you subscribe to all the channels. I have 4 channels on YouTube, Brighteon, Bitchute, and Rumble. All the links are in the description of this video and all my videos. In addition, please help support my work by sharing the links and asking your social media to follow me. I need a larger audience. Every time I do a publication on YouTube, I do get strikes or a bleeding of subscribers. So, it's a problem. And I'm trying to grow multiple channels to be able to, if one channel on YouTube gets a strike and I can't do a stream, I can go to another channel and do the stream. So please help support my work. I've been maneuvering the censorship for 5 years and it has not abated yet. So please help support my work. You're going to need me. Trust me. When things hit the fan, economically and with your health, you are going to need me. I am the most accurate. So please go to my store, the-studio-reykjavik.com. Help support my work. You can also help support my work by donating. You can donate on my website, the-studio-reykjavik.com. You can donate through Stripe, PayPal, or buy me a coffee on the homepage. In addition, you can be a paid member to Patreon. It's through the ones that have paid membership on Patreon and have donated that has allowed me to put thousands of videos for free for you, for free. I don't put stuff behind a paywall. I don't believe in that. So please help support my work. In addition, take a look at the great products that I offer. I tell you how to stack them, how to slow down the aging process, how to boost up your immune system, how to improve your different organ systems. It's something that I do. It is obvious that it works because, you know what? I am older than Alex Jones, but Alex Jones is not as fit as I am, nor as, he looks a lot older, all right? Alex Jones looks a lot older. Let's just put it that way. But he's younger than I am. So the point here is that my protocol works. I've been doing this for a very long time, all right? And I've learned a lot academically and also through my own experience on how to tweak a holistic approach to slow down the aging process. There's no magic bullet. It takes a lot of work. But the thing is, the reality is this: if you follow what I have to say, you are going to get healthy. So please go to my store, the-studio-reykjavik.com. Let's continue on with Bloomberg. Wait, before we go to Bloomberg, I want to just do a market update here. The S&P 500 is trading at 5,208. VIX is trading at 38. That's extremely elevated. All right. Euro USD is trading at 1.10. Oil is trading at $61.54 a barrel, very low compared to just a couple days ago. BITO is stabilized and is at 18.045. That's the ETF longing Bitcoin. And USD Japanese yen is stabilized at 148. So we have stress in the market with the strengthening of the Japanese yen, an elevated VIX of 38, and volatility is what is called heteroscedastic. All right. And that basically means that it's going to spike and then it's going to come back down. All right. So we're seeing that spike and then VIX should be coming back down. All right. That's what I suspect. Now you have the Japanese yen stabilizing at 145, even though in the last few days of trading, it has been gaining strength, the Japanese yen. So that's a sign of weakness in the international markets. A rapidly elevated VIX going from 17 to 22 to 25, then to 38. We're seeing that left side of the heteroscedastic function. All right. So it's going to start coming back down. VIX should start coming back down next week. All right. Now, the Euro USD has stabilized at 110. It was trading not that far long ago, maybe 2 weeks ago, at 104. Now it jumped to 110. So the dollar has weakened relative to the euro because of this tariff stuff. But Japanese yen is the indicator. It's stabilized. All right. So we should start seeing the downside of the heteroscedastic side of the VIX. So it should be coming down. Now, the resistance point, let's talk about the resistance points here. It's really important. The S&P 500 has a high probability of going down more. All right. Now, with that said, it's probably going to go down slowly. All right. Not fast. It's been going down fast lately, but it's probably going to be going down slowly. All right. So you have we're trading at 5,232 right now. We bottomed out at 5,208 in the intraday trading. So we broke the 5,500 mark, which was a major support level. Boom, we broke it. All right, it failed. The next support level is now 512. It is the 5,120. If you look at SPY, it would be 512 because SPY is the ETF for the S&P 500. But if we just look at the S&P 500 index, 5,120 is a support level, or 5,115. All right. If that breaks, the next support level is going to be 5,000. All right. That's not as psychologically, it's a strong support level. It's not structurally a support level. So it could fail. The next major support level after 5,000 is 4,810. So, but after it hits if it hits the 4,810, that's probably where it's going to bottom. All right. There's fib sequences that are overlapping in that area, and that's a strong indication of the support level. There is no structural resistance or retracement. I meant there's no structural retracement with the fib sequences at the 500, at the 5,000 mark. All right. So it's all psychological. That 5,000 for the S&P 500 might break. There's a high probability it'll break, but it will be supported at the 4,810. All right. So pay attention to what I'm saying. If you pay attention to what I'm saying, you're going to be able to buy in at these points. And then it's going to stabilize, and then it's going to start going up. And now if you take a look at what's going on in Congress, they're going to be pushing for further tax cuts, which is going to be an accelerant for the stock market. All right, this is the time to buy. Don't get shaken down. Don't worry. Things will get better. All right. And I just told you where those support levels are. 5,150 or 5,120, somewhere in there. All right. 5,000, psychological barrier, not structural, it's psychological. And then another resistance point is that 4,810. All right. No one, I don't care who you're listening to, can give you these kinds of details that I'm doing. I'll do another video showing the fib sequences and how they're bouncing off. But this is how the algorithmic traders are trading. You got to pay attention to me, buy into the market. Don't worry. Now, if you're struggling and you don't have any money, then it's a totally different story. But if you have cash on hand, or if you're dollar cost averaging throughout the weeks because of your paycheck, don't worry about it. But I'm warning you on this. Do not buy individual stocks. Individual stocks you could potentially get killed. You want to invest in macro indexes like S&P, like the S&P 500 through SPY. All right. You do not want to invest in individual. If you're investing in individual stocks, you're an idiot. You're just a total idiot. If you're doing that right now, you're an idiot, because you could lose a lot or you can gain a lot. But the risk management of that is stupid. All right. So, okay. With that said, let's go to Bloomberg.
But I've got to get to it first. 90 minutes from now, Jerome Powell has to be careful what not to say. What does Jerome Powell not want to say this morning?
He doesn't want to leave anybody on Wall Street thinking there's a Fed put. The Fed is going to come to rescue them. As long as there are buyers, as long as you can transact in the stock market, the Fed's going to stay out of it. So right now, it isn't going to matter to him that they're down. The jobs report helps them out in a way, because they have been saying the labor market is solid. Inflation is up, but not much, and it's mostly sticky. So they've been leaning on inflation, and they can continue to do that, which means they can leave rates where they are without a lot of criticism.
Does inflation lag like jobs? We're looking jobs out to May or June, April 10, 6 days from now. Do we get to see a stagflation inflation report?
Oh, not April 10th. We'll see what happened in March, which really isn't, a little bit of energy prices went up, but it'll be the May report when we start seeing things that people bought that were tariffed go up in prices, and we will see prices change much more quickly than the labor market, because companies are sitting there going, is this going to continue? What do I do? And it's going to take them a while to decide that they need to lay off people, if indeed they do.
And it sounds like stagflation is a real risk, even in the near term. Just on the margin, kind of slowing growth, stickier, higher inflation. That's not fun.
Well, right now the Atlanta Fed GDP now is running at a negative, I think, 0.8 when you take out gold, and so we're looking at a contraction at the moment. We'll see the March data due to that number, but then in the second quarter, there are a lot of J.P. Morgan yesterday, a lot of people forecasting that we may see contraction in the second quarter as well.
We're remodeling. Somebody's on. I can't keep track of this. It's Friday. Give me a break. 4 rate cuts?
Well, right now,
do the dots matter? Does the guesstimating?
No, none of that matters. And you remember back when they had the last meeting, I said that the SCP and the dot plot.
I mean, you and I are the two people here that don't like this stuff, but here we are.
When we talked to Ralph Bostic a week or so ago, he said the same thing, that can't put any credence in it because we don't know what's going to happen. Markets are now seeing 4 rate cuts. They're going, the economy is going to fail, so the Fed needs to cut rates. But I don't think you can put a lot into the futures either for the same reason. We don't know what's going to happen.
Atlanta GDP, ex-gold or with gold, whatever, negative. Federal Reserve Bank of New York, far more optimistic in the forward view. Where's Mike McKee between those two continuums?
Somewhere close to zero, I would say. I think the evidence is fairly strong that we have slowed down a lot. And a lot of that is because people didn't know what to do. Now, did they cut back? We don't know yet. That's going to be the real question. One of the more interesting numbers that will come out in the next week or so is retail sales for March, because we'll want to see if people actually did cut back on spending to match what we've seen in the soft data of the confidence numbers.
Could you explain, Mike, as we go out in this hour, John Tucker has an incredible weekend life. I mean, it's just amazing.
Yeah, down to the Wawa every few minutes.
For the dream. The closest I'm going to get to a sphere this weekend is a round ice cube at some overpriced bar on the Upper East Side. You and I are grinding it out, reading economic manuals. Sweeney's going to Las Vegas to see the Eagles at the Sphere.
All right. Please go to my store, the-studio-reykjavik.com, and get the great supplements that I offer and the products. A great product to get is the structural nano silver soaps. Very high quality. So you can get it in charcoal tea tree and in lemongrass. Get a couple bars for your household. And you can also get it in lavender and in peppermint. So get a few bars for your house. Help support my work and help support your health. These are soaps that I use. And use discount 5 and you get $5 off any order. Discount, all caps, the number 5 and $5 off. I also sell anti-aging boxes and longevity boxes on my store at a discount. And you can apply the discount 5 on top of that. So I've done a lot to be able to get these products in your hands. So please go to my store, the-studio-reykjavik.com. Now, another great product that I offer that I want to talk about is the structural nanosilver. And you can get it in the Max 35 or Max 14. It's the first pillar of my core protocol. There's 4 pillars to the core protocol as I tweet this. The first pillar is the Max 35 or Max 14 to boost up your immune system. The first pillar is C60 to soak up free radicals. The third pillar is to bring down inflammation to help with your immune system by taking the turmeric, ashwagandha, and lignans. And the fourth pillar is to boost up your metabolism and your energy levels with Boomer Boost. So let's talk about that first pillar. Max 14 or Max 35, it's 35 ppms or 14 ppms. Take a teaspoon a day, swish it in your mouth, gargle 20 seconds or so, and then swallow. Do that every day. If you're not feeling well, take a tablespoon or 2 and do the same thing. And then once you feel better, go back to your maintenance dose. You should be taking this every day. Really important to boost up your immune system. So please go to my store, the-studio-reykjavik.com, get the Max 14 or the Max 35, and have that as a daily part of your health stack.
Stocks are down about 2.5% across the board after China announced today it's slapping 34% retaliatory tariffs on all U.S. products. Economist Gus Fauché.
There was an earlier increase in tariffs on goods from China earlier in the administration, so it's not terribly surprising that China would make it more expensive for U.S. exporters to sell into China.
On Truth Social, President Trump says Beijing panics, and he insists his policies will, quote, never change. Despite mass government firings, American employers added a better-than-expected 228,000 jobs last month. CBS News business analyst Jill Schlesinger.
Overall, this report feels kind of strange coming out in light of the tariff announcements, because this report indicates that the labor market is alive and well and continues to grow.
The new Health and Human Services Secretary, Robert F. Kennedy Jr., is suggesting around 10,000 job cuts DOGE made at his department were wrong.
Personnel that should not have been cut were cut or reinstated, and that was always the plan. And one of the things that President Trump has said is that if we make mistakes, we're going to admit it, and we're going to remedy it.
7 deaths are blamed on severe storms that have left tornado damage from Arkansas to Illinois. Heavy rain and flooding are the new fear. CBS meteorologist Kate Milo.
Northeast Texas right up into parts of southern Illinois, areas that have been hit over and over again this week. All that rain, and here comes yet another round.
Right. I want to go to Al Jazeera, their take on the stock.
Yeah, well, the market slide continues on news of those retaliatory tariffs of 34% by China, and amid growing concerns that the strengthening trade war will lead the United States and the globe into a recession. The Dow is currently down more than 1,000 points. The S&P, again, seeing a down day. It is now in what's known as correction territory. It has fallen more than 10% since the highs of the S&P 500. That is a stock index that measures the biggest and most powerful 500 corporations on the publicly traded stock exchange. Smaller companies not doing so well either, though. They're also seeing their values decline. The Russell 2000 index that measures smaller companies has fallen more than 20% from its highs, the first indication that a bear market, so-called bear market, might be possible for the United States going forward. And there's even a stronger than expected jobs report that came out today, but so far that has not done much to lift the spirits of investors. We're seeing a lot of red on the market boards today.
Yeah, as you say, some positive news, Kristen. New job figures are out, and they're better than expected.
Yeah, they are. The Department of Labor put out a new report. 228,000 jobs were added last month. That's considerably more than were expected. The healthcare industry benefited from 54,000 new jobs. Restaurant hiring was up as well. This report shows only 4,000 layoffs from the federal government, however, suggesting that the job cuts that were imposed by Elon Musk's Doge have not perhaps been fully accounted for, but certainly President Donald Trump is hailing this as a sign that all is fine with the economy and the markets here. He has said that this trade war is an effort to bring manufacturing back to the United States and to reduce trade deficits. Economists have expressed concern that that will not happen, but he is holding this up as a sign of things going in the right direction. But also worth pointing out that JP Morgan, the financial institution.
Today, I'm treating people to a healthy meal on the go, though they've never guessed where it came from.
That's pretty good right there. There's like vibrant flavors.
The worst part is really good. It's very flavorful.
Very delicious.
Very fresh. I'm surprised.
Washington, D.C. Mike, so have we had any response yet from the US on these China retaliatory tariffs? Because Trump has repeatedly said these tariffs level the playing field and that he will retaliate if countries respond. But in reality, though, Mike, I mean, how far can Trump go against China?
Well, President Trump is amidst all of this in Mar-a-Lago. He's just left his estate to go and watch a golf tournament at one of his golf courses. In between, though, he has issued a couple of statements on social media. The most recent saying, China played it wrong, and I quote, they panicked, the one thing they cannot afford to do. Not quite clear exactly what he means by that, or whether he is going to carry out his threat of ratcheting up the sanctions against China. He did threaten that any country that retaliates would get retaliation in return. Earlier on, he was crowing about the job figures just released, saying that this is evidence of the success of his policies. Great job numbers, he put on social media, far better than expected. It's already working, hang tough. And then he concludes, we can't lose. Well, certainly for average Americans, that is something that's hard to comprehend at the moment as they see that stock market plummeting, as they see or begin to feel the impact of the tariffs that have been introduced. And this is only
for the ones that are watching. We're live streaming on Rumble, simulcasting on X Spaces, live streaming on YouTube with the market telemetry real time, and also on my website, the-studio-reykjavik.com. You can see both versions, the full screen and the market telemetry feed. So the S&P 500 is right now trading real time here at 5,229. The low of the intraday session has been 5,208. Now, like I said, 5,500 was a support level that broke. It was tested over a few days and it broke. This tariff news was the major impetus of that failure. Now, the next support level is structurally is 5,100 and about 50 or 20. So 5,120 or 5,150. So let's just say 5,150 as a structural point for support. If that fails, which we're not that far away from, if that fails, the next support level psychologically is 5,000. It's not a support level based on fib sequences. So 5,000 will be tested psychologically, but probably will break. The next real support level for the S&P 500 is 4,810. All right? So if you listen, you will be able to buy into the market over the next few months, and then the market will start to rally. I believe that the bottoming out is going to be somewhere between 5,000 and 4,810 for the S&P 500. So don't freak out. Use this as an opportunity to accumulate shares in the broader market. Do not buy individual stocks. Do not, because they're idiosyncratic and you can get hurt. You're better off playing it safe and buying like SPY, which is an ETF of a broader index. All right, so don't get fancy, just weather the storm, and then once the tax cuts are pushed through Congress near the end of the year, we're going to actually see an accelerant of the stock market, and we might be actually above 6,100 or maybe 6,300 by the end of the year. All right, so just keep that in mind. Don't get shaken out of this. Play Warren Buffett kind of strategy, but don't buy individual stocks. I'm warning you. You might make some money on that, but you could get hurt really easily if things go on the negative. You're better off buying a broader index in this kind of situation.
100 down 610 points. That's a decline of 3.3%. The Russell 2000 down another 4.6%, firmly in a bear market. We check the markets for you all day long, right here on Bloomberg Radio.
This is the point I'm making.
That's your Bloomberg
as it's officially in a bear market, because it's all right. You're going to see this broader index trading going lower and testing that 5,000 mark for the S&P 500. That's a psychological barrier. There's going to be lots of people trying to buy in, and some people are going to try to short. But structurally, it's really not a good resistance point. So it's probably going to fail and hit the 4,810 mark. And that is probably where it'll bottom out. There's some strong support level there. All right, so just be smart with this. All right, I'm giving you actual points where to put in your trades. I mean, pretty fine detail there. Don't sweat it. Don't sweat it. But the point here is that you're going to have, you have large cap, mid cap, and you have large cap, mid cap, and small cap stocks. All right. So when the market is selling off, small caps, most institutional investors want to move out of small caps and move into, if they are equity traders, then move into large caps and reduce their exposure to mid caps. All right, this is part of the reason why I'm saying S&P 500 is the way to play this. Now, once that accelerant starts to happen near the end of the year and the market starts to heal, and the Russell 2000 gets out of it starts getting out of its bear market, then what you're going to see is the institutional investors are going to start pairing off of their large cap and move in a little bit more into the mid cap and more exposure to small cap. All right, so just trust me on this. All right.
Percent of the U.S. apparel market and 1% of the footwear market are made domestically. Vietnam actually exported $44 billion in textiles last year, with the U.S. as actually its largest market.
Wow, there's just no getting around this.
No, there's not.
No, those are real solid numbers. And then let's wrap it up here with some of the automakers. They had already been getting hit to some extent. Then the tariffs went into effect yesterday. What about Stellantis?
Okay, so they closed down more than 9% yesterday. This morning off as much as 5%, but they're also dealing with a few other things, kind of this trickle-down effect. So the news came out that about 6,000 workers in Canada's auto sector received temporary layoff notices. That's according to their largest union. The majority of them, they work at Stellantis plant in Ontario. That makes Chrysler Dodge vehicles. They're going to pause production for 2 weeks starting on Monday. Then on top of that, Stellantis received a downgrade by Fitch due to tariffs. And now what they're doing is they're trying to spark sales. So we heard a similar story from Ford, but the Wall Street Journal reporting that Stellantis, now they want to extend that employee discount program to other car buyers and on most of their new models. So we're talking about being effective today, and it's about the Jeep Wrangler SUV, the Ram light duty pickup trucks as well. So they might be getting those. They're trying to just get more people in, to buy the thing. So that's why they're giving out those employee discount programs to just everyday shoppers.
Right. It's so weird. It's like some weird deflation scenario before prices tick back up, or I guess the idea is companies are going to eat it.
Correct.
They're going to eat those prices. All right. Thanks so much, Lisa. Really appreciate it. For more conversations just like this one, listen to our new Stocks Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Let's stay with autos for just a moment. Craig Trudell is Bloomberg Global Autos editor and joins us now. Craig, at the same time, we also got the news that Tesla's estimates were cut further by an analyst on, quote, unprecedented brand damage. What's the conversation, the zeitgeist around that right now?
I think over here in Europe, it's particularly bleak when you look at some of the numbers. Just yesterday, we saw the full figures for Tesla in Germany in the first quarter. For them to have some months in the beginning of this year, they were down more than 70%, and that's in a country where they build vehicles, where you would think that they would perhaps have built up some goodwill on the basis of employing quite a lot of people outside of Berlin at their factory. And yet for Musk to sort of intervene in the federal election in February in a way that was highly unpopular, and for some of the protests that we've seen across the U.S. to also, carry over here, where, we've seen dealerships get, paint tossed on them, cars, set on fire. It's really intense, the backlash that we've seen against Musk.
So, Craig, I'm trying to get a sense of how much of their sales weakness is due to some of that backlash against Elon Musk versus maybe some of the Model Y introduction and the change over there of lines. Do we have any sense as to what's, kind of the percentage between those two?
It's really difficult. I think we are going to be spending the next, probably months, maybe quarters, unpacking what exactly the dynamics are here, because to your point.
Now remember what I said, that the next support level is 1,150. The S&P 500 now is trading at 1,194. So we may be seeing the testing of that support level this trading session.
Case had to do that at all of its factories around the world because they make the Model Y everywhere. And, so that was a substantial disruption.
I'm sorry, I meant to say 5,150 is a support level. And right now, the S&P 500 is testing at 5,189.
so emphatically, you look at those figures, and even as you've seen some weakness for Tesla in other parts of Europe, we haven't seen it be as drastic as we've seen it in Germany. So I think, to your question, I think there's absolutely a bit of both, and it's going to take us probably some months, maybe some quarters to sort out, just how much sort of lasting damage has been done here and whether, they can lure buyers back with this fresh product.
I have to say, you look at, if you do Tesla equity in the DES, you get all the good information on Tesla right away. You look at a PE ratio, it's still 112 times. You look at the PE ratio of NVIDIA, and it's 32 times. So meaning that it is still incredibly expensive when you look at it from that metric. Hey, Craig, really good perspective. Thank you so very much. Craig Trudell, Bloomberg Global Autos editor, joining us on the overall impact of tariffs, but really brand reputational damage when it comes to
now, if
Tesla.
we have escalating retaliatory tariffs between China and the United States, and maybe United States and Europe, especially China though, we may see a VIX index that actually hits 50. And then the heteroscedastic left side of the curve will peak and then it'll start to go down. Now, what is interesting is that when China decided to make a statement about retaliatory tariffs, last night the VIX index in after-hours trading was trading at 45. So, but it died down later in the pre-market session, and then now it's at 38 for VIX. So next week, we may start hearing news of retaliatory tariffs in the United States escalating, which most likely will happen from the Trump administration. And so the VIX index may actually spike at about 50, in the 50s, before it starts to go down. And that may be that accelerant for that market downward movement to go past the 5,000 on the S&P 500 and then, be trading in that 5,000 to 4,800 range, all right? And it'll be range bound for a little while before it starts to go back up. So keep that in mind. It's not just the tariffs, it's the escalatory aspect of it between the United States and China that I'm concerned about here. Okay, while everyone's on break here, let me just plug some products. Please help support my work. I'm giving you ways to kind of navigate through a serious situation with your savings, all right? And how to benefit from it. So help support my work by sharing the links, purchasing the products, and if you spend $150 or more on my store, then you get a free gift. I'm not going to tell you what that free gift is. And, until supplies last, you'll be able to take advantage of that. So please spend $150 or more on my store to help support my work and to help support your health and wellness. Now we're going into the allergy season, all right? And also there is a straddling of the cold season that's extended this year, all right? So just keep that in mind. And because of this wild fluctuation of temperature, especially on the East Coast, people are starting to get sick again. You have warm days and all of a sudden a rapid cold day. You could be in the 70s and then rapidly go back down into the 40s. So that fluctuation is going to get people sick. So you're going to have irritation in your throat. You want to take the lozenges and the drops right away. Right away. Very important. So I have 3 different flavors of drops. You can get it in cherry, in blueberry, and in honey and lemon. In each bag, you get 100 drops. The moment you have that irritation, take them right away. All right? Very powerful stuff. Now, the lozenges are a little bit bigger. There's 21 in a bag. You can get it in Manuka honey, and you can get it in elderberry zinc. And have a few bags for your household. Also at work, you never know when you need them. The moment you have that irritation, take them right away. Don't let it fester. Trust me on this. So please go to my store, the-studio-reykjavik.com. If you purchase $150 worth of product, you get a free gift. Use discount 5, get $5 off. If you want to save money, buy an anti-aging box or a longevity box. That's going to help with your health, and you're going to save money. I've designed those boxes in such a way for you at different price points, and they're cheaper than purchasing the individual items. So, and you can put discount 5 on top of it. So get an anti-aging box, get a longevity box, and target whatever system you want to target. And get healthy. This stuff works. These are supplements that I take. I tell you how to stack them to target certain systems. In addition, it's about a holistic approach. It's not just about the supplements. It's about proper diet and exercise, sleep, training your mind, learning new things, talking to people, staying away from, too much negativity. Spirituality or mindfulness is really important. Bring down your stress levels through mindfulness or meditation, and you'll go into parasympathetic, and then that will slow down your heart rate, bring down your cortisol levels, and help your body to detox. So if you take a holistic approach with stacking the supplements properly, you're actually going to get healthy. Your immune system is going to boost up. Your cardiovascular system is going to get better. You can reduce plaque, not just reduce the chances of building up new plaque. You can reduce plaque in your arteries if you listen to me. So please go to my store, the-studio-reykjavik.com.
For all the wrong reasons. The Bloomberg Mag 7 Index down close to 27% from its peak. Worst performing stock in the S&P 500 right now, DuPont and Moore's down close to 15%. China's state administration says it's probing DuPont China over alleged breach of antitrust law. I haven't given any love to farm commodities. Soybean futures, they sank to their lowest since early January. Top global importer of soybeans, of course, is China. Parenthetically, Republican Chuck Grassley of farm state Iowa is helping introduce a bill to rein in the president's tariff powers. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, that's your Bloomberg Business Flash.
All right, thank you so much, JT. Alex Steele here alongside Paul Sweeney. We made it to Friday, although there's still a few hours of trading left. Anything can happen as we are around the lows of the session for the S&P below 5,200. I have seen so many calls in the last 24 hours re-rating either GDP, inflation, recession scenarios, S&P target, earnings target. Let's talk to Mira Pandit, Executive Director, Global Market Strategist at JP Morgan Asset Management. Mira, have you changed anything in the last 48 hours in your calls?
What we didn't expect coming out of the April 2nd announcement was just how severe the reciprocal tariffs would be. Reciprocal implying that we probably charge what they charge us, which in many cases is roughly single digits. So to see an average effective tariff rate going forward of nearly 25%, the highest in over 100 years, does have us rethinking how are we looking at the economy going forward. And right now our economic models are pointing to roughly no growth over the course of 2025, but we have to think about where policy goes from here. Do these policies stick? Do things actually get worse when we think about sectoral tariffs on areas like copper, lumber, pharma products? Could we see retaliation from other countries, as we indeed already are from China, and therefore that further ups tariff rates? So there are still upside and downside risks. We clearly haven't seen the end of this tariff story. So we're still grappling with how do we think about growth and potentially higher inflation going forward.
Well, the markets are certainly repricing for an uncertain environment. Have they repriced enough? Is it a time to go out there and get a shopping list together, or still too early to call?
It's a bit early to call. Even a couple of weeks ago when we saw the 10% correction in the markets, I had 4 things I was looking at to see more market stabilization. One was a re-rating in valuations. We've seen some of that, but probably not all of that, especially when we think about the re-rating we need to see in earnings. Some downward revisions we would certainly expect to hear about over the next couple of weeks as earnings season kicks off. And so we probably will see more choppiness around some of those announcements as businesses today are thinking about how to cut back on CapEx and hiring to prepare for a potentially higher tariff environment if things do go through as planned. I would also say we're looking at the economic data. Now, the challenge is similar to the jobs report this morning. any strong economic data we get over the next month, which reflects a pre-tariff environment, is probably going to be dismissed by the market. So it will be a period of time before we actually start to see things in the data. And the fourth thing was really around a consolidation of tariff announcements. We certainly had a big bang consolidation the other night, but again, we have yet to see the full extent of retaliation, and if in fact that results in higher tariffs out of the US. And again, on sector, different markets and materials, and in the absence of that, we're still in a wait and see mode.
Yeah, and we just got that retaliation from China overnight, for example. I mean, the S&P is down 8.4% in 2 days. What provides the floor at this point?
We are going to hear from Chair Powell shortly. Hopefully we could get some more dovish commentary. But the challenge with relying on a Fed put is the fact that the Fed has to weigh slower growth, which would cause for them to cut rates, against potentially higher inflation from tariffs, potentially inflation expectations moving higher prior to any movement in the actual inflation numbers. So while we do expect cuts this year from the Fed, there is a limit to really how much they can do in the face of inflation that was already stubborn and could get somewhat more stubborn going forward.
How do you think about allocation stocks, bonds these days? What's changed, if anything, for you over the last couple of days?
You're like, what's safe at this point?
Exactly.
The solace we feel in markets here is actually, as of yesterday's market close, you did still have 5 out of the 11 sectors in the S&P 500 positive year to date. So defensives have been an area where people have sought shelter. Areas like healthcare, staples, utilities. Certainly areas like utilities are probably going to be fairly insulated from tariffs, but staples not so fast because of global supply chains, because of thinner margins. And what we actually have seen in slower economies is people do pull back on some of the goods that you would think they wouldn't. People actually do pull back on food and essential household items. So we do have to be a little bit more careful around staples. But value versus growth, we've seen value outperform growth year to date by double-digit percentage points. International versus U.S., we have not only seen international outperform the U.S. by about 13%, but moreover, in dollar terms, that has really helped as you've seen the dollar weaken. So some of these very unloved areas of the market have actually really protected this year. Duration has worked, although I will caution that per my comments about the Fed and inflation, there are still some two-side risks here to yields, but thus far, certainly having core bonds has protected.
How about gold?
Gold is interestingly faltering a little bit. It's already run a really long way. I think some degree of gold in portfolios has been a good hedge. And when I think about the supply and demand dynamics, typically we're not gold bugs because they're not providing a whole lot of income or an earnings stream, but you do see a lot of central bank buying. And in an environment where people are feeling a little bit less cautious about the U.S. as a whole, as a safe haven, whether it's the dollar or treasuries in the longer term, then that does provide an alternative to structurally what has been, a pretty reliable bet when we think about the U.S. So gold actually does provide a little bit of policy diversification potentially.
All right, Mira, thank you so much. We appreciate that. Mira Pendit, Executive Director, Global Market Strategist for JP Morgan Asset Management. Getting some thoughts on these markets. Again, the sell-off continues pretty hard out there. S&P 500's off just about 4%. NASDAQ off 4.25%. One of the things we want to do in this Bloomberg Intelligence program is talk to the analysts at Bloomberg Intelligence and talk to us about their sectors. Let's do that right now with Herman Cheney. Follows the regional banks for Bloomberg Intelligence.
I was going to say, it's never good when you see him in studio because it always, something is going to be blown up in regionals when you see Herman. Otherwise, when we ignore Herman, it's like, everything's fine.
Everything is good. So how do you view from the bank's perspective a world where it seems like we're in a trade war here?
Right. Well, banks are ultimately a reflection of their economies that they operate in. And when the economic expectations are in flux, then typically there's some pain for the banks, and that's where we are today. While all the bad news has been reflected in the stocks, the fundamental performance is still sort of shaking out. I would say that we're coming up on first quarter results in the next couple weeks, and so we'll get a better picture of guidance changes, of performance going forward. But right now, we're still waiting to see where the shoe's going to drop in terms of loan growth, credit quality, etc.
And that's my question, because I understand the big banks getting hit in part because the capital markets are just going to freeze up. Like, forget IPOs, M&As, we're going to put that on the side. Okay, that kind of makes sense. But the regional banks may not have the same kind of exposure, right? In the real economy, the hard data is still fine.
Right.
So were you surprised at the extent to which your sector got hit?
Every time there's worries about the economy, these bank stocks sort of get hit first, and then investors ask questions later. So that's where we are today. Valuations have come down, and there's just a lot of worries about future credit quality, the guidance coming down, loan growth, fees coming down, top lines coming down. So there's going to be a lot of revisions going forward if these tariffs do really materialize.
So I guess one of the things we're hearing, and we've heard it, all years we're building up to this tariff date. Now it's just kind of reflected in the financial markets. It's I just don't feel like doing anything. If I'm a CEO, I don't want to buy a company. Right. If I'm a consumer, I don't want to make that big expenditure from the washing machine or the car or whatever. And that means I probably don't need growth capital.
Right.
So if I'm a bank, I'm probably not writing too many loans these days.
Exactly. And that's actually been happening over the past few years, given the uncertainty with interest rates first and then regulation under the Biden administration. There was just a lot of demand that was just on the sidelines, and you've seen that reflected in the loan growth for the industry. It really hasn't moved a lot over the past couple of years. And the expectations heading into this year was that Donald Trump and the administration was really going to unleash more activity from the deregulation. But now the trade spat and just the chaos that's happening over the past couple of days, everything's really continues to be on the sidelines.
So I'm thinking any kind of like regional M&A that we've all been expecting for the last couple of years, that's not going to happen.
Right, exactly. But there has been some news that the Discover Capital One deal could be pushed through with the DOJ giving the green light to that. So now we're waiting on the Fed and other bank regulators to weigh in. So that could be a good litmus test going forward, but still there's a lot of uncertainty involved.
When you see an economy slow down like it appears the U.S. economy is doing, where's the first place you see it from a regional bank? Is it credit quality? Is it slowing loan growth? Where do you see it first?
Yeah, well, it's going to be slowing loan growth, and it's going to be sort of the delinquencies, right? So these 30-day past due metrics, 90-day past due metrics, so those will start trickling in. And then there's other early warning signs for credit quality that the banks talk about. There's some in bank parlance, it's called criticized loans. So loans that may not be past due yet, but the bank knows that there's some problems with the borrower.
The S&P 500 is now trading at 5,175. Remember what I said. The next support level is 5,150 or 5,120. So we might be breaking that support level here. But I suspect that the close of the day will be above that support level.
And PNC are the ones in my regional bank coverage that are holding up fairly well. And then there are other smaller regionals that are faring worse.
You guys just bring some breaking news to you. The NASDAQ 100 just entered a bear market, down 20% from its peak. I know it's just numbers, but
no, I mean, a bear market, we haven't talked about a bear market in quite some time.
But they're numbers, but they're also headlines.
Yeah.
That's
the last time you talked about a bear market was in 2022.
The 101K.
I'm not looking for 20 more years. Just gonna sit there, and that's the story. Okay, and then before I let you go, real quick, Herman, what is like sort of the type of bank that's going to struggle the most?
Yeah, it's going to be the banks that have still been dinged during the prior regional bank crisis. Probably they'll be in the headlines still. So yeah, banks that have sort of weathered it, but there's always that recent history that all investors went back to. So banks like Western Alliance and others that were sort of teetering during that time probably get pushed a bit more by investors, but we think that their balance sheet and the deposits are really strong going forward.
All right, Herman, thanks a lot. Really appreciate it. Herman Chan joining us in studio. Always good to get your perspective. Bloomberg Intelligence Senior Analyst for U.S. regional banks. All right, here we go. Right, as John Tucker just said, NASDAQ 100 set to enter a bear market, falling 20% from its recent peak. You're now looking at the declines about 4% for the S&P and the NASDAQ 100 just on this day alone. John Tucker here with the Bloomberg Business Flash. Give us more updates here.
Yeah, right now, 20.1% below its peak. The peak, of course, that was reached on the
now think about this. Okay, you have the Russell 2000 that's heavily weighted with small caps. They go into a bear market first. NASDAQ goes into a bear market next. Then the S&P 500 will most likely go into a bear market. All right. Now, remember what I said. There's a major support level based on fib sequences at the 4,810 mark. Well, that's roughly 20% down from the all-time high, roughly, for the S&P 500. All right. So there's going to be a break in the market. Most likely will go below the 5,000 for S&P 500. But this is the time to buy shares, accumulate slowly as this is happening. You will benefit at the end of the year. Trust me on this.
This jobs report for last month, pretty solid, but moving forward, tariffs will impact the jobs market, according to Veronica Clark. She's at Citigroup.
Businesses are not going to be hiring right now. Of course, you're gonna hold back on adding any extra costs if labor costs would add to tariff costs. So I think the first response is to pull back on hiring. But eventually, if your tariff related input costs are going up, you might start to see layoffs.
All right, the laggards in the SPX, NVIDIA down 7%, Apple down another 4%, Tesla down another 9.5%. Investors looking for a Fed put, they're going to hear from Fed Chair Jerome Powell, 11:25 Wall Street time. I think they might be disappointed if they're looking for that. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right, thanks so much, John Tucker. I mean, right, that's really the question. Like, what provides the floor here, and does it really come from the Fed, or does it need to come from the White House? So S&P is down by about 4 percentage points. Just saying, for the New York Stock Exchange, as we should all know, there are 3 circuit breakers. One's at 7%, one's at 13%, one's at 15%. When you get to 7 and you get to 13, you're going to be shutting down for a minimum of 15 minutes. We are clearly nowhere near that yet, but I think it's worth putting out there with the velocity that we're seeing, particularly that it's a Friday, and a lot can happen in the next couple of hours and the next couple of days. I guess my question is for Jay Powell, since he can't say anything,
right?
Like, what is going to be the clue? Like, if they say, sure, we'll support the economy, sure, we'll do an emergency cut if we need to, like, is that going to be enough?
Yeah. Volumes, by the way?
It's crazy.
100%?
Insane.
S&P 500?
They're like well above average for above 10-day average.
So, potential good sign from that piece of data is when you get big selling with big volume, and today's huge volume, maybe it's a little capitulation.
Right, exactly. Only 41%, 41 stocks in the S&P are
And this is why I'm saying that
so
this is why the fib sequences are so important. All right. That fib sequence that I was saying is that there's a support level at the 1,150 mark. I'm sorry, I keep on saying about that. 5,150 mark. All right. For the S&P 500. 5,150, maybe 5,120. All right. So if there's a major sell-off with volume, then you have people that can't take the pain getting out. And it's like creating a bottom. Now there's going to be a further downturn, and there's going to be a psychological test at the 5,000 mark on the S&P 500. And there's going to be a little bit of a battle, all right? But structurally, there's not support for it. So most likely it will break, all right? But there's very strong support at the 4,810 mark, all right? And that's where the real bottom is going to take place. But you're seeing and why these points that I'm talking about are important, because these algorithmic traders are looking at these resistance levels and the retracement from the fib sequence, and there are institutionals, there are algorithmic traders that are now entering in. And now, of course, you have buyers and sellers, you got shorts and longs, right? And when you do that, there's this battle that's taking place at these levels, either a resistance level or at a support level, but that's how this works. So we're seeing it play out right now. We're at 5,166. We're only like 15, well now it just jumped up to 5,170. So there's going to be a battle at that 5,150 mark. It's happening right now. You're seeing it in real time on the telemetry chart.
It's completely in flux and has been radically changed. Most investors think for the worse. That's why prices are down. The question, of course, is whether they're down too much, just right, or not enough. And almost nobody can say.
It's going
How
down.
do you start to even measure something like a potential paradigm shift, like the tariffs that were announced earlier this week?
Well, first of all, of course, measure is the wrong word because that suggests some quantification, which is impossible. There's nothing to measure. But how do you gauge? How do you think about the changes? And, this is the biggest change in the environment that I've seen probably in my career. We've gone from free trade or world trade and globalization to this system which implies significant restrictions on trade in every direction and a step toward isolation for the United States. I believe that the last 80 years since World War II have been the best economic period in the history of mankind. And one of the major reasons was the growth of trade.
No, one of the major reasons is because you just came out of a world war and most of the world was destroyed and had to be rebuilt. That's why. Come on. Come on. Don't be stupid.
Does some things better and worse. And worldwide welfare is maximized when every country does the things it does best and cheapest and then sells them to the countries that need them, which do other things and sell them to other people. That's how trade works. And, I don't know if it's politically correct, but the good news is that the Italians make the pasta and the Swiss make the watches. But
here's the problem. You have unfair trade practices through subsidies and tariffs around the world. So you really don't have true free trade. That's the problem. That's the problem. Right there. Like Trump said, you stop the tariffs on us, we stop the tariffs on you. You stop the subsidies supporting your industries, we stop the subsidies for supporting our industries. That's the way it's supposed to work. But we never had really free trade. Ever in mankind's history. Ever. So, but he doesn't want to talk about that. Because what it is it's artificial labor arbitrage.
That benefit. And, the tariffs are designed to encourage production at home. But who could imagine that most things produced in the United States will be as cheap as they are coming from abroad? In other words, things will cost more.
If that's the case, does that mean that you see the inflationary regime as being something that is more persistent, or reversal of what we saw, the disinflation of the globalization?
Well, I think so. There were financial benefits from globalization, including keeping a lid on inflation. And, if we hadn't bought our TV sets and appliances from abroad,
you can't just look at the inflation. You can't just look at the inflation. Importing deflation. That's what we did. We imported cheaper goods. We imported deflation. But what happened was that our Congress spent more money. So we ended up going more in debt. So our GDP, our debt to GDP ratio is skyrocketed. We have a problem. Not only that, when your interest payments on your debt supersedes your actual defense spending, that's a major sign of a collapse of an empire. Let's see if this asshole has something to say about that.
As a result.
when you're measuring how to decide the risk and reward of given asset classes in this type of environment, that could go in a multitude of different ways. How do you understand where there's value, what a return is that would justify a risk at a time when, potentially you could get 7, 8%, 9% with credit, with stocks that have delivered more than 10% for the past number of decades, but going forward?
I want to respond first to your last sentence. Stocks have delivered an average of 10% a year for the last 100 years, but not when the PE ratio was 19. And the PE ratio today is probably 19. The average return has been 16. So we can say that when the PE ratio averages 16, the return average is 10.
Yeah, right.
But when the PE ratio is 19, my guess is, if you look at history, if you bought the S&P when the PE ratio was 19, historically you probably made, let's say, 1 to 6% a year, or 2 to 7% a year, something like that. Certainly not 10.
So to just dissect what he's saying, the market, the stock market is priced too high relative to the actual earnings. It needs to sell off. That's the whole point here. And as it's getting to a more stable level, it's the time to be accumulating shares, and then it stabilizes, and then the next big launch will take place, and you're going to make a good return. So the time is to buy in. Don't sell. Do not sell the market. Just buy into the market.
What you see is what you get. You can read on the piece of paper what the promised return is, and then the only thing you have to wonder about is, will I get it? That is to say, will the issuer default, or will they keep their promises?
All right, the S&P 500 intraday low now is 5,136. So it broke intraday trade, the 5,150 barrier that I was talking about. So right now it's trading at 5,142. Okay, so it bounced off. So remember what I said earlier in the session. You have that barrier at approximately 5,120 or 5,150. Right? So it's battling that. So it's very possible that we actually sell below that. We close below that barrier. So that would mean the next support level psychologically is the 5,000 mark.
You should wait until things adjust further. And it's impossible to make that judgment qualitatively. You used the word measure before. I pushed back a little bit. There's no place you can look. There's no analysis you can do to determine whether today's asset prices are right for the environment ahead. Now, there never is. It's always conjecture. It's always guesswork. That's, in theory, why the greatest investors are great, because they make those judgments better than most people. It's excessively hard today, because today we have no idea what the future is going to be. Normally, we think we know what's going to happen in the future. We normally assume the future will look mostly like the past. We extrapolate. And usually it works, because the world doesn't change that much. But
I'll tell you what's going to happen. It's going to bottom out at 4,810, and then it's going to start going back up. It's time to buy. But there's high probability of that happening. But if it goes way below and we have a 30% decline or 40% decline from the all-time high on the S&P 500, we will be going to World War III. That's what's going to happen, because now you're talking about depressionary situation. But the probability of that is low. It's about maybe 20%. The probability of it bottoming out at 4,810 and coming back up when tax cuts start to happen, and maybe the Federal Reserve lowers rates, which would be another accelerant for the stock market and the economy, that's 80%. So you have an 80% chance of making a lot of money at the end of the year and into the first quarter of next year, or you have 20% chance of another depression.
Going to happen in the future, so I'm going to do this, and this is going to happen in the future, so I'm going to do that. What you really need, if you like to work with forecasts, is you need two things. Not just a forecast. You need the forecast, but you need an estimate of the probability that your forecast is correct. And today, whatever your forecast may be, you have to say the probability that I'm right is lower.
And the reason why I say about World War III is because the stress that's going to happen on President Xi's regime as their economy starts to collapse and world trade starts to go down, if there is not just a global recession, but a global depression, if that happens, he is going to be stressed within the CCP where there may be a takeover. They're going to overthrow him. So he's probably going to start trying to build up a national effort to galvanize to galvanize and support him and bring Taiwan into the mainland fold militarily. This is the reason why that stress in China and stress within the politic within the CCP with President Xi may launch the flashpan of World War III with Taiwan.
Risk. It's just stuff going on sale. And of course it takes, well, I was going to say a pro, but it takes a prescient pro, of which there aren't many, to know whether, as I keep saying, the discounts are adequate or appropriate. But certainly you have to look. And it doesn't make any sense to say, just a minute, I did XYZ when the price was 100. Today the price is 90, so I'm going to boycott it. That doesn't make any sense on its face. You have to take a hard look.
Do you still think that the U.S. is the best place to invest?
Yes.
I think it's probably still the best place, but it's less best than it used to be. Because I think that, if you think about the...
Just like J.P. Morgan said, never, ever, 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 ever bet against America. Because she will always surprise you.
One of them was the worst thing about investing in the United States for many years has been our fiscal situation, our deficits and debts. And the U.S. has behaved like somebody who has a golden credit card where there's no credit limit and the bill never comes. So, of course, you can spend more than you make. And that's, and if somebody has a golden credit card, well, what would you do? Well, you might buy a nice car, but what the hell, you might as well buy all the cars because the bill's not going to come. And that's the way we've behaved. And that's the way Washington has spent money. But can the events of the recent days change?
But Congress wouldn't have spent all of that money that we couldn't afford if they didn't have a buyer overseas buying the debt. And our buyer overseas had the money because we bought cheap goods. If we kept our manufacturing here, Congress wouldn't have created the debt. That's the big rub. People need to wake up.
Want to hold their debts because look how they're treating me. The fiscal situation will be very complicated.
Howard Marks, you have to leave it there. That was Oak Tree Capital co-chairman.
Another dipshit that's on Wall Street. Please go to my store, the-studio-reykjavik.com. Get the great products that I offer. I offer dual purpose products that help your body, all right? Detox and get healthy. It's really important, all right? Most of the chronic disease in America is self-induced. You stop self-inducing your disease, guess what? You're going to save money in healthcare, and you're going to be healthy, and you're going to have more vitality in your geriatric years. So please go to my store and get the great multi-purpose deodorants that I have. I've partnered up with Rainbow Herbals, and we've created these deodorants. It's dual purpose. Helps to detoxify your body, and you use it as a deodorant. It's for males and females. You can get it in citrus, and you can get it in peppermint, lavender, and tea tree. Why is these deodorants so much better than anything that you can purchase at the grocery store or at the drugstore? Because they're made from essential oils from the Himalayas. You can't get better ingredients than what's in here. You can't. You cannot buy a better deodorant. There is nothing out there. So please go to my store, the-studio-reykjavik.com. Get the deodorants for males and females for your household. Get a few bars for your household. Help support my work and help support your health. Slowly detoxify your body and use it as a deodorant. It has no aluminum and no baking soda. Again, it's made from natural ingredients from the Himalayas. You can't buy a better deodorant. Please go to my store, the-studio-reykjavik.com, and get another great product that's dual purpose. Get it in citrus and get it in peppermint, lavender, and tea tree. If you purchase $150 on my store, you will get a free gift until supplies last. In addition, you can use discount 5 and save $5 on any order. If you purchase anti-aging boxes or longevity boxes from my store, you get a built-in discount because all anti-aging boxes and longevity boxes are cheaper than purchasing the individual products. Please go to my store, the-studio-reykjavik.com, get healthy, follow the protocol, and you're gonna slow down the aging process. You're gonna reduce this chronic problem that you may have, and you're targeting different systems in your body and improving your health and wellness. Please go to my store, the-studio-reykjavik.com. The link is in the description of this video and all my videos. Go to the damn store and purchase my products.
A great business just across the board, and Disney's really stepped up its capital spending for that business because they're so bullish on it. But if consumers' sentiment is shaky here, is the expectation that they'll see it in their top line?
I think so, Paul. I think this is going to be a real risk for Disney. Remember, this is so important for Disney. Parks make up 60% of the company's profits, so absolutely critical to their bottom line. Now, what management did is they already guided to 6 to 8% profit growth in the theme park business for this year, but I think they might have spoken too soon. So we've already kind of seen a little bit of softening in terms of theme park trends, and I think it's going to get even more and more difficult as kind of the year progresses. Disney also faces some competition from Comcast, actually, because Comcast is opening Epic Universe on May 22nd. So for Disney, it could almost be like a double blow here.
Which is so weird because weren't we saying just like a couple quarters ago, oh, it's great because it's like a one-stop shop. You get to go there, you're going to Universal or Comcast, but you're going to go to Disney at the same time. Now that's not the case.
Not the case because, again, there's going to be a lot of pressure on consumer wallets, and we've seen some really clever pricing come out of Comcast. So the way that they're packaging their promotions for, Epic Universe is it's a 3 or a 4 day package, leaving, a family like very little time to go to Disney. So they know what they're doing.
Is there going to be an analyst?
There's a great idea. Don't go to Disney. Stop supporting the woke agenda and save money. Not only that, if you actually invest in yourself, all right, by, saving for your future or your children's education or investing in your health by improving your lifestyle, eating better foods, getting the proper supplementation, spending the time and working out, and improving your mind, isn't that better for you than spending fucking money for Disney?
Yeah, so it's awesome. And what do you do on a train with a bunch? And what do you do on a train when you got not a lot else to do? Have some cocktails.
I was like, I don't know. You play cards, you gamble, something along those lines.
All right, that was back in the day. That's
all right. So the intraday trade right now for the S&P 500 is trading at 5,118. Okay, so intraday, it broke the 5,150 barrier and broke the 5,120 barrier. All right, but that's intraday. And that's not as important as what the close will be. All right. Right now it's trading above, and it's trading at 5,197. But you can see they're testing it intraday. They're testing this barrier that I've been telling you about.
Chair Jay Powell set to speak today, 11:25 Eastern or thereabouts. Wall Street boosting bets the Federal Reserve will cut interest rates to fend off a recession. A Bloomberg survey of economists pointing toward an increased risk.
Now think about this. They keep on saying Bloomberg's fucking idiotic. They're saying, okay, we have to worry about the tariffs being inflationary. All right, and it's going to be so inflationary, it's going to be catastrophic for the economy. Do you think the Federal Reserve should be cutting rates when there's inflation? I mean, really think about that for a second. You pump more money into a system that's already inflationary, it becomes more inflationary. So it's what it is that you have the market participants forcing the market down to try to get the Federal Reserve to lower rates. Now, again, like I said, the Federal Reserve should only lower rates if the unemployment goes above 5%. And the inflation rate is below, or is below 2%. So if it's below 2% for inflation, which it's not, and if unemployment is above 5%, then the Federal Reserve should cut. All right? But if the inflation is above the 2% and the unemployment is below the 5%, which is what it is right now, no matter what the economy, no matter what the market is doing, the Federal Reserve should not cut rates. That's an important feature here. But you have institutional investors and Bloomberg being the sounding board for the institutional investors, trying to jawbone the actual Federal Reserve chairman to lower rates. Now, if they lower rates and it's under the right conditions, then it will help the economy. But we're not there yet. We need more unemployment and we need lower inflation to be able. We need to have some demand destruction to bring down the rates, and then to bring down the inflation, and then we will have a good situation where the Federal Reserve should cut rates. And that would be positive for the economy. But you do it the wrong time, and it's bad for the economy. It may be good for the stock market, but bad for the economy. Which one do you want? You want a good economy or a good stock market? The best solution is a good economy and a good stock market. And you will only have that if the Federal Reserve cuts rates at the proper time. And the proper time would be unemployment above 5% and inflation below 2%. Anyone that says the Federal Reserve should be cutting rates right now is going to make the economy worse, not better.
The lowest since 2022, said that report really shows that they may have underestimated the degree of consumer reaction. Other headwinds, though, it changed over production lines, right? At each of its assembly plants to build that redesigned Model Y. JP Morgan now expects Tesla's first quarter earnings to slip to 36 cents a share, and that is just short of the previous projection of 40 cents a share.
Okay, what's interesting here is now the S&P 500 jumped back up to over to 5,200, so it's 5,211. So you're seeing this bear bull power play that's happening at that 5,150 mark.
Today closed the day off more than 7%. It's lowest since last summer when those fears about the delays of the rollout of the Blackwell chip. So you remember that. But this morning it's been down, more than 7%. U.S. chip makers are generating significant amount of sales. in China. So any additional duties on products sold inside the country, well, that could negatively impact their business. So this is why those shares have been lower. Why it's still lower today? Well, we heard the news, right? China retaliated and imposed that 34% tariff on all American imports. That starts April 10th. So that's really escalating the trade war. Other chip stocks that are affected, for example, you have Intel off more than 8%, Micron down as much as 12%, you have Broadcom off as much as 7%, and Qualcomm down as much as 5%.
Unreal. We are seeing, by the way, I just want to point out here, circuit breaker triggered for restoration hardware. RH now all of a sudden starting again, fleet trimming some declines at a 7.3%. Like these stocks are moving really fast on really whippy headlines. Wrapping it up here with Wayfair, getting a downgrade, right, due to tariffs?
Yeah, so of course, dealing with tariffs, right? A lot of retailers, we heard that yesterday. It closed down, I didn't even realize this, but 25% yesterday.
Yeah.
Before the bell, down as much as about 6, after the open, it was down as much as 16%. The difference today is that it received, yes, the downgrade from Citi to neutral from buy. They said Wayfair still positioned great long-term, but tariffs have made the risk to revenue now greater. It also added the company's management has, quote, done well in controlling what is in control, but it says that those macro headwinds, well, they're just too much to ignore at this point. But what was really interesting about it is that Citi also said it sees eBay as a good alternative because consumers are going to start looking for value since maybe they're going to have to raise their prices. They're going to say, hey, I'm going to go over to eBay instead of Wayfair. But we'll see what happens.
All right, very good. Lisa Matei, we appreciate that. Again, the headline that I think you hit, Alex, earlier, President Trump saying that Vietnam wants to cut their tariffs down to zero. So we'll have more reporting on that.
And also that means you got Lulu pairing declines. You got On Holding jumping to a session high. Nike jumping to a session high. A lot of their product comes from Vietnam. So this is that link there, and you get equities off the lows of the session. All right, let's go now to tech and where we are in that market after the big sell-off. Anurag Rana, Bloomberg Intelligence Senior Technology Analyst. All right, Anurag, what stops the bleeding here for tech?
We need a few more of those announcements that other countries are willing to negotiate as well, because unless that happens, it'll be very tough to figure out where the bottom is in terms of fundamentals for any of these companies.
Yeah, Anurag, we had Dan Ives in studio earlier this morning on surveillance, and it's by far the most cautious I've ever heard him. Now, granted, he's a very bullish analyst by nature, but he's saying basically this is a black swan event for technology, and unless it changes, this is a long-term headwind for tech, and I guess that kind of goes. Is there? And he even went to the level, Anurag was saying, he'd be surprised if many of his companies even provide guidance.
How could it be a black swan event? They knew it was telegraphed. Black swan events means an unknown unknown, not a known unknown. I mean, they're not even using the fucking terms right. A black swan is something that you totally cannot predict. It was totally unforeseen, all right? Trump has been saying that tariffs are coming. So it was a white swan. You knew that it was going to happen. This is stupid.
On paper are very good, but what happens is when you have a shock in the system like this, everybody freezes, hiring freezes, spending freezes. So you don't know what to do for the next 6 months. You don't know whether the revenue decline, how much is it going to be? The margin, pressure because of the
another clown on Bloomberg. That's a good thing. What's going to happen is that there's going to be freezing of hiring. CapEx is going to start to go down a little bit. And what's going to happen is there's going to be a little bit of demand destruction. And actually, you're going to see a lowering of prices. Not just inflation going down, but a lowering of prices on many goods. Because of, a lot of people don't understand this. When you have inflation, when they say inflation, they're talking about inflation rate. All right? So if it's at 2% and you had 7% or 8% and it drops back down to 2%, the price of goods, the overall price of goods is still elevated relative to your baseline. All right? So that's really important to get that price level below, back down to that elevated
inflation rate. Now, recently, it was 7% under the Biden administration. We've never gone down back to price level baseline. It's only been adding to it, but at a slower rate. If you do demand destruction, you actually bring down the actual cost of goods. So you actually have a little bit of deflation. That's a good thing, especially when you had transitory inflation, which wasn't transitory. Demand destruct, so you have a future economy that is robust. But this guy is a clown.
China with this thing, because it's one thing to say that okay, my phone buying has been pushed out by 3 months or 6 months or so. Okay, the demand comes back next year. It's not that big of a deal. But once you really get a bad feeling about a company or a country, that sourness really impacts the fundamentals of it. We have seen what's going on with Tesla in Europe, for example. You don't want Apple to have that.
Trump is jawboning Powell now. Trump says perfect time for Powell to cut interest rates. Trump is wrong on that one. All right, if you break this apart in different components, with us revolving our debt, all right, at the government level, all right, we want lower interest rates, so we're paying less interest on the revolving debt. All right. So bringing down interest rates by Powell what will happen is that the actual curve, the yield curve, will shift downward. So our debt refinancing will be better. It'll also help with home sales because people can get less interest on their mortgage. Okay. The problem is that you still have above inflation target. And you're still below natural unemployment rate. So cutting rates is inflationary. And that hot money is going to go into increasing asset prices where it's not stable. You don't want that. And that hot money is also going to bring up the stock market. That's not stable because you already have multiples that are too high. We just talked about this. So the multiples were like at 19 at the all-time high. All right. These multiples need to come back down to earth. So, okay. So cutting rates for the government to refinance, yeah, it's great. But for the overall long-term part of the economy, it's bad because it's going to be inflationary. The time is not right now. You want the unemployment rate to get just slightly above 5%. And you want that inflation, you want a little bit of that deflationary effects of people not buying products and producers starting to cut their costs for their product down, start to bring down the price point. When that happens, that's when you hit with the Federal Reserve with a lower interest rate. And the prices are lower, people have more money in their pocket, less interest is being paid at the government level and even at the personal level. People are purchasing homes and boom, you got a growing economy and a growing stock market. That's the better solution. You got lowering rates right now is going to make things worse. It's not the right time. If you only look at it from if you're only looking at a government refinancing, yeah. But if you're looking at the growth of an economy and the stock market, the timing is not yet. It will happen, but it's not yet. Not yet. Maybe this year, maybe. Maybe it would be better to do it in 2026, first quarter, or maybe the end of this year. But it's not yet. Now, what's happening is Trump wants the rates to go down. And he's not paying attention that inflation numbers are still above the 2%. You never, ever, 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 ever lower rates at the Federal Reserve level when your inflation is above 2%. Ever. Because what's going to happen is it's going to hurt the economy in the long run.
1,000 companies, they will be less impacted than the ones that are impacted to the SMB spending. So I'll give you a very good example here is Shopify. Look at how it's completely been, decimated yesterday and today, because bulk of their consumer base or the client base is small and medium businesses. Now, somebody like a Microsoft or a Workday that deals primarily with larger companies and larger enterprises, a lot less, disturbance in their revenue flow. They will also get hit. It's not that they're immune, but it'd be a lot less than somebody like a Shopify.
I also have to wonder if this doesn't change
here's
ROI.
a breaking news announcement. Trump saying that Vietnam wants to cut their tariffs to zero. Now, you have all these talking heads on Bloomberg saying tariff increases that are escalatory between the United States and some other country is going to be inflationary. Maybe, maybe not. All right. But the converse must be true too, right? According to Bloomberg. If you lower tariffs, then you have cheaper goods. So it doesn't behoove everybody to not have tariffs? And this gets back to the crust of the problem. The United States didn't start this. You have other countries that are exporting their goods to the United States to protect their industries. They have higher tariffs. And because of that, that's why we're in the situation we're in. So the whole logic is going to reverse on itself with all these talking heads on Bloomberg. The whole point is to reduce the tariffs for everybody. But you have the globalists that want to maintain that labor arbitrage. So it's all about the well-heeled on K Street and the multinational corporations and not about the consumer. And this is the thing that I've been saying for months.
Economics and policy correspondent coming up next. Taking a look then at the market, as Paul was just saying, you're seeing the equity market off the lows. You're still seeing buying coming in, though, to the bar market. The 10-year yield is down by about 6 basis points. The 2 is down by about 7. So still a little bit of theme there into safe haven assets. Happy Friday. This is Bloomberg.
Please go to my store, the-studio-reykjavik.com, and get the best toothpaste that you can purchase. This is made from structural nanosilver. It helps to whiten your teeth, freshen your breath, reduce inflammation, help with the health of your gum line, and with good oral hygiene, you're reducing problems with the vascular system, you're reducing your problems with valves of your heart. Good oral hygiene is really important, all right? It's not just for your teeth, it's also for your cardiovascular system. So please get this very high quality toothpaste. You can't get a better toothpaste. Like I said, you can't get a better deodorant. This is the same issue here. You can't get a better toothpaste. So go to my store, the-studio-reykjavik.com, get a few tubes of this toothpaste. It has no fluoride. You know why it doesn't have fluoride? Because fluoride makes you stupid. So please go to my store, the-studio-reykjavik.com, get a few tubes of this toothpaste, use discount 5, get $5 off any order. If you purchase $150 or more on my store, guess what? You're going to get a free gift until supplies last. I'm not going to tell you what it is, but you get a free gift. Now, if you want to save even more money, get an anti-aging or a longevity box. Why? Because those longevity boxes and anti-aging boxes on my store are at a discount, built-in discount, compared to purchasing the products individually. And you can put discount 5 on top of that. Go to my store, the-studio-reykjavik.com, get healthy, follow the protocol. Everything I offer on my store is going to help you. Please go to my store, the-studio-reykjavik.com. Follow my advice. It's a holistic approach. Proper supplementation, proper sleep, proper exercise, all 4 modalities. That means resistance training, cardio, stretching, and balancing exercises. Those are all important to do. You want to do mindfulness to bring your body into parasympathetic. And you want to filter your water, stay away from processed foods, so proper diet, detoxify your body on a regular basis. And when you do these holistic approaches with the stacking of the supplements, what you're going to notice is that you're slowing down the aging process, boosting up your immune system, and you're allowing your body to heal. Now, you do it the way I'm telling you, you are going to benefit. Please go to my store, the-studio-reykjavik.com. All right. Let's see here. What's going on with some of the other news? Let's go to Fox News about the retaliatory 30% tariff on U.S. by China.
Hey, video creator, we know you. For you, it's about more than getting the job done. You'll keep going until it's perfect. Oh.
Right now, the Dow future is down sharply as global markets take a big hit in response to President Trump's tariffs announcements. And just moments ago, China announced plans to implement 34% retaliatory tariffs on U.S. goods starting April 10th.
So senior White House correspondent Jackie Heinrich is watching all this. She's a little seasick, and she joins us now. Jackie, tell us the latest. And you have your own landscaper issues, it sounds like.
I do. I do. Brian, this market reaction was a shock to everyone, really, except for President Trump, who likened it to a scheduled medical procedure to treat a sick patient.
I think it's going very well. It was an operation, like when a patient gets operated on, and it's a big thing. I said this would exactly be the way it is. We have $6 or $7 trillion coming into our country, and we've never seen anything like it. The markets are going to boom, the stock is going to boom, the country is going to boom.
And his administration is echoing that line, even as the
It will boom at the tail end of the year, and the economy will be much better. Much better, but you got to just let it play out. And don't make the mistake in lowering rates too early. Because lowering rates too early is inflationary. And the whole idea is do a little bit of demand destruction to get those prices down.
Keep coming. This morning, China announcing retaliatory tariffs of 34% effective April 10th. That, by the way, is exactly the kind of countermeasure that Treasury Secretary said would prompt escalation from the U.S., repeatedly warning against it. The president's aides maintain this strategy will work and the fallout will be short, despite recession warnings from some economists.
This will be a short time of uncertainty, and then we'll move back to the prosperity that this president has envisioned, that he is so bold and so willing to fight for. And I couldn't be more proud and stand next to him. The new golden age of prosperity will move in.
Now, there are some signs that the president's prescription might work. General Motors announcing plans to boost production of light-duty trucks in the U.S., announcing that it is hiring several hundred temporary workers as the auto industry also grapples with sector-specific tariffs.
Renaissance of American manufacturing coming because Donald Trump is bringing them back. He's driving them back. $6 trillion, he said today, he's got committed to America. It's unbelievable.
And other countries are also responding. Mexico and Canada both hastening negotiations with the U.S. toward a new USMCA trade deal. Eric Trump posting to X, I wouldn't want to be the last country that tries to negotiate a trade deal with Donald Trump. The first to negotiate will win. The last will absolutely lose. I've seen this movie my entire life. Meantime, Democrats are sounding off about the inflationary impacts of this plan in the House, planning to force a vote to try to kill the tariffs entirely, guys.
All right. Thank you so much.
Jackie.
Brian?
So this just came across, guys. So China officially has retaliated. When you put the fentanyl penalty along with the tariffs issued yesterday, we have tariffed China over 50%. They have just responded. They don't want to be bullied, air quotes. They with the 34% tariffs. They also listed 11 American companies of so-called unreliable entities. And they're going to halt chicken imports too. Listen, we get a lot more from them than they get from us. Yeah, and drone companies, which a lot of it's going to hurt the defense industry too, because a lot of the parts that we use, sadly and astoundingly, that our Pentagon uses are from parts and materials that we get from China. So this is a big wake-up call. The other big story is pharmaceuticals are going to be targeted as early as today. Why? Remember, we don't make any drugs here, but yet we use them all. So how do you bring manufacturing back? Well, if you're in Ireland, there's no reason to come here. It's at 0%. But now we're going to start bringing it back as tariffs hit. Lastly, about China, it looks like we're going to tariff third parties that buy Venezuelan oil. Guess who buys Venezuelan oil?
Now think about it.
China.
Think about, you want your kids to go into STEM, all right? And if you have more biotech degrees, molecular biology degrees, chemistry degrees, they're going to work in the industries in the United States when we bring back this manufacturing for pharmaceuticals, to do the research and to be part of that manufacturing process to make those pharmaceuticals. Because you need those types of degrees. You need the biotech, you need the molecular biology, you need the chemical engineering, the chemistry degrees. And there's lots of Americans that are getting these degrees. But when the jobs aren't there, they have to go and get an MBA and work in corporate. All right? Well, guess what? Let's bring that back. And New Jersey, Cory Booker, the dipshit. All right? Cory Booker, Senator Cory Booker from New Jersey, he would actually have more jobs in his state if you bring back the pharmaceutical industry, the manufacturing in the United States. And New Jersey would benefit big time because they have the economic cluster for it. Instead of having, the Chinese make it for us. Or the Indians make it for us. Why? Why? A lot of this stuff can be, quote, automated, but you need skilled workers to run these lines and to do the research and to improve these processes for manufacturing. Not only that, we'll be more self-reliant. So why are we having China do it? Because you have some stupid ass on Wall Street saying that's the best thing to do for the balance sheet.
Oh, they could be hit in the oil pocket too.
Well, Brian, I think the statement that they produce saying they're being bullied is comical. They steal products. They use slave labor. They spy on everything that we do, especially if you're a company, then you got to turn over all your data to them as well. And they use that to build up. They're funding some of our enemies as well. So if it's anybody getting bullied is the United States. We finally got COVID as well. Good point, Ainsley. So what we have now is a president that is taking it seriously and taking it to China.
Yeah, and Bill Ackman, who is the billionaire hedge fund guy, he said, my advice to foreign leaders is that if you have not already reached out to President Donald Trump, you need to do so immediately. Trump is, at his core, a deal maker who sees the world as a series of transactions. Based on his track record to date with foreign governments, law firms, and universities, he is a tough but fair negotiator. He loves to make deals, and he loves to get things done promptly. Promptly. I expect Trump will reward the early deal makers with fairer deals than those that wait to sit down at the negotiation table, which sounds just like what Eric Trump said. And Donald Trump said, every country has called us. That's the beauty of what we do. We put ourselves in the driver's seat. So I think if you're one of the first few countries that's calling him, trying to make a deal, that's the one that's going to get those countries are going to get the headlines and going to say they're working with the United States. So I think it would be smart if they were doing this. It looks like they might be behind the scenes.
So a couple of things, yes.
We just have to make our chatbot more agentic. Whoa, future John here. You're here too? Yeah, and thanks to CX1 Empower, things are going to get way less awkward.
Spring is in the air, and so are the savings at Pep Boys. Roll into spring with free installation on Michelin tires now through April 8th.
So a couple of things. Yesterday, Ainsley and I, we know a shirt manufacturer and textiles. And he said the one thing that I was showing Ainsley, the text messages that people should realize is that we don't really have textile mills that make shirts, because it's not a matter of just plugging it in, turning on a machine. Right. You actually need skilled people to do it. So if you're going to tariff 25%, let's say, coming from Vietnam, right away they almost...
And you have all these kids coming out of FIT in New York, the Fashion Institute of Technology. Boom. If you create more jobs here, you're going to have more students that are going to be able to get good paying jobs, and they're going to have family creation and be able to afford homes. But the reason why the younger generation can't do that is because the jobs have been shipped overseas. You got a lot of students that are coming out of these design houses in the United States. FIT is a major one. CCS is another one in Detroit. You know, the more people that you can hire in your economy, the better off you're going to be. So why don't you make these things? Why? Because you had someone on Wall Street saying that it's better for the balance sheet for some design house to ship it over to China. Well, the game's up. It's time to bring it back.
Insolvent, especially if you took on debt after the pandemic to keep your company alive. So there's so many different elements to it. You could sincerely want to bring your business back. But America right now says, I'm sorry, all we have is vacant warehouses where factories used to be, or we were never good at it. Ethan Lane, the Senior Vice President of Government Affairs Exporters, said, doesn't love tariffs, but understands what Trump's doing.
Nobody who imports or exports likes tariffs, us included, right? This is not a tool that we would pick if we had other options, but the president makes a very good point that for a very long time, we've had the raw end of a lot of these trade deals. You know, in the case of the beef industry, we've been used as trade bait or a bargaining chip in some of these international.
And it's hurt the middle class, but you had the well-heeled, multinational, transnational capitalists, the multinational corporations, spinning it in the news that it's good for you. But it was not good for you. It was good for their stock price.
And it's led to some really lopsided relationships. And our hope here is that the president can use this tool to square up the deck and get us a little bit of a better deal with some of these trading partners so that we're not balancing the backs of these different trade balances on U.S. farmers and ranchers. So, we're hopeful this happens quickly and that we can get back to some low tariff trading with our neighbors and our partners.
Yeah, I think he highlights a point, Ainsley, that they shouldn't have to be highlighted. Is they don't want tariffs. That's not something that these communities want.
Exactly.
They're getting screwed over.
Exactly. Well, why isn't Bloomberg saying, China, the tariffs that you had on the United States is just wrong? And but no. What Bloomberg does is it demonizes Trump because Trump can never do anything right, according to Bloomberg.
We accepting products with no tariff on it, and the other countries are putting tariffs on our beef. And I think that's what it's gonna come down to. All these mom and pops, all these local businesses, whether it's the steel, the farmers, all the other producers, they're saying that it needs to be some give and take here.
Yeah, it needs to be free and fair, and that's what Donald Trump says.
Exactly.
I'm Steve Ducey. I'm Brighteon Channel.
Bloomberg only wants to say, let's maintain the status quo. That means the other countries have tariffs and we don't have barriers of entry for their products and us, and for our country. That's what Bloomberg's saying. Bloomberg is promoting status quo. China, it's okay to have your tariffs on American goods. But heaven forbid that America puts tariffs on Chinese goods, because that would disrupt the order, the global order of the transnational capitalists. And we can't have that, could we? All right, let's go to Bloomberg. And Chairman Powell's talking.
Well, that happened when inflation was high, 2021, 22, and 23 largely. Inflation is now back down to much more normal levels. Unemployment is low. The economy's been growing.
This guy's a fucking asshole. This guy's a fucking asshole. They read the inflation number wrong in 2023, cut rates too damn early in 2024 that was inflationary. And then he says, you know what? Inflation has been going down. It was at 7%, and then it went back down to above 2%. It's like 2.7%. But the cost of your goods since 2023 has been elevated in absolute dollars. It hasn't gone down because they fucked up. And he won't admit that.
So I'm from Milwaukee, and I've been talking to business leaders, executives, and consumers in our community, in our region, for the last few weeks, mostly before this week's news. Gentlemen, they're troubled and they're nervous. One business owner told me if there's a hint of a recession, we're cooked. And he asked me to share that with you. What's your response?
So I guess I would say, let's start with the fact that the incoming data right through this morning's employment report, which admittedly is from roughly a month ago, the week of March 12th, they took the data in. It still shows a solid economy. Unemployment is still low. I understand the uncertainty that's weighing on people. You ask about a recession. We don't make a probability forecast of how likely it is for there to be a recession, but many outside forecasters do, and many of them have raised the likelihood, albeit from very low levels. It's not something that anybody now is forecasting, or some people are starting to. And so I can't. There's not much more.
Remember what a recession means: 2 consecutive quarters of negative GDP. I don't think we're going to have that in 2025.
Where that comes to rest, though, and we're just going to have to see that through.
At the congressional hearing last year, one of the U.S. representatives said that you were pretty boring, and you thanked him and said that you considered that a very high compliment. And in fact, I feel like it's one of the roles of the Federal Reserve, especially since the housing crisis, to be kind of a ballast, especially in the face of the volatility of the markets and the dramatics that we've experienced with the economy. Very steady, no surprises, very reliable. In a moment like this, which also has a lot of drama and unpredictability, but it is not necessarily from an economic crisis. It's by design, it's political. How do you see your role in this moment?
So I think all of the values that you touched on are, in fact, the values that we try to live by. We're driven by, analysis and careful thought and discussion and debate and the merits of things. We try to stay as far as we can from the political process. We don't look at political cycles or things like that. So and I think people expect that from us. They expect us to tell the truth, and that's what we're going to do. But at the same time, we don't want to be part of the broader political discussion about the wisdom of.
He wants to tell the truth, huh? Why did they say under the Biden administration that inflation was transitory and they didn't act with increasing the federal funds rate? And then when they realized that they made a mistake, they didn't do shock therapy. And that's the reason why you have inflation today. Because they fucked up.
Our purpose.
So how can businesses and individuals and the Fed make plans for the future when so much is being dictated by the actions of a single person? And do you see yourself as the consoler-in-chief on economic matters?
No, I think, take a step back. What's happening is, as I mentioned, the new administration is making significant policy changes in trade, immigration, fiscal policy, and regulation. And you're still just a couple of months into the administration, and that process will take place. And at a certain point, the new policies will be on the table. They will be having the effects they're going to have on the economy, and uncertainty will decline. Right now, there's a lot of uncertainty about where all that's going to sort out, the forms it will take, and what the economic effects will be. If you fast forward a year from now, the uncertainty should be much lower. The actual effects of the policies should then be pretty manifesting.
I'm going to go to the AP
I understand why,
because I think it'll be better.
It just is highly uncertain. both what the policy.
You know, it's really fun. Make your website on this. Hey, we're how ridiculous. 3 childhood friends and did.
I understand why it just is highly uncertain, both what the policies will turn out to be, exactly what they'll turn out to be, and also what their effects will be in the near term. We just have to go through that process, and it's just kind of a manifestation of our election cycle and a new administration coming in with new policies.
I mean, given all of the change happening and the fact that we are in a period where things have not settled in yet, and that the Federal Reserve and U.S. Chair are very
you compare. I've been
data driven.
From the staff has been a placeholder rather than they wouldn't call it.
Now, you tweak your plans and
I've been watching the Federal Reserve for a long time. All right, going all the way back to Greenspan. You remember Greenspan? All right, and I'll tell you, since Greenspan and Bernanke leaving, you have had very weak economists running the Federal Reserve. Janet Yellen was a total fucking disaster. Total fucking disaster. And then she gets promoted to, if you want to call it a promotion, to the Treasury Department. And that was a disaster. Then you have this weak guy, Powell, running the Federal Reserve. Now, again, do the compare and contrast with Powell with Greenspan or Powell and Bernanke. You had Greenspan and Bernanke were out of the box thinkers. This guy, he doesn't have the creativity. He's a clown. And he fucked up our economy. And no one's blaming him for it. I keep on clicking.
The future calls for. This is sort of in Wisconsin. I told you that they can't make their plans. They want to expand. They want to build a new facility. They want to hire or do whatever the future calls for. They say we're trying to look around the corner. We're not even sure where the corner is, and we're not even sure what's around the corner. It sounds like they're in the same position as you are a little bit.
No, we hear the same thing, of course.
That's a stupid softball question. That's a stupid softball question. Oh, they want to expand their operations, but they don't have good visibility and what's around the corner and should they invest and blah, blah, blah. It's really simple. Don't bet against America. Think positive, move forward, and grow the economy. Keep on moving forward. That's the American spirit. But you have stupid reporters asking stupid questions to a guy that's running the Federal Reserve that's a fucking idiot. God. All right. Let's go to phrase 24. They're talking about China's retaliatory tariffs.
Medicaid is important because it helps to save lives, protect our care.
Nature Portfolio. The world needs your research.
Powell is an idiot.
Our then world markets Friday took another hit in response to Donald Trump's sweeping tariff announcements this week. Shares across Asia and Europe slid at the start of trading, with everything from crude oil and big tech stocks to the value of the US dollar, even gold, falling in reaction. Well, despite what for many is viewed as just the start of what could be a long-lasting, widespread wave of economic turmoil, the U.S. president defended his trade war, insisting that it'll bring prosperity to the United States. Take a listen.
I think it's going very well. It was an operation, like when a patient gets operated on, and it's a big thing. I said this would exactly be the way it is. We have $6 or $7 trillion coming into our country. And we've never seen anything like it. The markets are going to boom, the stock is going to boom, the country is going to boom, and the rest of the world wants to see is there any way they can make a deal. They've taken advantage of us for many, many years. For many years we've been at the wrong side of the ball, and I'll tell you what, and I think it's going to be unbelievable. The thing that people have to talk about, we're up almost to $7 trillion of investment coming into our country. And you'll see how it's going to turn out. Our country's going to boom.
Well, the European Union, meanwhile, is expected to take a particularly brutal hit. Leaders from Germany, Spain, and France describing Trump's tariffs respectively as
fundamentally wrong, a unilateral attack, and likely to have a massive impact on the economy. Now, few sectors will be spared the effects of the 20% levies on EU goods, from food and beverage to aeronautics, cars, and luxury goods. Here in France, Emmanuel Macron made an appeal to economic patriotism, urging companies to suspend their investments in the U.S. For more on this trade war in general, then we're going to speak now to Moshe Lander, economics professor at Concordia University in Montreal, Canada. Thank you for joining us today, Moshe. So China just announced its retaliatory measures, 34% tariffs on imports of all U.S. products. What do you expect the consequences of this to be?
Well, we're heading for a global trade war. We haven't seen anything like this in about a century. This was what happened after the stock market collapsed in 1929, and the Americans led the way then by increasing tariffs, and everybody followed suit. I'm not saying that it's going to end with a depression. I'm not saying it's going to end with a world war, but it's certainly not the type of thing that we've seen over the last 80 years as countries have tried to move towards more integration and less tariffs.
So China obviously sells far more to the United States than it buys. So who stands to lose the most from these two countries kind of competing tariffs?
Well, I think that the U.S. is probably going to be the bigger loser because China has a little more history and experience being more isolationist and looking at exports are the only thing that were interesting to them and imports were something that they were looking to avoid. So that mercantilist sort of approach might actually serve them well because they have history on their side. The Americans are not as much of a trader as you would think the size of their economy would suggest, but they are much more engaged with the rest of the world, both as exporters and importers. So when they're lashing out at other countries, the anger towards the U.S. is probably going to be greater than in the other direction. I think American citizens are just going along with this for lack of information that this is really an issue.
I mean, when you consider that the United States is, of course, the largest importer of goods in the world, what do you think the Trump administration's objective is here? I mean, we heard him talking earlier about, this is going to bring trillions of dollars into the United States. It's going to make the United States richer. Is that realistic? What are they trying to do?
I don't know what they're trying to do. I don't think a lot of people know what they're trying to do, which is why European leaders among many are saying, what are you doing? Look, Donald Trump has been in the public eye for 40 years. He was a property mogul in New York. He gained fame for just being famous. He was kind of the early stage Kardashian. But the one thing that he's always been consistent on for 40 years is he does not like free trade. I think he sees it as a zero-sum game, that if one country is winning, another country must be losing. And if you look at a lot of his rhetoric, he keeps talking about how other countries are taking advantage of the U.S. All that means is that they have some sort of trade surplus with the U.S. But guess what? I have a trade surplus with my employer. I sell them more stuff than I get back in return, but I have trade deficits with every retailer that I do business with. At the end of the day, there's nothing wrong with either. I think he misses that in order to be rich, you have to be engaged in trade. And he might have been missing that.
There's unfair trade practices. And not only that, we are losing our economic prowess and our ability to wage war, especially with China. And that was done on purpose by the globalists to weaken America. You weaken its borders, you weaken its currency, you weaken it economically, you weaken its military prowess, and voila, you have a one world order. Because guess what? Do you think the one world order wants a strong America? This whole idea of self-determination about life, liberty, and the pursuit of happiness? Of course not. They have to kill that. And that's what the globalists are trying to do. Don't bet against America.
By the inability to get the goods and services that they were normally getting, and the goods and services that they can get are going to be at a higher price. So I think it's going to happen in two stages here. But of course, there's always the potential that Trump walks this back, given the way that stock markets are reacting, given that he likes to think of himself as an elite business person. If he realizes that universally business is saying this is a bad idea and he walks it back, we might not see the price effect, but we will continue to see the uncertainty because who's to say that he's not going to give us a 30-day reprieve and come back in May and do this all over again?
At least in the long term, do you think that it could actually, that these tariffs could actually have a positive impact if we put the market instability aside for now, at least in terms of revamping domestic production, especially in strategic industries, or even from a climate perspective? I mean, we know this is going to affect clothing, fast fashion, things like that Americans have that are consume but aren't necessities. So do you think that this could bring positive changes in either of those fronts?
it could bring positive change, but not in the way that you're suggesting. The EU is an incomplete project. They went a long way towards integrating their economies. They did a lot towards eliminating tariffs on a lot of things, but it's incomplete. Services in certain sectors continue to remain protected. One of the things that we're focusing on here in Canada right now is that we have a lot of interprovincial barriers that have been there for decades, but nobody's paid attention to. If you can remove those barriers and complete the Canadian integration project, there's billions of dollars that are being left on the table. I would suggest that the EU has billions more than what even Canadians have, if you can find a way to try and realize that maybe the US is not going to be a reliable partner going forward, or maybe it's going to be a situational partner going forward. So what the EU should be doing right now is not looking to try and onshore domestic production, but what they should be looking to do is deepen that integration among the countries and remove whatever barriers do exist so that they're a little more insulated the next time this should flare up.
As a final question for you, sir, this brewing trade war has been described as the end of globalization as we know it. Do you think that that's an accurate way to frame what we see happening, or do you see it more as something where the United States kind of increasingly just becomes an isolated actor on a much larger world where commerce is where trade is increasing amongst other global powers?
Well, it does give the potential for the end of globalization to happen. If some of the farther right parties that are coming to dominate the European landscape decide that they want to pull up the drawbridge as well, it could be a problem. I would remind anybody in Europe, though, that at the end of the Second World War, France and Germany were not exactly on the best of terms, but within 40 years, the French president and the German chancellor are literally walking linked arm in arm to show the unity of those two countries. So there is the potential for bygones to be bygones at some point. I hope it's not going to take 40 years. But it also isn't two world wars that we fought over this trade war. So it's going to be a bit of a hurdle to overcome. I have a feeling that it will not survive this president, or if it does outlast this president, it's not going to last in a permanent sort of way. And people will realize that we do need each other and we do need that increased globalization. Maybe this is the push that we needed.
Professor Moshe Lando of Concordia University, thank you very much for speaking.
Trump is not destroying globalization. Trump is saying, we never really had free trade because of all these subsidies and all these tariffs. Please go to my store, the-studio-reykjavik.com, and get the Veggie Cap probiotics or the powdered probiotics. Very high quality probiotics. It's really important to take probiotics every day to help with your immune system at the gut level, to improve the mucosal lining, to improve that gut biome. You're going to improve your gut absorption. Your communication between your gut and your liver will improve, and your gut and your brain will improve. And many people will start seeing positive results with their skin, their hair, and their nails. A lot of people don't realize that a poor gut biome leads to other systems in your body that are not performing well. So please go to my store, the-studio-reykjavik.com. Get the Veggie Cap version of the probiotic or the powdered version. I prefer taking the powdered one because I take a lot of different powders like the collagen, the gladiator barley, the lignans, the boomer boost. So if you take a lot of powders, it's probably best to just mix it with the other powders. But other people prefer to take the Veggie Cap. So I have both versions. Please go to my store, the-studio-reykjavik.com. Boost up your health by taking a probiotic, really important. Use discount 5 and you get $5 off. If you purchase $150 worth of product, you get a free gift until supplies last. So please go to my store, the-studio-reykjavik.com. The link is in the description of this video and all my videos. All right, let's continue on. All right, news here. I'm not going to continue playing the Powell audio feed is really poor. Okay, this is CNN's take on the stock market.
Snap your W-2 and file your taxes 100% free. Plus, get your biggest refund. File free now. Roughly 37% of
U.S. stocks are tumbling for the second day. The Dow is already down 1,000 points after dropping almost 1,700 points yesterday. This comes amid President Trump's escalating trade war, and despite
Well, right now,
stronger than expected.
right now the Dow is down 1,414, and the S&P 500 is down about 214.
Jobs report just out this morning, also affecting the markets this morning, retaliation from China. Beijing announced it's responding to the White House's sweeping tariffs with 34% new tariffs of its own against the United States. Let's go live right now to New York and CNN business and politics correspondent Vanessa Yurkevich is standing by. Vanessa, you're watching all of this. Break it down for us. First of all, start with the jobs report that came out this morning.
Yeah, well, this jobs report, better than expected jobs report, may have softened the opening on Wall Street just a little bit. But look at stocks right now. Look at where markets are really tumbling this morning as investors are pricing.
She doesn't know what the hell she's talking about. The jobs report came out positive. Better than expected. Great. But the market sold off because of the tariffs. And because if you had a worsening job market, the Federal Reserve would increase the probability of cutting rates. And Wall Street wants the Federal Reserve to cut rates. They're waiting. That's why. But these analysts don't know anything on CNN. They don't know anything on Bloomberg either.
A scenario, a trade war escalation. They are looking for some sense that the administration is willing to negotiate with countries. That does not seem to be the case. Investors telling me that their trust has been just completely eroded as this trade war escalates. As you mentioned, though, a bright spot, the jobs report, better than expected numbers in March. Hiring picked up 228,000. That's more than 100,000, or about 100,000 more than expected. And the unemployment rate ticking up to about 4.2%, just slightly from 4.1%.
This is my point that I'm making. 4.2% unemployment, below the natural unemployment rate of 5%. And that's the canonical doctrine of economic theory. Now, inflation is above 2% target, and your unemployment rate's below the natural unemployment rate. Do you really think the Federal Reserve should be lowering rates? The answer is no. But Wall Street wants that. You know why? Because Wall Street is addicted to free money from the Federal Reserve.
This is ancient news at this point. This is looking backwards in March. Really, everything changed on April 2nd when President Trump announced these universal tariffs. And Wall Street was waiting for retaliation from major trading partners. And we heard from China just this morning a 34% tariff on all U.S. exports going into China. That's about $143 billion worth of goods every single year. Things like chemicals, computers, agriculture products, which I will note already have previous tariffs on them from 2018 during President Trump's first term, and also
chemicals. So what we're importing from China. Oh, exports to China? Top exports to China? I don't even think that this chart is right. All right, let's continue on with the I'm not sure if their chart is labeled.
Retaliatory tariffs that went into place in March. So an escalation on that front. You also see there that's going to impact transportation and oil and gas coming out of the United States. But worth noting, though, that we, the U.S., get a lot more from China than we send them. We get about $438 billion worth of goods every single year. And that now also, because of what President Trump put in place, has a 34% tariff on those goods. Economists agree, well, that those prices,
So let's get this straight. So tariffs on China is going to hurt China more than tariffs on our goods to China.
Get passed down to us, the U.S. consumers.
As we prepare to chat about what the markets are doing, Donald Trump is actually on social media calling out China and saying that they played it wrong, quote, and that they panicked in response to his tariffs. But, you know, all of this obviously ended in the global stock market.
Trump, and I know that I have an international audience that watches too. So in the United States, there's something called the game of chicken, all right? And what you do is like you back in the good old days, we'd be on our bikes
all right? Bicycles. And you'd have one person riding their bike towards you, and you would be riding your bike towards them. And the game of chicken is to see who swerves first, all right? That's what Trump's doing. He's playing the game of chicken with President Xi to see who swerves first. Now, it behooves China to swerve. Why? Because they export more to us than we do to them. So whatever they do to us is not going to be as such a ramification to our economy compared to an already flailing economy in China. And President Xi has problems with his regime with the CCP. There's rumblings of an overthrow. So there's a bigger dynamic going on. It's not just the economic. It's the instability of the actual political power of President Xi.
It's that China announcement just
and I think the message we just had from the President of the United States just goes to show there is a lot of ego involved, and you do question how far tit for tat goes. Looking at global markets, let's have a check in. Dow Jones is down, I think it was 1,100 points so far today. It was down 1,600 yesterday. And we're seeing the steepest losses in stocks like Apple, Qualcomm, Tesla, Caterpillar.
All right, right now the Dow is down 1,493. S&P 500 is down 225.
Is with big exposure to China. So you're starting to see some real pain for big American companies. And of course, that will impact portfolios for all sorts of investors and consumers, your average person in the United States. So we have the pain there. We're having steep losses in Europe.
But they always talk about the consumer, but they never talk about the producer. The person that's working, all right, that actually has a job and makes something, all right? They're always saying, this is bad for the consumer. But if you bring back jobs like textile industry, like the fashion business, and you have these kids that are coming out of FIT, the Fashion Institute and Technology in New York, and other design houses, schools, don't you think those individuals, those young Gen Y, Gen Z, millennial, whatever they are, all right, now they have jobs to apply their degree and build businesses and build up an economic cluster? That's the point that Trump's making. And that's something I've been saying for since NAFTA started, for 35 years. You ship the jobs away from America. What happens is the economic clustering starts to die. And then what happens is the future generations that are coming out of college don't have good paying jobs, so they can't do family formation because they're not making enough, and they can't purchase homes because it's out of their reach. But if you have good paying jobs and you have more economic clustering, then you have family creation and you have equity. You're building equity, especially in homes at young. So the baby boomers, when they got out of college, they bought their first home. When the Gen Xers got out of college, they bought their first home. Gen Y, Gen Z, millennials, they can't do that. You know why? Because the jobs aren't there.
Well, no retaliation from Europe yet. We're expecting to see more retaliation from other nations next week once all of this has been processed. But, we saw Xetra DAX down around 4% before I came on air, FTSE 100, similar sort of levels, and the CAC. And that follows on from steep losses in Asia. So really another day of absolutely steep losses across the board.
And I think at times like these, when many are wondering,
steep losses, the consumer is going to hurt. Your savings just went down and your costs of goods are going to go up because the Trump tariff. This is a time to actually pull up your pants, all right? Be an adult. Don't bet against America. Move forward. Buy into the market. Get that dollar cost averaging going. So when the market starts to go back up and surpasses 6,000, you're going to actually make a really nice profit. On top of that, by
not buying foreign goods and buying American in the long run is going to be better for America. Take the pain, stop worrying about cheap spatulas at Walmart, and start supporting American businesses.
What qualifies as a stock market crash? And are we getting anywhere close to that?
I was having this conversation with my team. When is it a plunge? When is it a tank? And when is it a crash? You'd be thrilled to know we're nowhere near a crash yet. We have been tiptoeing towards a tank in some markets, for instance, the GETTR DAX and the FTSE MIB in Italy, which is down more than 5%. We're not at a crash yet. But you have to consider the losses we've also had, not just today and yesterday, but in recent weeks and recent months, as all the uncertainty, all the threats of tariffs has added up and really taken, we're talking billions of dollars off stock markets.
High probability that the S&P 500 is going to break 5,000. And the support level is going to be 4,810. I just told you where it's going to bottom out.
Looking at today, I had a note from Deutsche Bank that said the market is doing one thing, pricing in a global recession. And if this remains the way things are going, and if we see more retaliation, that is where we are headed.
Yeah, is there any way to avoid that at this point? Has the rot set in? Would there be anything that could reverse the markets in that direction at this point?
Negotiation and the US president backing down at this stage.
All right.
Wrong. Once again, CNN gets it wrong. CIA gets it wrong. What's going to help the market, stock market, is our trading partners bringing down their tariffs. In a perfect world, nobody has tariffs. Nobody has subsidies. That would be real free trade. But we've never had real free trade, ever. In just human history. Never. Or the Federal Reserve lowers rates. And that's going to be an impetus for institutional investors to buy into the market. Now, it would be a bad idea long term if the Federal Reserve decided to lower interest rates right now, because unemployment rate's below 5% and inflation's above 2%. And I've been saying that for months, but of course, Trump wants the Federal Reserve to lower rates, and that's a bad idea. That's where Trump gets it wrong.
Well, we have a panel of economists here to dissect this. CNN analyst Rana Faruher is in New York, and economics professor Harjun Chang joins us from London. Right. Great to see you.
Now, we're playing this, off the cuff. I've never seen this video. I have no idea what they're going to say, but I have a feeling because they're on CNN, they'll get it wrong.
Both. Rana, I want to go to you first because we were talking about Donald Trump being on social media there. Well, he's also been mentioning a couple of other things that I want to raise. He's been saying in the past now that his policies will never change and that this is a great time to get rich, richer than ever before. What do you make of those comments in this moment of chaos?
That's a New Yorker saying, don't bet against America, buy into the market, dollar cost average, so when it does recover, you're going to have 20% return. That's what it means.
There's two ways to look at this. The first way, and the scarier way, frankly, is that he's just shooting from the hip. There really is no global strategy here. And this is Donald Trump and his
Really? Shooting from the hip. He's been saying this since 1980.
Just spoken about, and I think that you can make a strong case about that. He doesn't, assuming there's no coup in the U.S., he doesn't have a chance to get reelected, and so he may be less concerned about global markets this time around and U.S. stock markets than he was before. It may be about power and ego. The other
this is all conjecture. What is she has a psychology degree too? The guy for the last 4 decades has been saying that America has been selling itself down the river, and the globalists are the ones that are going to benefit from it, and not the middle class. Trump is more middle, even though he's a billionaire, he's more middle class than most middle class people.
is a strategy here, Case, is that he really feels, and I know many on his team feel, that the global trading system has needed an overhaul for some time. He wants to move overall tariff rates that the U.S. puts on other countries versus what they put on us closer together. Of course, that's now all been thrown up because we're in a complete trade war. I don't think these numbers are going to last.
She prefers the status quo. That it's okay for China to have a tariff on our goods, but we can't have tariffs on their goods. Oh, it's okay for Mexico to have tariffs on our goods, but not U.S. on Mexico goods. It's okay for Canada to have tariffs on American goods, but not America having tariffs on Canadian goods. A.
Trading, there already is some horse trading behind the scenes. But it is, what I can say is that I think there's now a very good chance of recession, in part because trust has been obliterated. I also think we're in unprecedented territory. This is the biggest shift potentially to the global economic system that we've seen in half a century.
Now, listen to me, and I said this yesterday. Listen really carefully. This is like the most important concept from a contemporary point of view. The United States revolution is rekindling, but it's not going to be through muskets and smoky battlefields and a general on a white horse. It's going to be economic. And if you paid attention to my shows with John Hogue, we've been talking about how the United States is entering its 250th year. And that cycle coincides with the Pluto revolving around the sun. The United States is tied to Pluto. Our birth is tied to this cycle around the sun, all right? I don't understand the metaphysics of it, but it just is, all right? Something could be true and you just don't understand it, all right? But the thing is that we just entered a new cycle. And that new cycle is a rebirth of a revolutionary concept. Now, let's go back to the 1770s, 74, 76. All right? What happened? The colonists at the time didn't like being taxed because of the stamp tax. And the monarchy, the King of England, thought it was a good idea to keep on taxing the colonies. And so what happened was it slowly turned into a revolution. Some people wanted to stay with the monarchy. Some people wanted to leave the monarchy. But eventually push came to shove and we went to war with muskets and smoky battlefields and a general on a white horse. Today, we have a similar problem. Globalization is fucking America. Globalization is the analog to a monarchy that was happening in 1776. And we had to fight that. And we are fighting this global order, just like there was a global order back in 1776 through England, to make sure that we have life, liberty, and the pursuit of happiness. That's what is at stake here. And these talking heads aren't smart enough to see it.
On that point, Taj.
The investment landscape for asset managers is evolving and more complex than ever. You're facing...
Yeah, and on that point, Tajin.
So in parting, we are in a new revolution. And that revolution is to make sure that our economic, military, and governing prowess is maintained.
as we transition into this new 250-year cycle. Don't bet against America.
About. I mean, even if markets do recover a little bit, we do see these moves to negotiate. How irreparable is the damage that has been wreaked on economies globally at this stage?
Yes, last few days I've been trying to figure out whether there's some method in madness. I concluded that the method is wishful thinking. Because
these two economists are so smart, they just can't see the real emergent reality that's happening here. I'm telling you, America is in a new revolution here. It's a different type of revolution, but we're in a revolution. And they're not smart enough. They're no different. They're no different. They're no different than the ones that were supporting the Redcoats back in 1776. They're no different. They want the global order. They don't want life, liberty, and the pursuit of happiness and self-determination. They want everyone to get plugged in to a world order that you must obey, which is the global Egypt.
Carry forward, foreign companies will first of all come and invest. They are not really going to do that on any significant scale because the U.S. industrial base has been run down for the last 4 decades, and you cannot rebuild it in a few years. Moreover, if they actually
don't bet against America. Not only that, the difference between four decades ago and now is a lot of automation. And when you bring back jobs, economic clustering happens, and economic clustering can happen very quickly. Especially when you have a very strong financial market system that can help fund that growth. But let's see what this clown has to say, research professor of economics.
In a major way, there'll be no tariff, yeah? So he cannot have his cake and eat it. As for American companies,
did China have tariffs first on American goods? Yeah.
Not going to invest on any large scale because the American financial system in the last few decades have become really parasitic and has been working as a mechanism to suck out the profit from corporations. So in the last 25 years, 90 to 95% of corporate profits have been given to the shareholders in the form of excessively high dividends and stock.
I agree with that. I agree with that. Globalization is about the shareholders, about the transnational capitalists, about the multinational corporations. It's not about the middle class. The middle class gets a little bit of benefit by cheaper goods. But over time, your economy keeps on weakening and weakening and weakening. And not only does it weaken the economy, it weakens the military prowess. And guess what? When Taiwan gets invaded by China, America better have a military prowess, especially with its navy.
Companies do not have money to invest. So unless he does something about the financial system as well, all this extra profit generated for American companies by tariffs will be just leaking out of the system. So I'm afraid that it's all based on wishful thinking.
No, what's going to happen is there's economic clustering. See, these people don't see the economic clustering. You know why? Because I saw it in Michigan with the automotive industry. When you start shipping tool and die to Canada, Windsor, Canada, it destroyed the economic clustering in Michigan. That's why I am 100% right on this. I have seen it happen. Instead of these theoretical bullshitters on CNN.
most critically, in the last couple of days, the United States has basically given up on being a country based on the rule of law. South Korea, my native country.
Oh, rule of law. Rule of law. Why do other countries have tariffs? Is that okay? Remember, where did this all start? Those countries have tariffs on American goods. And Trump is trying to even the playing field by creating tariff barriers and reducing that arbitrage, labor arbitrage. But none of these people say this. They don't say it on CNN. They don't say it on Bloomberg. They don't say it. But that's what exactly is happening.
Free trade agreement with the United States about 15, 20 years ago. And now that
we had a free trade agreement, but we're in that free trade agreement, there was an agreement that we're going to have tariffs and to protect some industries, at the, for China or for South Korea or for whoever. And the problem we had is that we had these trade agreements by presidents that were weak. And not only that, they were listening to K Street and the multinational corporations. The multinational corporations basically did this. Oh, I have some goods that I can sell to South Korea. President, make a trade agreement so I can sell my good. Maybe it's agriculture, maybe it's something else, to South Korea. Oh, the president goes, well, we want to sell this particular good in South Korea, but the South Koreans say they'll buy it, but they want to sell something to us. Okay, all right. But all their products to protect the South Korean market are going to will have a tariff to protect manufacturers within South Korea. So you have a stupid president that agrees to this stupid idea, and then they package it up, put a bow on it, and say it's free trade. And there's nothing about it that's free trade. It's a bad deal. That's what happened. And that's why Trump keeps on complaining about it. Because you had a bunch of presidents that were weak and that were being coached by K Street and these multinational corporations. So they would benefit from selling some goods, but it would hurt in other industries in the long run. And you play this out for 4 decades, and guess what? We have had a gutted economy where the younger generation, when they get out of high school or out of college, cannot afford to live.
So now who's going to take American commitment seriously?
Yeah, in many ways, it's a realignment of world order that's happening here.
Realignment of world order. But that world order was to weaken America. Well, like I said, we're starting a new 250-year cycle. We're in a new revolution. Don't bet against America. And that revolution is life, liberty, and the pursuit of happiness against a global world order.
China's Vice Commerce Minister come out earlier and say he wants to work with the EU to oppose protectionism, unilateral bullying. I mean, how expansive are the moves we're going to see here for realignment globally among trading blocs?
Huge. It's going to be huge. And it really is an opportunity for China. It's kind of, in some ways, it's China's game to lose now. And it'll be very interesting to see how Xi Jinping and how Beijing plays this. I would be a little bit skeptical about whether you're going to see some kind of complete new alliance between China and Europe, because what's going to happen now is that a lot of cheap Chinese goods are going to flood into Europe because they can no longer flood into the US. And are the Europeans going to like that? No, they're not. So this is where you start to get into that cascading sense of, oh boy,
we really are in a global trade war here. Now, if the Chinese were to suddenly say, you know what, we're going to acknowledge that we've been dumping cheap steel, cheap EVs, cheap solar panels onto the world, and guess what, Europe, we are going to cut a new and more productive paradigm with you. Well, that would be very interesting. And in that sense, then Donald Trump may have made Europe great again.
I'll tell you, I am so sick and tired. I am so sick and tired of these talking heads on these programs. They're just idiots. Please go to my store, the-studio-reykjavik.com, and help your immune system out. But let me tell you this great stack, okay? Magnesium and zinc boosts up your immune system. Take it every day. If you're not feeling well, take a double dose. Take one dose in the morning, take another dose in the evening, and then go back to your maintenance dose when you feel better. All right? Magnesium and zinc, really important. But also vitamin C and magnesium. This will boost up your immune system. Take them together, and that will supercharge your immune system. Magnesium is important also for your brain health. Really important. All right? So take these together. And when you take the magnesium and zinc and or the vitamin C and magnesium with the D3, D3 will have higher efficacy. It will perform better to absorb calcium. All right? So you should be boosting up your immune system with the magnesium and zinc and the vitamin C and magnesium together. Boost that immune system, and it's also going to help to absorb calcium when you take the D3. All right? Boost up that immune system. Really important. Now, vitamin C also helps with your skin. So it's a dual purpose. So you're helping with your brain health, you're helping with your skin, and you're helping with your immune system. Please go to my store, the-studio-reykjavik.com. Get the vitamin C and magnesium and the magnesium and zinc. The magnesium and zinc has a higher concentration of magnesium, but you should be taking both of them together. You can also get the magnesium in my Boomer Boost product. There's magnesium in there, but there's a plethora of other supplements in the Boomer Boost powder. So go to my store, the-studio-reykjavik.com. Get the magnesium, zinc, and the vitamin C and magnesium. Get them together. Really important. Use discount 5, and you get $5 off. If you spend more than $150, if you spend $150 or more, I should say, if you spend $150 or more, you will get a free gift until supplies last. Use discount 5, and you get $5 off. In addition, if you get an anti-aging box or a longevity box on my store, that's with a built-in discount. And you can apply the discount 5 on top of it when you compare it to purchasing the products individually. So I've tried to do all these different price points and stack these things in so many different ways so you can get these great products in your hand, use them, and follow my direction with the stacking and to improve your health. It's a holistic approach. It's not just about proper supplementation. It's also about proper exercise, diet, filtering your water, staying away from processed foods, mindfulness, learning new things, and the 4 modalities of exercise: cardio, resistance training, balancing, and stretching. Really important. Proper sleep is also very important for your health. Please go to my store, the-studio-reykjavik.com. Get the supplements. Boost up your health. All right, let's go to Bloomberg because, according to Hochul, Trump's tariffs are hurting the New York economy. Meanwhile, you have these gangs that are stealing everything from the store. But that's not hurting the economy. No, of course not. It's only Trump. Another dipshit.
New Yorker will have $6,000 less in their pockets because of these tariffs. And that's an opinion by a number of economists. I have a budget I'm negotiating right now that puts
people being taxed. Getting into Manhattan is going to have anywhere from $2,000 to $3,000 less in their pocket because of the congestion tax.
Right out with the $6,000 they're going to lose because of tariffs. So I'll keep fighting. I'll keep doing what I can.
Oh yeah, you keep on fighting. You keep on fighting. You'll keep on fighting, but you'll raise tax. You'll put taxes on New Yorkers. You just keep on fighting. She's an idiot.
Because I want to make sure high net worth people know we appreciate them, and I don't want to drive them out of our state. So that's my view. But
does it
we have
increase the
less
urgency
revenue
behind
coming in.
extending the Trump tax cuts and eliminating the SALT cap? Because a lot of Republican members of Congress in your state are working to do that now.
Well, they better be successful. We want to make sure that the SALT deduction, state and local tax deduction, is brought back 100%. Absolutely. And I have 7 Republican members of Congress. You better win on this one because you promised your voters you would.
That's the governor of New York, Kathy Hochul, speaking with us late yesterday, late edition of Balance of Power, with her eyes on tariffs. This is, of course, before we walked into the news today, before we heard from Jay Powell with another leg lower here on Wall Street.
Tariffs bad, but congestion pricing's good. Funny how that works.
As we also watch the price of oil fall precipitously over the past several sessions here. Crude oil futures, West Texas Intermediate, now below $62 a barrel. WTI down 8%. And when we see a drop like that, we tend to reach out to Mr. McGlone, who joins us right now from Miami, covering commodities for us at Bloomberg Intelligence. Mike McGlone. And I know if I'm talking to you, Mike, twice in 24 hours, something is not going well here. We had the OPEC story, but it looks like the tariffs are really driving the price here, no?
Yes, well, at least it's going the right way for consumers. And the commodity traders don't really like when prices drop, but this is great for consumers. And it's an indicative of what's happening in this country. We have a massive glut, an excessive glut of crude oil and liquid fuels, and the market's going that way. So the average cost of production to produce crude oil in this country, according to Bloomberg New Energy Finance, is around $50 a barrel. We're going to that level. It's just a question of time. And now we have a decent catalyst to get there. The stock market going down was just one of those things that helped push it lower. It's a key thing, as I have to say, Joe, is those who have listened to me before, I've been saying this for 2 years, and I think it's eventually not going to bottom until it gets to below 40 or around 40, which is what it's done for the last 20 years. Yeah.
What does that mean for gas prices this summer?
Exactly. So this summer, no, gas prices are up a little bit now because it's a seasonal thing. But by the time we get to midterms next year, I think gas prices are more likely to be around $2 a gallon versus closer to about $3.25 right now. It's just a normal cycle. So the last 20 years, gas has always bottomed around 4 or lower after it goes above, bottom around 2 or lower after it goes above 4. And same thing in crude oil. Every time it gets above 100, it usually bottoms around 40. The thing that's changed from the past is most of the time in the past, U.S. was a net importer. Now we're a pretty significant, massive net exporter, and our new government is just going to increase and continue to do that. So we have a glut. We have to export it. That's the same thing in some of the grains. That's why those prices are low. We have to export. If there's a trade war on it, pressures those commodity prices. So it's very good for deflationary forces.
Can you drill, baby, drill, and even increase production when you've got $50 a barrel?
Well, that's the key thing. We're not there yet, but what we've been seeing for years now in the futures curve, it's called normal backwardization. In the futures curve, you can see prices are lower in the future. They used to say that's bullish, but now what I think it's showing is those producers are selling forward and hedging a bit of their production. And right now, it's still a good sign. But the key thing is for the last 10, 20 years or so, to really shut off that trajectory of U.S. production increasing versus consumption, is that prices have to go down. And it's a force of price. And for now, the prices are still sufficient for us to produce more than we consume and for prices to continue to get to that level. That's what I call it. And the grain people call it the low price cure. We're heading towards that low price cure, and it's just a matter of time I think we get there.
Normal backwardization. I feel like you're describing the way my brain works or something there, Mike. I like that. Did you come up with that?
No, I think Maynard Keynes wrote about that about 100 years ago. Right? It's a concept in futures that switch back and forth.
Yeah. I always love talking to you, Mike. I appreciate it. What a week for crude. We didn't even get to gold, which is also lower today as this global sell-off
As they're going to commercial, please go to my store, the-studio-reykjavik.com, and get this stack that I'm going to be mentioning that helps your immune system and your cardiovascular system. Turmeric soaks up free radicals because it's an antioxidant. It also brings down inflammation. If you bring down inflammation at the vascular level and systemically, you're going to help with your immune system and your vascular system. So
Turmeric is a great supplement to take. Stack it for the max benefit with ashwagandha root. Now, ashwagandha root will bring down cortisol levels. It'll also bring down blood glucose levels. High cortisol levels chronically and elevated glucose levels will cause inflammation at the systemic level and also at the vascular level. So if you have high inflammation at the vascular level, you're increasing your chances of building up plaque. You don't want that. And with high levels of inflammation at the systemic level, you're suppressing your immune system. So you want to bring down that inflammation, boost up your immune system, and reduce the chances of building up plaque. Take ashwagandha and turmeric together, stack them, help with your immune system and your cardiovascular system. Please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order. If you spend $150 or more on my store, then what's going to happen is you're going to get a free gift until supplies last. It behooves you to purchase $150 or more on my store. So please go to my store, get those anti-aging boxes, get those longevity boxes, get these stacks that I tell you, use discount 5 and get $5 off. All righty. All right, let's go to Stephen Miller that was interviewed last night.
Wix, one platform, any website, unlimited creation. Describe your needs and goals.
Joining me now is Stephen Miller, White House Deputy Chief of Policy, Deputy Chief of Staff, Chief of Policy. Stephen, the president today said that he was open to negotiations on tariffs if other countries offered something phenomenal. Explain that a little more.
Well, let me address what you talked about in your monologue, which is so important. What is globalization? What is this economic policy that our elites in the United States, so-called elites, have had for the last half century, Democrat and Republican? Globalization is the redistribution of American wealth to foreign countries. It is a formal policy of trying to develop foreign nations at the expense of the U.S. working and middle class. Trillions of dollars that would be in the pockets of American workers is now in China, Cambodia, Vietnam, Thailand, Canada, Mexico, all across Africa, all across Asia. It is the great theft of American prosperity. Prosperity that was won through our victory in multiple wars. We left World War II as the dominant economic unipolar superpower. And instead, over the ensuing decades, all of that wealth, all of that manufacturing, all of that industry was ripped apart by our elites, shipped to foreign countries, and then they sent us the bill. They said, you have to protect Korea, you have to protect Europe, you have to protect Canada, you have to protect Japan. We won't take your cars, we won't take your agriculture, we'll take away your steel industry, your aluminum industry, your copper industry, your electronics industry. All of the national industries that you need to be secure and successful as a country. So what President Trump is saying is, these are the injustices you have to remedy. This isn't just about moving around some lines on a ledger. This is about remedying the systemic injustice that says the streets of America are filled with European cars and Japanese cars, but the streets of Europe and Japan have no American cars. This is about saying that the American steel industry, which once built and sustained the modern world and is now a former husk of itself, coming back now thanks to Trump's tariffs, has to be completely revitalized.
Stephen, you know, I've been on this since the Pitchfork Pat Buchanan days of 1992. So I'm with you on all of this. Nevertheless, you have to deal with the Republicans on Capitol Hill, who some of them were sounding a little bit wobbly today. I saw some comments from Ted Cruz, and others he'll say, well, you know, we'll wait and see how it goes. But and also the Senate voted last night 51-48 to reject the president's national emergency to declare, you know, Canada basically a trade violator and slapping tariffs on Canadian imports. So your reaction to that, and ultimately it won't stop the Canadian tariffs because Johnson's not going to let that go through the House. But are you concerned that if this market doesn't come back in the next, I don't know how many months, that you're going to start seeing some of these more establishment Republicans or so-called fiscal conservatives really make life miserable for Donald Trump?
No, I'm not worried about that. I mean, for example, Speaker Mike Johnson, Leader John Thune, they are rock solid behind the president on the reshoring of our industrial supply chains. And if you want to talk about fiscal conservatism, this country, if you read the Constitution, it was founded economically on the idea of import taxes, of levies and duties on foreign imports into the United States. The income tax didn't exist in the 18th century or the 19th century. Woodrow Wilson gave us the income tax, and that's when we shifted from a policy of taxing foreign countries to taxing domestic industry. So President Trump is bringing back the historic platform of the Republican Party and the historic view of our founders that revenues to our treasury should be powered by taxing foreign imports, not taxing domestic industry. This will help us balance the budget. I would also say that a lot of the senators and House members that are perhaps not historically understanding of the importance of domestic manufacturing will understand the national security issue that is at the center of this. We cannot have China controlling our national destiny. We cannot have foreign countries deciding whether we have a steel industry, a copper industry, a timber industry. We cannot have a situation where we are dependent on foreign countries for the medicine that heals us, the steel that strengthens us, the industry and commerce that powers us and keeps us safe. And so President Trump is saying that he will be the president that makes us economically secure and that makes us no longer dependent and reliant on foreign nations, including foreign adversaries. If we don't do this, Laura, it's not only that the American dream will die, it is a guarantee if we don't do this, that one day the lights will get shut off on America. Someone will embargo a foreign product, somebody will start a war, somebody will start a conflict, and they will shut the lights out on America because we don't have our manufacturing independence. This isn't a choice.
All right.
This is a matter of economic and national survival.
Stephen, always great to have you on. We're going to be watching this very closely in the weeks and months ahead. Thank you so much.
Hey, Sean Hannity here. Hey, click here to subscribe to Fox News YouTube page and catch our hottest interviews and most compelling analysis. You will not get it anywhere else.
Stop letting handover be a headache. With Kahua's asset-centric approach, you gather accurate asset data as you build. So when it's time to hand over, you're ready. Kahua, build with the end in mind.
Today, I'm treating people to a healthy meal on the go, though they'd never guess where it came from.
That's pretty good right there. There's like vibrant flavors.
The first bite is really good. It's very flavorful.
Very delicious. Very fresh. I'm surprised.
Now, would you believe me if I told you everything you just ate came from a vending machine?
No.
Yeah.
Not possible.
It's too fresh to be a vending machine. No.
I think it's up there with a restaurant.
Don't take our word for it. Try it and taste it for yourself. Farmer's Fridge. Good to go.
Spirits. It is now selling for $474. The IPOs are dropping. The stocks, of course, are dropping. Bonds are holding up right now, as we discussed with Edward a little while ago, but it's anyone's guess how long that will last. After Jay Powell told us they're in no hurry to cut rates. That's when things really turn south here. We brought you live commentary from the chairman of the Federal Reserve codifying the idea of tariffs leading to inflation, and it is changing the outlook at the Fed in his prepared remarks before they even got to questions. Jay Powell talking about risks of higher unemployment, higher inflation, now elevated, tariffs likely to raise inflation in the coming quarters, tariffs likely, the economic impact of tariffs likely larger than expected. And then the cherry on top, feels like we don't have to be in a hurry. We've got time. So if you're betting on rate cuts, that may not be working out too well either. And that's where we start our conversation with our signature panel. Rick Davis is here, partner Stone Court Capital, Republican strategist, and Jeannie Shanzano, senior democracy fellow with the Center for the Study of the Presidency and Congress, Bloomberg Politics contributors. Rick, I remember a period of time that, of course, helped to inform your view on things here when you were helping to run the McCain campaign for president in 2007. And it was your decision to bring the campaign to a halt because of what was happening in the economy. This was the beginning of the Great Recession. And we thought we were on the precipice of something much worse. And I think you could probably argue that we were. You went to the White House, where President George W. Bush was still in office, and you put together a meeting to help prevent the end of the economic world order as we knew it. Are we at another point in time like that today?
You know, I think you alluded to it. I don't think it's as extreme as that. You know, these were global structures. Banks were failing. The stock market went down substantially more than it has already gone down since the trade regimes went into effect over the last couple months. But it was more functional, right? It reached into every aspect of the financial network that existed in the world. And so, it was bad, and it had horrific political ramifications for the party in power, Republicans. And I know there are a lot of comparisons being made now. We have yet to see the bottom. We now know where the great financial crisis ended and how we recovered from that. I'm not exactly sure we know where the end is as these countries like China retaliate with their own trade barriers, and other countries likely will follow. So I think we're just at the very beginning of a global trade war that, as of today, wouldn't be as bad as the great financial crisis, but as it continues, has maybe the potential to become as bad as that.
Jeannie, I'm sure you're looking at what Donald Trump is writing on Truth Social today. There have been a lot of posts, but the one that stands out to me in this conversation, he writes to the many investors coming into the United States and investing massive amounts of money. This is all caps lock. My policies will never change. I think he was trying to say that as a good thing, saying, hey, if you come here, you can rest assured that we're not going to turn on you. But saying at this moment, when the market is in free fall, my policies will never change, tells you what?
Well, he followed that up a few hours later with a similarly bombastic notion that he would be willing to negotiate, whether it pertains to Cambodia. And then yesterday he mentioned, hey, maybe we can negotiate with China as it pertains to TikTok. And I think that is part of the problem here. Unlike the example you were talking to Rick about in 2008, this is a self-inflicted wound. The president told us he was going to do this, and he did it. And the question now is why? And the administration cannot answer the why question. At times it's about negotiation. We're going to negotiate. Okay, many people are willing to accept that. At times it's because we want to even the playing field. That's not going to happen with companies, or rather countries like Bangladesh. We're never going to even that playing field. Other times it's to bring us back to the beautiful days of manufacturing in the U.S., reshoring here. All of those are fantastical ideas. They may be understandable. We'd all like more manufacturing here, but they're not going to happen in the short term. And so until the administration and the president can say why he's done this and inflicted this chaos around the world, that this is going to remain a problem. And that basic question, why, Mr. President, why are you doing this? He has been unable to give us an answer.
The IPOs are dropping like flies, Rick. Integrity, I think I butchered that before. Chime Financial, MNTN, StubHub. What was the other one we had? Klarna. How many of these do we need before Donald Trump looks at this a little bit differently? Or am I just asking the wrong question here? He's not looking at this at all.
Well, he's got to be looking at it. And I know that a number of his advisors are trying to think through ways to try and mitigate the economic impact dislocation here in the United States. But as Jeannie said, it's really a function of their own doing. There weren't there weren't any advisors I know who thought this wouldn't happen, right? In other words, everybody expected markets to react negatively to this kind of approach. And the fact that it wasn't sort of walked out early and tested and people could get used to it and run models against it before it was actually implemented, I think is really the biggest issue. By just surprising people on the eve of implementation, there were so many ramifications to consumers and to financial organizations and to corporations that use trade as a mechanism that nobody could be ready for it. And even though he warned us that this was going to happen, I think it's still very much a shock, and still people are reeling with the idea of how long is this going to take to normalize, if it ever does, and what cost is it going to be to them? Can they survive it in the process?
Well, of course, Donald Trump would say, hold on, Jeannie. You're looking at the wrong post on Truth Social. This is, I think, what the White House would call progress. This would be qualified as my plan is working. Just had a very productive call. By the way, none of these in caps. Just had a very productive call with To Lam, General Secretary of the Communist Party of Vietnam, who told me Vietnam wants to cut their tariffs down to zero if they are able to make an agreement with the U.S. I thanked him on behalf of our country. What happens, Jeannie, if we get a dozen more of these over the weekend? And the S&P 500's up 5% on Monday. Is that also possible?
It certainly is possible. I mean, none of us can read the future, and that gets back to what I was saying. If he's using this as a negotiating tool, many members of Congress, particularly on the Republican side, they are open to that. And they're saying exactly that this conversation with the leaders, whether of Vietnam, Cambodia, that absolutely makes sense. But the reality is there are many countries on this list. We are never going to have, we will always run a trade deficit, because in return for that, we have gotten cheaper and better goods from them. That's the way this has worked. But yes, if it's a negotiating tool, that's fine. Why a few hours ago, though, did he say he will never change his policy? And this gets me back to the goal. When we do something in public policy and it impacts so many people's lives, tell us why you're doing it and what the timeline is roughly and what the end game is. And we haven't gotten any of that clarity from the president. We know he's committed to this. We don't know how, we don't know why, and we don't know what the end run is here. And in the meantime, the pain is very real. And we have a right as Americans to say, is this pain worth the end goal? It's hard to answer that if you don't know what the end goal is.
Rick, JP Morgan analysts are hiking their forecast for a recession to 60%, up from 40% after the announcement this week at the White House. Is there an equation or a model that you can use as a political practitioner to see what that means for Donald Trump? If we go into a recession this year, what does that mean for midterms? What does that mean for favorability ratings, right track, wrong track, etc.?
Yeah, well, I mean, I experienced a similar situation, and as you remarked, the 2008 presidential campaign, voters took it out on a party. They didn't take it out on an individual. The Bush administration was ultimately responsible, and yet it reflected on our campaign and John McCain's, winnability. We went from being 5 points up to 5 points down in 1 week following the 2016 or 2008 crisis, and yet Republicans lost even substantially more. Think about it. We had historic losses in the House and the Senate. And I think the way to look at it is right off of what we experienced this week. We saw that House races in Florida that Donald Trump won by 30% still stayed Republican, but they stayed Republican by half that amount. If you look at every Republican in the country who won in a Trump district where Trump won by a dozen points or less, you're talking about 40 members of Congress who could be at risk today for re-election. I mean, that is a significant rewrite of midterm strategy versus, Republicans in a +3 district might be vulnerable. So as you see the public sentiment turn against the Republican Party for what they would perceive as fiscal mismanagement, you have to start moving that window out of the number of members that might be at risk.
Rick Davis and Jeannie Shanzano, quite a conversation on the Friday edition of Balance of Power. Thank you both. This is Bloomberg.
All right. Let's do another product plug here before we go to the next video here. Please go to my store, the-studio-reykjavik.com, and help support my work and your health by getting this great stack that helps with your bone density and your cardiovascular health. So taking K2 and D3 together, do some resistance training, taking calcium or drink milk. Drinking milk or calcium supplements is a great way. I drink milk to get my calcium. But taking the K2 and the D3 together with that calcium and doing resistance training is going to help build bone density, especially if you're producing vibration through your bones. All right. So for your legs and your hip, in your back, a great way to do it is to lift your body off your toes and then have your heel come down onto the ground, and you'll get that vibration. Do that about 50 times a day. And that vibration will stimulate the osteoblasts and deposit more bone. All right. But you need to take the K2 and the D3 together. You get more efficacy out of D3 if you take the magnesium that I have on my store. I showed it earlier. You can take the magnesium zinc and the vitamin C magnesium with the D3 and the K2 and do this resistance training, and that will speed up the bone density. All right. Now, doing jumping jacks, doing jump rope will also help get that vibration in your body to stimulate bone density. Really important. But D3 and K2 also helps to pull out some of the plaque formation, calcium plaque formation in your vascular system and reduce the chances of further calcium depositing. So you want to take this for also cardiovascular health. In addition, taking nattokinase will help to break up clots because it's fibrinolytic, and it'll help with your total cholesterol. It'll help to bring down LDL levels and increase your HDL levels. That's important because with less LDL, you have less oxidized LDL leading to plaque formation. You need inflammation, oxidized LDL to build up plaque. So if you have less LDL, you have less free radicals, you have less inflammation, you're reducing the chances of building up plaque. So take the stack, the K2, the D3, and the nattokinase to help with your vascular system and your bone density. Again, D3 works better if you take it with magnesium. You can get that from my store, magnesium and zinc, and the vitamin C and magnesium. So that's a great way to stack this. If you spend more than $150 or more on my store, then you will get a free gift. I'm not going to tell you what it is until supplies last. So please take advantage of that free gift by spending $150 or more on my store. You can use discount 5 and you get $5 off. And if you purchase a anti-aging box or a longevity box, it has a built-in discount. You'll save money and target different systems. So I've created a lot of different ways for you to get these products in your hand. So please go to my store, the-studio-reykjavik.com, get the nattokinase, the D3, the K2, stack them the way I'm telling you to stack them. Do these exercises, these simple exercises, to help with your bone density. Doing weight training will also help. But that vibration, getting the vibration in those bones are really important to help stimulate bone creation. Please go to my store, the-studio-reykjavik.com.
force into that country, and President Trump suggesting that he's not going to change his policies, that they are here to stay. Meantime, the Fed isn't signaling a change to policy anytime soon, as Chairman Powell reiterates that while tariffs may pose, in his words, a persistent inflationary risk, the Fed is still in no rush.
In no hurry to cut interest rates here, so we've got a bit of a quandary. It was interesting. We carried his remarks live right before the noon hour, Kaylee, and that's when markets really started to reach lower. Jay Powell not making anybody feel better on what is jobs day. Payrolls came in hotter than expected. In any other world, this would be our top story today.
Yeah, and we're going to have more on the payrolls, but everything else that is driving markets today from the White House. Just moments from now, we'll be joined by the chair of the Council of Economic Advisors, Stephen Myron. But first, we do want to check in on the market activity as we close out the trading week here on a sour note. Charlie Pellet has a look from New York. Hey, Charlie.
And I thank you very much, Kaylee and Joe. We are just about lows of the session on this Friday, on track for another losing week. It'll be the 6-week losses in the last 7. The Dow, the S&P.
All right, so the S&P 500 is trading at 5,132, and VIX is trading at 40 right now. Oil is trading at $61.92 for WTI. So, okay. Now, with the S&P 500, like I said, there's a support level, there's a structural support level at 5,150 or 5,120. Okay? Now, if trading closes below that, the next support level psychologically is the 5,000 mark for the S&P 500. Not very strong support level in terms of structure, the fib sequence structure. It's more of a psychological support level. The next support level that's structural, based on fib sequence, is 4,810. So it's really important that the S&P 500 closes above the 5,150 mark, or we have a higher probability of marching down below 5,000. Okay, so we got, and the intraday trading was 5,118. So we, it's possible that it happens. Who knows? I think that the algorithmic traders are going to be battling. All right, you got the ones that are shorting, trying to short it to try to push the S&P 500 below the 5,150 mark, and then you have the algorithmic traders that are buying the dip. So we'll see what happens. I would say, we're already at 1 o'clock. Markets close at 4. There's I would say more than a 50% chance that we're going to see below 5,150 at the close.
In spite of some headwinds that folks thought would be material headwinds, the president has acted very swiftly and forcefully to close the border and to prevent the surge of, and to stem the surge of illegal aliens coming into this country. And lots of folks said, oh, that'll be bad for job growth, right? That'll be bad for job creation. Well, this report proves that might not necessarily be the case. And so what the report shows is the economy is continuing to grow in spite of the president's variety of policies, and it's a good sign.
Mm-hmm. Well, but this report, Mr. Chairman, is by nature backward-looking. I think the concern financial markets have today is about the forward-looking picture and what the economy is actually going to look like in light of these severe tariffs that are being implemented starting tomorrow, the layoffs of federal workers that the Department of Government Efficiency is pursuing. How can you guarantee the labor market will hold up in the face of those challenges?
Yeah, thanks. So look, the president acted with historic scope and speed to address what was a decades-long festering problem that had been eroding our competitiveness and eroding our prosperity and eroding our economy. And so, of course, there's going to be some market volatility on the back of that. Of course, there's going to be some adjustments on the back of that. But on the end of it, things are going to be materially better. And I'll tell you why. Not only will the tariffs incent reindustrialization in America and companies coming back to build in America, but there's also 2 other legs to the stool that are of significant importance. There's the deregulatory agenda, and then there's the tax agenda. And both of those are profoundly stimulative for the economy. And one point that I like to make is that imports are only 14% of the economy. The other 86% of the economy is affected by the entirety of the agenda. And so that's tax and regulation, and both of those are going to be very important.
I'd like to ask you, Stephen, about the comments that we heard from Jay Powell a bit earlier today. The Fed chair had this to say about the impacts, the potential impacts of President Trump's tariff regime. Listen.
While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain.
Stephen, R. Edward Harrison writes that unless the labor market data deteriorate precipitously, the bond market is going to have to reverse some of its post-Liberation Day rally, taking stocks down further in the process. The jobs report today is bad news for stocks and bonds, he says, because we're not going to see lower interest rates anytime soon. And the chairman today suggesting that he is in no hurry, even as President Trump puts on Truth Social that this would be the perfect time to cut interest rates. What is your message to investors when it comes to rates here against the backdrop of tariffs?
Sure. So first, let me be clear that I'm not going to tell them what to do, but I will point out that we lived an experience of tariffs in 2018, 2019 during the president's first term, and there was zero macroeconomic evidence whatsoever that tariffs had any material inflationary impact. In fact, the Fed wound up cutting rates on that event. So I think it's important to understand.
But we're talking a different scope and scale now, Mr. Chairman. The tariffs from the last administration are nothing like what we're seeing now.
Yeah, the president has acted with historic scope and speed. I agree with that, but we also have to appreciate what's going to be happening on the tax and regulatory fronts. And I think that one of the most powerful things for determining the supply side of the economy is the regulatory environment. If prices are high and increasing because there's not enough stuff, the best way to address that is to make more stuff. That means getting government out of the way, letting firms invest, letting firms build, letting firms produce. And if you make more stuff, you can address not only inflationary pressures, but actually bring some prices down. And I think that that's powerful and arguably much more powerful than any effects of tariffs.
But what is the actual lag time between seeing a lesser regulatory burden, seeing tariffs that maybe would incentivize U.S. manufacturing to invest in that capacity, the lag time between the decision to do that and the actual capacity coming online and whatever employment or what have you will come with it? This isn't going to be an automatic thing, right, Mr. Chairman?
Yeah, thanks. So that's a great point, which is that, the regulatory process and taking away those regulations is a legal process, and that takes some time. And the president has made historic progress in the first 2 months peeling back regulations, but there's still so much work to do. And it'll take some time for us to get that through. And so that's, maybe this is part of why there's market volatility, because implementing the totality of our plans will take some time. Congress is working on the tax package as we speak. It will take some time to pass it. It will take some time to implement it.
We're hearing a lot of concerns about a recession. Money managers are pointing their trades toward a recessionary environment, and JP Morgan today increased odds for its recession forecast to 60%, up from 40%. Stephen, what are yours?
I'm not a professional forecaster, so I don't necessarily have odds. But what I will say is what I said a moment ago, which is that imports are only 14% of the economy. So you really have to think of, really, really huge, really enormous changes sort of shaking through those things to get to the place where you think a recession is likely as a result of something like this. And as I said before, I think that the president's pro-growth policies on the regulatory front, providing further tax relief to American families, extending the tax relief of his 2017 Tax Cuts and Jobs Act, I think all of that is profoundly supportive of growth. And I think there's maybe a little bit too much focus on risks from what's going on right now, and not enough focus on the pro-growth policies that are.
Well, we're certainly focused on Wall Street. I understood. I don't mean to interrupt, sir, but there's a great worry about the negative wealth effect. This market is in free fall right now. We could continue this next week unless there is some change.
Oh, it will. It will definitely continue next week, or if it does do a little bit of a relief in trading during the week, it's going to come back down. But like I said, right now the S&P 500 is trading at 5,130, and you have a support level of 5,150. So if it breaks that support level, there's a high probability that the S&P 500 is going to go to 5,000. So it's definitely, there's a high probability of going down.
In government adjacent sectors, and that's profoundly unsustainable to have the government gravy train driving the economy. In the March jobs report, that number came down from almost 75 in the last 2 years of the Biden administration to just about 40, right? So that's a very material decline, and this is part of reconfiguring the economy from a government-driven growth engine to a sustainable, durable private sector growth engine, and this is going to continue.
As we consider the growth outlook, keeping in mind that you did just tell us, Mr. Chairman, that some of this will take time to materialize in terms of the stimulative efforts of this administration, whether legislatively or otherwise, if the Federal Reserve were to decide that it has to prioritize inflation, and if inflation persists and they don't want to cut rates, but we do see a material downward shift in growth or in the labor market, is there a lever that the White House is going to be able to pull more immediately to try to offset those effects if the Fed can't do both at the same time?
Yeah. So again, I point you to the forthcoming tax legislation that's being worked out on the Hill, and I think that will allow the president to provide profound tax relief that will be excellent for American families, American workers, American firms.
Well, going forward, Mr. Chairman, I wonder what's going to happen in terms of messaging to this market. Are we going to hear more from the administration, from the President of the United States, from yourself, when it comes to the dollar, when it comes to investing in the stock market in the United States? I know that frequently the refrain is we're seeing companies invest in America, but how about in our financial markets, where we've seen, I believe, a half dozen IPOs today delayed, some of them pretty large. We're hearing from some major firms planning to go public as soon as next week that are putting those plans on the shelf. What does the administration tell them?
Yeah, so I'm not gonna comment on specific companies and IPOs, but I will say what I said before, which is that of course there's going to be some market volatility on the back of the president's historic actions. But I also want to redirect you again to what we can do. And so, the tariffs are designed to redress the emergency of trade deficits, but there is a nice side effect, which is they raise a lot of revenue. And if you use that revenue not only to extend the historic tax cuts from 2017, but to provide further tax relief for American families while deregulating the economy and making it easier to invest, build, hire in America, you have the recipe to create an economic boom, wherein America is much more competitive because of the tariffs. It's much more competitive because lower taxes, households, firms, workers keep more of the money they earn every week, and they spend more of it, they save more of it, they invest more of it, and you get the government out of the way so they can build and invest and make factories. And that is the recipe for an economic boom. And if we keep at it, we can create a really great environment for firms to invest and hire, and that will, in the long run, drive the financial markets.
The other thing that tariffs, you would think, at least traditional economic theory would tell you, would lead to is a stronger dollar, and yet that's not what we've seen in the immediate aftermath of the announcement of these, Mr. Chairman. How concerned are you about a period of sustained dollar weakness?
Thanks. So, look, my view, as I've expressed before, is that classic economic analysis would say that the burden of any economic policy, whether it's a tax, a subsidy, no matter what it is, falls on what economists would call the more inelastic party, but I think is easier for other folks to understand as the more inflexible party. And the example that I keep giving is if you're looking to buy a house and the town that you're looking in raises its property tax rates and you're flexible, you can just look at the next town over. You can change your behavior to avoid the burden of the tax. The person who's selling the tax can't move his house across town lines. So he's got to eat the property tax and lower his selling price. And in that way, the burden of the tax fell on the person who couldn't move his house. And the same is going to be true in international trade. American consumers are flexible. We can make stuff here at home. We can change the countries from which we import. We can stop importing from a country with a high tariff rate and start importing from a country with a low tariff rate that treats us better, that is a better trading partner with us. And that ability to change our consumption patterns, whether to move it home into home production or among different countries, makes us more flexible. By contrast, installed factories in China, they've already spent the capital, the factories are stuck in the ground, the workforce is already trained to build products aimed squarely at the US consumer markets, those cannot move. So in the long run, other countries, the tariff countries, will end up bearing the burden of the tax, of the tariff. Now, there's a couple ways that can happen. In 2018, 2019, it happened through the currency, but it need not happen that way. Again, it could happen that way. It doesn't necessarily have to happen that way. There are plenty of other ways they can end up bearing the burden of the tax. It could happen through reduced selling prices.
All right, Mr. Chairman, we appreciate you joining us here on Bloomberg TV and Radio. Stephen Myron, the chair of the Council of Economic Advisors at the White House, thank you so much for joining us on this jobs day. But of course, while we did get a strong payrolls report, we are not seeing strength, at least in risk assets today. We're right around the session lows on the major equity benchmarks. The S&P now down 5.2%, the NASDAQ 100 down 5.4%. We want to get more on these markets now with Bloomberg's Romain Bostic, who is joining us from New York. Romain, I got to say, I'm kind of feeling flashbacks to March 2020 here.
Yeah, not just around session lows. We are at session lows. And just to put this into perspective, Kaylee, 500 stocks roughly in the S&P 500. Only 14 of those stocks right now are in the green. We're headed towards what is going to be more or less an unprecedented day. The superlatives pretty much stack up like this. More or less, we're having the worst day since at least 2022. For certain sectors, the worst day since the onset of the pandemic. And if you take the pandemic out of the equation as sort of a one-off outlier, this is quite frankly shaping up to be one of the worst days since the late 1970s. This is a market that is completely shut down, not just in equities, Kaylee. We've had several IPOs that have been put on pause. That includes names like Klarna, StubHub, Chime. Several deals that were in the works have also been paused. Not a single corporation has been brave enough to try to sell new debt today or yesterday. And right now, you have this sense of paralysis amongst economists, despite the comments that we just heard from the CEA chair just a few minutes ago. Most economists say right now they have no idea how to chart a path forward.
You know, you talk about the fundamentals of this market, Romain.
Most economists are idiots.
Proved. Yeah. Would that help to lift stocks from where they are now?
Well, keep in mind, a couple days ago, Joe, the support line on the S&P 500 was supposed to be 5,500. Then when we got broke below that, people said 5,400. Right now we're trading right around the 5,100 level. That is the low of the day, 5,104 and change. And so whatever support levels were there, they've been.
This clown isn't reading. This clown doesn't even read the right fib sequence. The right fib sequence is the beginning of the bull market from 2022 and the crash from 2020. All right, those are your two starting points for the fib sequence. So they overlap. And 5,400 was never a support level. 5,500 was. 5,400 was never a support level in the fib sequence. There's a psychological, there's a support level from the fib sequence at the 5,500, the 5,150 or 5,120, depending on how you read it. There's a psychological support level at 5,000, but not structural. And then there's a support level of 4,810. The guy's he's on Bloomberg and he doesn't even read the fib sequence right. 4,500 was never a support level.
Venture signaling they're still not in a rush to cut rates, though he is warning of the inflationary risks of these tariffs.
These guys are clowns. These guys are clowns. They're on Bloomberg. They say shit that they don't even know. Please go to my store, the-studio-reykjavik.com. Get the structural nano silver gel. I have it in two types. You can get it in the tube form and in the dispenser form. Have some at work. Have some at home. You never know when you need it. It's a dual purpose product. If you cut yourself, you have a burn, a minor abrasion, put it on your skin, it'll help to heal the lesion. You can use it as an aftershave. You can put it, guys, after you shave, put it on your face. It'll help to heal your skin. Women, you shave your legs, put it on your legs. It'll help to soothe your skin from that aftershave. And then structural nano silver gel. If you're not feeling well or someone around you is not feeling well, guess what? Put it on your hands, around your mouth, around your eyes, around your nose, around your ears. Lightly coat your nostrils. It stays active for 5.5 hours. And you can use it as a daily skincare product. So please go to my store, the-studio-reykjavik.com. Get the structural nano silver gels. Use discount 5, you get $5 off. And if you spend $150 or more on my store, you will get a free gift as long as supplies last. All right, with that said, let's just go to Al Jazeera real quick here. I think they're talking about NATO here.
Members wanted to hear what the Americans have to say about the future of the transatlantic alliance and whether they are still committed to providing significant financial and military assistance to the military alliance. Secretary Marco Rubio said that the United States of America remains committed, but you have to convince NATO members that the Americans are genuine and are there to stay for as long as it takes. There are huge differences about a wide range of issues with the Americans. There is the issue of Ukraine, where NATO members fear that the Americans are trying to rush an agreement which could just further embolden President Putin to further expand his influence, or maybe invade another European country. And this explains why they have put into place the coalition of the willing, which is some sort of a replacement if the Americans decide to disengage from Europe, and also put together an agreement that the Ukrainians and the Europeans don't like. But the NATO members, particularly key European countries, still think there is a wiggle room to convince Trump to stay in NATO and to stay committed to the security architecture that was put into place right after the Second World War. But at the same time, they remain pretty much concerned about what happens in the near future, whether they will be able on their own to commit strong, huge financial and military resources to own and lead their own defense of the Americans pull out. Hashim Akbar, Al Jazeera, Brussels.
Europe's push for military self-reliance has gained momentum since US President Donald Trump returned to the White House, but political fragmentation and a resistance to shared defense resources could stall progress. In the first of a series on European rearming, defense editor Alex Gatopoulos reports from Brussels.
Increased military readiness is now central to European thinking, and the President of the EU Commission could not have been clearer.
The era of the peace dividend is long gone. The security architecture that we relied on.
Their peace dividend, they never paid for it. The United States paid for it. They paid for the rebuilding of Europe. Now it's time for Europe to actually start paying their own way. All right, let's go back to
Now, that is a decline of 4.6%, while NASDAQ is down 863 points for the NASDAQ Composite Index, a drop there of 5.2%. Broad-based selling, Russell 2000 Index of small cap shares down 5.6%. The 10-year now at 3.93%, the 2-year 3.60%. Gold is down $92 the ounce. Gold plunging 3% now to $3,022 the ounce. West Texas Intermediate crude is down 7.9%, 61.68 a barrel, and Bitcoin higher by 1.2%, 83,289. Wall Street banks are enduring another sharp sell-off. JP Morgan Chase, which reports earnings a week from today, down now by 6.8%. Goldman Sachs down 7.6%. Morgan Stanley down 7.8%. And Citigroup lower now by 8%. Among regional bank names,
the S&P 500 intraday low is 5,101. Now, right now it's trading at 5,123. There's a high probability that it's going to close below the support level. Right? If institutional investors don't come in to purchase the S&P 500 at 2 o'clock or at 3 o'clock, there's probably a high probability of us breaking that support level.
Announced by President Trump this week, the Fed is still not in any rush to lower interest rates, despite perhaps, Joe, the desire of President Trump for them to do so. He actually said on True Social today it would be the perfect time.
Right, today would have been right before that meeting, maybe. In fact, that was timed to coincide with his remarks. It wasn't until Jay Powell started talking that we saw these new lows on Wall Street, because now the fear is, of course, we're not going to see lower interest rates anytime soon. Fascinating conversation with Stephen Myron at the White House coming off the jobs data today. He continued to point us to Trump tax cuts. They're just getting the ball rolling on that on Capitol Hill. In fact, we're going to have some votoramas over the weekend that could be pretty interesting. We'll be talking about that likely on Monday. But what a treat to have the chairman of the House Financial Services Committee with us. We remember when he was just a congressman. We remember when he was just a community banker. But that's why this is an important conversation, because of the unique perspective that French Hill brings to us from Arkansas. It's great to see you. It's been too long. Thanks for being
great to be back with both of you. Thank you.
So what do you think of this? I know you're sensitive to the markets. You don't like what you're seeing here on Wall Street, I'm sure. The line from Stephen Myron was, just hang on. We're working on extending the Trump tax cuts along with a number of other tax points of tax relief that will help to make this better. Does one offset the other?
Well, I think it's such an important question, and I'm concerned that we cover up the strategy of right-sizing regulation, tailoring regulations, getting balance back in the regulatory system, which President Trump was so successful on in his first term. We want to do that in this term. And as you noted, the Senate will be voting on the House Budget Reconciliation Bill this weekend that'll lead and unlock the ability to block a major tax increase for business and for American households. Those are big, certain issues that I think we can get done. I believe strongly. And I don't want to see a tariff strategy, offset that, which is why I believe in trade diplomacy. I think President Trump's right to engage in trade diplomacy, but I believe sincerely that you should target sectors in a very isolated way and achieve results, and do the same thing in reciprocity with countries you think are bad actors that are not open to American products. And then finally, as it relates to Canada and Mexico, I really think the president should advance the negotiations on the USMCA reauthorization of that treaty, that trade arrangement, and let's make some changes. Let's make sure that Chinese component parts are not dumped into Mexico or Canada and go into the supply chain.
So why not have Congress take the lead on that? It is your Article 1 authority to do so, and yet this is being driven out of the White House, not by your chamber or by the Senate. Does that need to change to calibrate this policy in a better way for the economy?
Another good question. Since the late 1920s, Congress had been in the tariff setting business, and they were so frustrated by it and so bad at it that they delegated it to the executive branch under trade promotion authority. But I think Article 1's job there is to make sure we try to get it right, work with the administration to get it right in the Senate's case, ratifying treaties where necessary. So that's what we need to do. Trade promotion authority, which was reauthorized in President Trump's first term, has expired. President Biden did nothing about it. I think that would be a good step for the Congress to consider reauthorizing.
What does the banker inside you, never mind the chairman of financial services, think about when you hear companies say, why are we being unfairly targeted? All we have done is play by the rules. We came out of China, we went to Mexico, we went to Vietnam, now we're being penalized for that. Aren't they correct in making that point?
Well, I think it speaks to the uncertainty nature of this. I hear it from my own constituents at home who are manufacturers who make something, but some of the component parts and what they make comes from outside the U.S. They're concerned about the cost. Will their product be competitive? And the same is true for Arkansas, a big agricultural state. Much of what we produce goes to Canada or Mexico. So these are important issues, and that's why I think the strategy has to be right. Using trade diplomacy to open new markets, using trade diplomacy to lower rates in certain product categories, like auto in the European Union, for example, and using trade diplomacy to punish bad actors. Those are all important elements of it, and I think that gives some certainty. When you use an across-the-board approach, you get that uncertainty that my constituents are reflecting. So I hope we can work on clarifying that in the weeks ahead.
Well, and in the weeks and months ahead, the White House, as Joe mentioned earlier and you were alluding to, the White House is pushing toward tax cuts that have to happen at some point if the TCJA is not going to expire. I do wonder, though, the argument around that tax package in 2017 was it was going to juice the economy. It was going to put more money into people's wallets. It was going to give businesses more money to make capital investments. Is it going to have the same effect this time around, though, if it's just an extension of what already exists and those people and businesses may be feeling a bit more of a pinch in terms of the margin they actually have to work with to spend that additional capital?
Well, the expensing has been being phased out, and so the renewal of that, I think, will spur a capital investment. The R&D tax credit, the same, it will spur new investment. You're right, at the corporate marginal rate or at the household marginal rate, people would just feel relieved. Good. I mean, I can count on that going forward. So I think it will unlock some activity in the economy, and it will produce faster economic growth. even if the marginal rates don't change dramatically.
There was a time when revenue from tariffs was pitched as a way to help pay for extending or making permanent the Trump tax cuts. Is that part of the conversation any longer, or are the tax cuts going to be extended in lieu of the tariffs?
Well, in our discussions in the House, I can't speak for the government at large, but in our discussions with our colleagues in the House, we've been thinking about the importance of extending the President Trump's tax cuts, cutting spending, trying to right-size government so that we don't have $2 trillion deficits. This is a major goal of our House Budget Committee. And we're not counting on tariff revenue, because tariff revenue is very difficult to predict. You have countervailing duties. You have people will change their buying patterns. So to automatically assume that you can count on that, I think is not significant or smart. So we have not per se counted on that. And OMB does not count tariff revenue in their scoring. So as we get closer to that final vote, we'll look and see where this Trump tariff plan settles, and that may give us some indication. But in the meantime, we're working independent of that, I'd say.
We were just listening from our colleague Charlie Pellet looking at the markets, specifically at bank stocks, some of the big investment banks that were counting on a revival in companies coming to the public markets and re-engaging in M&A activity. This gets back to the kind of regulatory burden you were referring to earlier. Are you concerned that some of this wider economic impact, companies now deciding perhaps is not the best time to enter the public markets, that regulatory burden being used maybe for not if they can actually take advantage of it?
Right. Well, certainly, I hope that the competition focus of a Trump FTC, Federal Trade Commission, is open towards business entrepreneurship, business combination, where it produces more competition. And I would hope that we are able, in our regulatory focus on capital formation, to encourage more public companies, because we lower the cost quarterly of being public. That's a goal of mine as chairman of the committee. But anytime you have wide market uncertainty in equity prices, you're going to have people pull back from a scheduled IPO because they need market certainty. Right. And so I hope this settles down soon, because I know there's a lot of interest in advancing that equity market through the IPOs.
We've been talking, Mr. Chairman, for the better part of 10 minutes, and somehow Kayleigh Lyons has not asked you about crypto.
I was saving it for last.
About the Stable Act. Well, my gosh, we only have a couple of minutes left here. Yeah. You had an important week when it comes to this. It's something that gets lost in a very noisy news cycle, but this is important, something you've been pursuing for months and months.
This is a real effort for the past 4 years, really, working with former Chairman Patrick McHenry, Ranking Member Maxine Waters, to craft a dollar-backed stable coin under U.S. law inside the largest capital market, the most important economic country in the world, that we would have our own dollar-backed stable coin where we could have a tokenized dollar payment on a blockchain. We had a successful markup, bipartisan result, and this is a companion to just a few weeks ago. Bill Hagerty, Cynthia Lummis, Tim Scott, Diane Gillibrand got a Senate dollar-backed stablecoin bill out of the Senate Banking Committee. This is the first time we're demonstrating, I think, to the markets that we can make progress on this. I think we can get that passed this year, and I think we can also get the market structure bill passed. You've got to link them, because a dollar-backed stablecoin, but without market structure, how would you custody it? How would you exchange it? How would it be used? So they're important that we try to keep them working together. President Trump's asked us to complete that work by the August recess.
Okay, so in terms of sequencing, will we see a full floor vote on stablecoin legislation before market structure efforts begin, or is that already on?
I think House and Senate leadership have the best strategy under discussion. Tim Scott, Bill Hagerty, Cynthia Lummis, they're outstanding leaders. They know this issue well, and we know it well in the House, so we're going to craft the best legislative strategy.
All right. How different will it be to Fit 21?
We have our first hearing next week. Brian Stahl of Wisconsin will convene his first market structure hearing in the House. We're excited about that, and we hope to get that text ready in the next few weeks.
We need a Style Hill panel.
Yes.
Oh, yes.
When the time comes, can we do that?
We can do it.
All right.
All right. Well, we'll look forward to it. We're so excited to have you in studio today, Mr. Chairman. That is the chair of the House Financial Services Committee, Congressman French Hill of Arkansas, here with us on Bloomberg TV and radio. Interestingly, crypto won bright spot today. I would know, Joe. If you're looking for haven, maybe you're finding it in treasuries, but maybe a little bit of marginal buying coming into Bitcoin as well. Can't say the same for other risk assets, though, as we're just off session lows, but still down about 5 percentage points on the S&P 500 and NASDAQ.
A little bit of a bid under Bitcoin, but this is a risk-off market. My goodness, we're still trading near the lows of the session, and we'll have a lot more coming up here on the fastest show in politics. You can't remove Washington from Wall Street. That's why we're here on Bloomberg TV and radio alongside Kaylee Lines. I'm Joe Matthew. Thanks again to Chairman French Hill. We'll have much more ahead on Bloomberg.
Please go to my store, the-studio-reykjavik.com, and get the multivitamin. This is a multivitamin that's easy to digest. Multivitamins and minerals are very important as cofactors for enzymatic activity. So it's important to take a good multivitamin every day as part of your health stack. So please go to my store and get this multivitamin and stack it with many of the products that I've mentioned, but a great stack to help with your cardiovascular health and your immune system is taking olive leaf extract. Olive leaf extract will bring down inflammation. So by bringing down inflammation, you're helping your immune system. By bringing down inflammation at the vascular level, you're reducing plaque formation. So that's good for your cardiovascular health. And olive leaf extract helps to improve your total cholesterol. So please go to my store, the-studio-reykjavik.com, get this great dual purpose product, olive leaf extract, and stack it with the multivitamin. It's very important, especially the multivitamin, to add that to as your base. You know, taking the multivitamin with the probiotic is a great foundation to build off of your stack to improve whatever systems that you want to improve for your health and wellness. So please go to my store, the-studio-reykjavik.com, get the olive leaf extract, the multivitamin. This is a great stack, or you can buy them separately. If you purchase $150 or more on my store, you get a free gift until supplies last. So please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off. All caps, discount 5, and you get $5 off. The number 5. Okay, let's go to Al Jazeera here. They're talking about China's commerce.
Hey, he thinks we've had tit for tat, and we probably will have more of that before there are any negotiations. You also heard what I told you from JP Morgan, saying the chance of a global recession now raised to 60%. What is the view across the region? Have we reached panic territory now?
I think here in South Korea, there was an expectation that Donald Trump wouldn't actually go this far. And I think that sort of goes for Japan as well. I think that U.S. Asian allies expected that the security relationship would mediate this in some way, that there would be sort of pulling of punches. I think everybody is really sort of surprised. So then the response here in Korea, the government's response has been not panic, but sort of emergency, and it's all over the media and everything. And I think that, quite honestly, the government isn't really quite sure what to do. I don't think there will be heavy retaliatory tariffs out of Korea or Japan, in part because the security relationship is an area of leverage for the United States. And so I think what they're going to do is kind of wait, Korea and Japan. My guess is they'll wait and see how things shake out with China and with Europe in response to the tariffs. You know, if Trump doesn't move on this, my guess is they'll learn to live with it. We've already sort of heard discussion in Korea about how, well, we should do some strategic investment in the United States to kind of buy Trump off, sort of get ourselves a carve out. But my guess is the Japanese and the Koreans will probably accommodate rather than slide into a trade war.
Okay, other Robert now in LA. Perhaps take us back a bit, Robert, because Trump's first term, he imposed tariffs on China. Those were kept going by Biden, and Trump has long complained that China uses unfair trading practices. Historically, is there truth in that?
Oh, absolutely. China, after joining the WTO, has just been reluctant to open its markets. I think one of the most obvious cases is automobiles. Somewhat ironically, now Trump ally Elon Musk was the first to open a wholly owned foreign enterprise in the automobile sector. But that was after years of China benefiting from access to foreign markets while keeping its markets restricted. So actually you see both left and right in America, and you mentioned the Biden administration. Indeed, they continued with the Trump tariffs. They thought they were working, but what's really significant between then and now is the tariff regime was previously directed really only at China. And just as we've been discussing, going around the table here, as it were, it's now global. So that's the big shift, and that's why you see so much market turmoil.
John, in Beijing, let me ask you about China's economy. How strong is it and how able to withstand this trade war? I noticed an interesting figure that back in 2017, exports to the US were about a fifth, and now it's less than 15% of its exports.
Right. Well, first of all, let me respond to Robert's previous argument. I think that the trade practices here in China has greatly improved with respect to complying with WTO rules. The fact that Tesla has been widely successful in China, being the largest Tesla market in the entire world, testifies to the fact that China's auto industry in particular has been very open. Today, China exports a lot of cars, about 5 million cars around the world. Look at what tariffs have been imposed on Chinese cars imported to the United States, 100% tariff. This shows how much of an openness of the U.S. market is to international imports in the automobile industry right now. Now back to your question about China's economy. We're starting to see some signs.
I'll bring you in, Robert, in a moment. Continue, John, please.
We're starting to see some signs of recovery at the beginning of the year in 2025. Apparently, this shock is going to take a toll on China's economy. But as you just said, the American market is about 14% of the total China's exports market. This is a potential loss that is still very much bearable. In my view, based on the very rough back of the envelope calculation, it's about 1% to 1.5% of China's GDP. So if that entire market is lost, we're talking about doomsday scenario, essentially the worst scenario, that this over $400 billion market is totally gone. That represents a shock of about 1.5% of GDP loss to China. This is something that is bearable, and I think that the government in Beijing is determined to not back off from this challenge. And if that's the loss that we're going to take, so be it.
Robert, in LA, you wanted to jump in.
No, just to point out, I'm not totally disagreeing with the points John is making, but I think the one on the automobiles, look, China required foreign auto manufacturers to set up joint ventures, majority owned by Chinese companies. And that persisted for years. Yes, Tesla was the first to be allowed in. That is a testament, I think, mainly to the government in Shanghai and Elon Musk's ability to negotiate. Also, the Chinese national priority to build up the EV market, which they've done quite successfully. But yeah, John's right. We've got 100% tariff on Chinese EVs. So does the EU. And that's because basically there's a global assessment that China has subsidized the development of the EV market. China, from a totally national perspective, isn't necessarily wrong for doing that. I think actually the U.S. should think about better supporting EVs here. But in any case, that's why you see not only the U.S. imposing the tariffs on Chinese EVs, but also the EU.
All right, we're going to go back. We're going to go back to Bloomberg here. Trump extends TikTok deadline for 75 days. Please go to my store, the-studio-reykjavik.com. Get the ubiquinol. Ubiquinol is the most bioavailable form of CoQ10 that you can buy. It is an antioxidant, so it's going to soak up free radicals. It's going to help the health of your mitochondria, so you're going to have more energy, more ATP. And ubiquinol helps to support your neurons. Extremely important to take ubiquinol. If you're 40 years of age or older, take it every day to protect your neurons. Also, NAD Plus supplement will boost up your NAD levels. NAD Plus will help to protect your neurons. It will help to repair your DNA damage. And also NAD Plus helps to boost up your energy levels. So if you are older, like 40 years of age or older, taking NAD Plus is really important to boost up those energy levels, repair that DNA damage, and to protect those neurons. Stack ubiquinol and NAD Plus together to get that synergistic effects for protecting those neurons. Really important. The earlier that you protect your neurons, the better. So please go to my store, the-studio-reykjavik.com. Get the NAD Plus and the ubiquinol. This stacks really well also with C60 and resveratrol. If you spend $150 or more on my on products on my store, then you will get a free gift until supplies last. So please help support my work by getting the great products that I offer. Stack them the way I'm telling you to stack them to get the max benefits for your health. It's about a holistic approach. It's not just about the supplements. It's also proper sleep, proper diet, proper exercise, challenging your mind, doing balancing exercises, doing cardio, doing resistant, doing stretching, filtering your water, detoxifying your body. It's a holistic approach. Please go to my store, the-studio-reykjavik.com.
Here, and that's obviously hitting people across the board. The market reaction hits people across the board. The Doge cuts, though, hit you directly with federal workers who live in your districts who are being shown the door. Then you add what took place with some of the budget cutting. I know that the House has yet to reverse the budget cuts for the District of Columbia, but people are starting to sit back around here. We're on global television and radio right now. People are listening to you as well on 99.1 FM in Washington saying, hey, wait a minute. The Washington, D.C. area, the DMV, used to be recession-proof because of the fact that the federal government was here, or at least there was a shock absorber, Congressman. Does that exist anymore?
Maybe not. What he's done in the attack on federal employees is been extremely damaging. I mean, he's thrown people's lives up in the air. And I know there's a lot of people who don't have sympathy for so-called bureaucrats, but people are now starting to feel the impact of the services that they're not getting because these people have been fired. Mm-hmm. And some of these things are going to be very long-reaching and far-reaching. So, cutting the clinical trials for Alzheimer's, cancer, Parkinson's. My father died from Alzheimer's and Parkinson's, a combination of those. So to see the clinical trials derailed just kind of, by happenstance is astonishing. And then the impact on people who are seeking their Ph.D.s or starting their research careers. We're going to have IonQ on here in a minute, but China's throwing money at AI, quantum computing, and the like. They're trying to grow as many of these scientists and engineers as possible. Trump's cutting the money for that, and that's just scratching the surface. I mean, we could go through, the impact Medicaid cuts, impact on elementary schools. The impact on local hospitals in rural and urban areas. I mean, it's astonishing, it's far-reaching, it's extremely damaging. And I think when you combine that with the tariffs that he's put in place now, you're certainly looking at a recession in the Washington metropolitan area, but I think you're probably looking at one nationally as well.
You mentioned IonQ. This is a quantum computing company that you introduced us to some months back, and you were joined on the air here by the then CEO. Niccolo de Masi, the president and CEO of IonQ, now in charge of the company, joins us now as part of our conversation. Niccolo, we want to add your voice to what we're talking about here and welcome you to the conversation with a lot of questions we have about quantum computing and the charge that you have at IonQ. Been pretty remarkable hearing you called out by Jensen Huang recently, but there are great concerns now about a company like yours seeing innovation stifled and having more difficulty accessing capital because of what's happening in the financial markets driven by the tariffs. What do you think?
Well, first of all, I want to thank the congressman for including me in this, and thank the congressman for all the support that he's given to INQ. You know, we were born on the University of Maryland campus 30 years ago with Dr. Chris Monroe, and we, of course, do a lot with the university, the ecosystem, with the DMV, and of course with all the associated ecosystem of agencies in the area. You mentioned China. I mean, absolutely, they are investing, probably $15 billion officially in quantum computing, and I bet it's more unofficially given how things work over there. And I would concur that quantum computing and quantum networking, which is the other half of our business, so it's safe making and safe breaking, really are not just the paramount for the national security of our country, but they're fundamental to the economic growth prospects of our economy. And so, we work, of course, across the aisle. We work with the administration, every administration, and it has been a bipartisan issue, which we're grateful for. I mean, our machines are made in America. Our quantum networking also is rolling out in America in places like Tennessee, for example. And ultimately, we believe that, tariffs will be a far bigger issue for companies that are structured differently than INQ. But nevertheless, we look forward to continued support in the state and, of course, federally as we continue to grow this vital technology for our country.
But what about the notion that, at least in terms of China's retaliation against the U.S. policy announced this week, it's not just tariff measures, but also restricting access to critical minerals? Is that something, given the role that those play in quantum computing, that could affect your company?
Well, it can affect some companies in the quantum computing space. Fortunately, it doesn't impact INQ. Just yesterday, DARPA, in fact, awarded us the first stage of their own journey towards building, let's call it encryption cracking and encryption protection. So, the basis of modern civilization relies on secure communications. Battlefield of the future relies on Battlefield of today relies on secure communications. And ultimately, quantum computing helps you both optimize that, and quantum networking helps you ensure that e-commerce, banking, you name it, as we know it today, goes on, perpetually, right? So this is an issue that, we fortunately are well funded. Our stock, of course, has not had a great day today, but our stock has had a better day than everybody else who's exposed, fully to these measures for sure. We're heartened by the fact that we've got such strong support in Maryland and many other states, as well as in the federal government. They all recognize the criticality of information, the criticality of optimization, the criticality of computing. Jensen Huang will see us as a competitor someday, but at the moment, we're just expanding the compute market with quantum processing units. And our technology that you can see behind me is actually what's called an ion trap quantum computer. And we don't have to import any minerals for this, fortunately.
This is really impressive stuff, Congressman, which is why, of course, you introduced us to IonQ. Knowing that they're working at the University of Maryland, how concerned are you about federal grants being withdrawn or being challenged by this administration in testing the innovation of a company like this?
It's extremely problematic, and we've got other entities. Johns Hopkins is in Baltimore. They're outside of my district, but they just had to lay off 2,000 employees based on what the administration had done as far as cuts. And if we're looking at growing the field of scientists and engineers, they're coming up out of college, out of graduate school, and getting into these professions now. He's wiping out the grants that they used to do their research. He's wiping out the indirect cost payments so that allow these universities to do it. He's wiping out the grants and, in some instances, contracts to go to federal agencies like NASA, where the research is done. So we've got this crop coming up with no place to go here in the United States. By contrast with China, they're not only are they, growing more of these people faster, but they're throwing dollars, or the Chinese equivalent of that, into funding it so they can expand it quickly. We're still in the lead, but the president's walking us off the field right now, and when we should be competing and maintaining the lead that we have.
Well, Nicola, we only have a minute left, but can the private sector make up for anything or the lack, I guess, of investment, or a pullback in investment from the public sector?
We're doing our best, Congressman, for sure. We're trying to grow the job market, our quantum center that we have in partnership with, of course, Maryland and UMD, and we're very much part of, and I think a central tenet of the quantum initiative and expansion of our headquarters to create those research opportunities, create companies and incubation and entrepreneurship around our technology. So we're well capitalized, and we'll do all we can every day. Needless to say, though, we rely on partnerships with Maryland, the university, the federal government, to ensure that our technology makes it into the commercial sector, the public sector, on the battlefield, into drug discovery, into let's just call it aerospace of the future and optimization opportunities of the future every day of the week. So let's hope that this is a moment in time, and it's all up from here, both of us.
All right, Niccolo de Masi, President and CEO of IonQ, joined by Democratic Congressman Glenn Ivey of Maryland, here with us on Balance of Power today. Thank you both so much for joining us. We'll be back for more in the late edition of Balance of Power coming up at 5 p.m. Eastern Time.
Where else are you going to hear a conversation like that? But on Bloomberg TV and radio.
Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Not sure if I should say a very good afternoon, everyone.
It depends on if you're short or long.
That's a really good point, as we'd like to remind everybody, two sides to the trade, but it does really feel like those who are trying to make some gains in this market, it's been a rough 2 days. So, a good afternoon, everyone. Carol Master, along with Tim Stennebeck, live here at Bloomberg headquarters in New York City. Check this out, though. Klarna, StubHub, Chime, right? Just 3 that are canceling, Tim, their IPOs.
I thought this was supposed to be the year of deals, the year of IPOs. There's more, though. Business stocks continue to plummet, with the S&P 500 on pace for its worst 2-day rout, going all the way back to March of 2020. Yes, you remember what happened then. It was the onset of the COVID pandemic. Markets certainly front and center for us.
Yeah, pretty dark that time. So we're going to try and kind of get a good picture of what we're hearing in the C-suite and what folks are saying about this macro environment. And yeah, all right, we did get a jobs report this morning. We're doing okay. In fact, we're doing pretty well when it comes to the U.S. labor market. But what we really care about is what Jay Powell had to say about tariffs today.
Also, we're looking at the bond market on the U.S. rates reset and expectations of Fed cuts.
Plus, as we said, our view from the C-suite, Rob Rich, he's CEO of the Optical Foundry, which sells eyeglasses, many manufactured, I should say, in Japan, outside the U.S. So he is a front seat to all of this. And then a really other good voice who's constantly talking to members of the C-suite, Tim.
Yeah, we got with us Alan Garino coming later, vice chair over at Korn Ferry, what he's really hearing from CEOs on the macro environment.
All right, let's get to it, folks. Let's get to that trade. We're off our worst levels, but it's still pretty ugly out there. Let's get to Charlie Pellet.
Watching, here's what's going on. Stocks lower across the board. Do want to begin, though, with a development in the past hour involving TikTok. President Trump says he has decided to extend the deadline for Chinese firm ByteDance to divest TikTok's U.S. operations and give his administration more time to finalize a plan to keep the popular app running in the country. Stay with Bloomberg for the very latest on any TikTok developments. Equity markets lower across the board, as Carol mentioned. A lot of red today, right to the numbers, with the S&P now down 4.2%, down 225, a drop there of just about 4.2% again, now at 5171 on the S&P. The Dow above 39,000, barely 39,071, down 1,471 points, off session lows, down 3.6%. Nasdaq is down 4%. The Nasdaq 100 index down 4.2%, and the Russell 2000 index of small cap shares down now by about 3.9%. The 10-year 4.00%, with the 2-year that's currently yielding 3.68%. Gold is plunging 2.9% to $3,025 the ounce. Gold is down $88 the ounce. West Texas Intermediate crude down 7.2%, $62.12 for a barrel of WTI crude, and Bitcoin up 2.4%, 84,352. On Bitcoin. The trade fight weighing hard on shares of industrials and materials companies. Among some of those names that are selling off today, we've got Stanley Works, Stanley Black & Decker actually is trading low right now, down 3%. Caterpillar down 4.3%, Harley-Davidson down 1.5%, and Whirlpool down by 1.9%. All of those names trading at or near a 52-week low. Again, recapping, stocks are selling off. S&P right now down 4.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. All right, folks, we got a monthly jobs report this morning.
I forgot about that already.
It's like amazing. It was like touch and go. Basically, though, it was a solid labor market here in the United States, just ahead of President Trump's tariff announcements this week. So keep in mind, this is before the tariff news came down this week. So there was that. There was also Dr. Jay Powell speaking at the Society for Advancing Business Editing and Writing annual conference. It happened in Arlington, Virginia. And like many, Jay Powell noting that the tariff news is a bit more than everybody thought it would be.
While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain.
All right, then, of course, with Jay Powell earlier today at that event. For more on Powell and the moves we're seeing in the U.S. rate market, because that has certainly been something to catch everyone's attention this week. With us is Michael McKee, Bloomberg News International Economics and Policy Correspondent right here in studio. And then we've got Ira Jersey, who's Bloomberg Intelligence Chief U.S. Interest Rate Strategist out there in New Jersey. Mike, I want to start with you. How much has Fed Chair Jay Powell's assessment of the U.S. economy and outlook changed because of this week's tariffs?
In terms of Fed type of officials and communications, it changed a lot. Basically, he said today that the tariffs are worse than we anticipated, and the impact on inflation and growth will be worse than we anticipated. They don't have a good feel for how bad it will be, and they're not going to change their monetary policy right now, but he did sound more downbeat, and hawk dove is kind of a silly way to put it, but he sounded more hawkish than he has been.
What was the one thing the most significant thing, Mike, that caught your attention from what he said today?
Well, the big takeaway is that there's no Fed put, that the markets can go down as much as they would like, and as long as there are buyers and sellers, the Fed's going to stay out of it. There seems to have been some sort of a vague hope on Wall Street that at some point Jay Powell would step in and put a floor under the markets. And he made it clear today that that's not going to happen. That's not their job.
I want to bring you into the conversation, Ira, because it's hard to ignore what we've seen in the rates market. I mean, we had a 10-year that was below 4%. We've seen a little bit of a spike up today after kind of an earlier move down. Tell us about, first of all, from Fed Chair Jay Powell, what struck you the most?
I think it is the fact that they said that they could be patient, right? So that the market had been pricing for some 50-50-ish chance of a May rate cut, and that has gotten taken off the table. That's one of the reasons why you've seen this real whipsaw reaction in the rates market, particularly in the front end, in the short-term market. So you look at 2-year notes or futures on SOFR, which is now the new LIBOR, right? So the short-term interest rate instruments that we look at. And the market is, like you said, had been thinking, hey, maybe this is going to get bad enough that the Federal Reserve will cut interest rates sooner rather than later. Now, interestingly, and this has been our view for the last couple of weeks since we've been talking about tariffs and their impact, is that I suspect that the Federal Reserve will wait and need an excuse in order to cut pretty aggressively. And that has to be the job market. And when you saw this morning's job numbers, they were fine, right? They weren't great. They weren't like what they used to be a couple of years ago, but they still weren't bad enough to be thinking that a recession is imminent within the next couple of months or even the next 2 quarters. But that being said, you get 1 or 2 bad employment prints, and the next thing you know, the Federal Reserve could be cutting interest rates pretty aggressively once again.
Mike, do you agree with that assessment that it's going to take a shock to the downside with the jobs report to get the Fed to cut?
Yeah, I think another takeaway from Powell today is that the Fed is still leaning on inflation. That's their main concern. And when you think about the process of what might happen going forward, inflation is likely to rise faster than unemployment because the tariffs are going to go into effect next week, and then we will start to see at a fairly rapid pace some things go up in price.
Where should we look?
Well, to a certain extent, you can look at food, but where we'll maybe see it first is in the PPI rather than the CPI, because intermediate goods that are going to come in that factories use to build other things. And then in cars will be a big one. That's that one.
But we only buy cars every few years. Or if we live in New York, you only buy cars every few years.
Or if you're Matt Miller, you buy it more often.
But in the average consumer's life, in the average voter's life, where should they be looking for prices to go up?
Well, I think that's what they'll notice. They'll notice the ads for it. They'll notice the newspaper comments on it. And just in the things they start to buy, I think I mentioned yesterday, Nespresso, the coffee pots come from Switzerland.
Yeah.
And they've already raised the price on Amazon by $10 for a box of ones from Starbucks. So we'll see inflation go up faster. And companies are still sitting on their hands because they don't know what's going to happen and how long this is going to. So the decision to cut people is always a major one. And that will take longer to play out.
Hey, one thing I want to get before you guys go, let me start with you, Ira. I mean, President Trump came out and he said it's a perfect time for Jay Powell to cut interest rates. We did see money markets fully pricing in 4 rate reductions this year. Is that where we are right now? But again, and you often remind us, that can change too.
I mean, I haven't looked in the last 5 minutes since I've been on the air with you, so it could be completely changed. But we're pricing for more than 3. So I'll say that, and that's still a pretty big change over the last couple of weeks, right? Because not so long ago we were only pricing for 2. So that is a significant shift and an acknowledgement by the market that growth is likely to slow down over the course of the year.
Mike, just real quickly, 30 seconds for you in terms of what we might get from policy. Is it still
nothing in May, and June is when we get the next opportunity and the next dot plot, the next forecast. So that's going to be on the market's minds. But I think there'd be a lot of attention paid to almost every Fed speaker for a little while to see what they're thinking. By the way, we're now slightly under 4 rate cuts for the year.
Slightly under. Okay, good stuff. Lucky that you have a Bloomberg terminal in front of you.
Yeah. You know what? We should tell the audience to go out and get some of these.
I know if you're interested, I know where you can go.
He's got friends.
All right. Michael McKee, International Economics and Policy Correspondent, Bloomberg News here in studio. Ira Jersey, thank you as well. Have a great weekend to both of you. Chief U.S. Interest Rate Strategist at Bloomberg Intelligence. We got to talk the equity market.
Yeah, I see it red across the screen right now. I pull up world equity indices. Only 21 stocks in the S&P 500 moving higher. 482 are moving lower. The S&P 500 on pace for its worst 2-day rout, going all the way back to March of 2020. It fell as much as 5% earlier in the day. Carol, the NASDAQ 100 set for a bear market.
Yeah, so the VIX top 840. Gina Martin Adams, man, she's been on the road a lot, really talking to a lot of folks. Today we find her on the West Coast. She is Bloomberg Intelligence Chief Equity Strategist with us from San Francisco. Gina, how are you kind of assessing the last couple of days, and has things really changed? And I am curious, is it just tone sentiment or is it fundamentals too?
Yeah, I think it's a little bit of both. I think that sentiment was still sort of in denial that the economy was already deteriorating prior to the tariff announcements. We got more news of that with the ISM New Order series, as well as the Challenger layoff series this week, which are leading indicators of what to expect come April in the real numbers. That, coupled with the tariff announcements, does imply that the U.S. economy is on very, very weak footing going into the second quarter. And that was not adequately priced for the S&P 500 especially, which was still priced to anticipate something like 15% earnings growth, maybe even stronger earnings growth in 2025 on the eve of the tariff announcements this week. So I think you do have a sentiment, sort of a degree of sentiment unwind that is coupled with a fundamental deterioration that is now starting to get recognized now that tariffs are in play. Without a doubt, earnings expectations are still too high. Even with the repricing in the equity market, you're looking at earnings expectations of double-digit growth still embedded in S&P 500 prices. The run rate of new orders growth right now says you're likely to get close to negative 3% growth this year. If we implement an expectation of much slower economic conditions emerging over the course of the second quarter, I wouldn't be surprised to see earnings contract greater than 5% in 2025 as a result of the tariff announcements this week. So we've got a great deal of unwind still to go in terms of sentiment and expectations to adequately price what is now our economic reality.
So from a valuation perspective, Gina, a question that I've asked you over the last couple of weeks as we've seen this unwind is how the S&P 500 is valued. And you've argued to us that it's still too expensive. That was a couple of weeks ago. With the sell-off that we've seen in the last few days, for people who are tempted to come in and buy this dip, what would you say to them?
Yeah, I think that's a really tough value proposition at this point in time. I mean, you're still looking at valuations that are well above average valuations on the index in an environment where we're going to really have to question the long-term operating margin reality for S&P 500 companies. If you spend a lot of your time over the last couple of years justifying elevated S&P 500 valuations because of record level operating margins, you're now really stuck in a really difficult position where the impact of elevated tariffs and reduced trade prospects for multinational companies means compression in operating margins. There's just no way to get around that. And if operating margins are going to compress, are going to strike a new reality in the U.S. as a result of globalization, the reversal of globalization trends, we're going to see valuations have to come down, at least closer to long-term average, if not below long-term average. And we're nowhere near that in the S&P 500. We're still sitting above long-term average. Now, there's a lot of opportunity for change to emerge later this year. I think that many company executives are saying, okay, if we can get deregulation, if we can get domestic supports, if we can get taxation changes, that could help offset this tariff risk. But those are all hopes right now. We're not seeing a lot of movement there. So we've got to see movement there to offset the risk of tariffs before we can get a real beat on operating margin outlooks for U.S. companies.
Yeah.
And until we can really get some stabilization, it is a tough call to make.
Are we dragging down the global economy at the same time? So is it a global market thing at this point, Gina? I was going to ask you, is the U.S., we've been talking about this, the U.S. being uninvestable. But we talk about how important the U.S. market is to the whole world, the economy. So are we talking more about a global market that is not going to be great for a while?
I think it's going to be really tricky for most global assets. There are very low beta components of the global market, and that means low exposure, effectively, very defensive components like the Middle East. The GCC segment of the world is one of the lowest beta segments of the world, tends to march to the beat of its own drummer, if you will, tends to be really leveraged to domestic conditions, which have less to do with U.S. domestic growth. Now, obviously, there are feedback loops. When the financial markets enter distress, the availability of capital globally tends to compress. So we've got to be careful with that. Latin America is another area. You get deep into South America, Brazil, and surrounding economies there tend to be relatively isolated from what's going on in the U.S. So there are some dependencies. This has become a very globalized world. And we're talking about now cutting the U.S. off increasingly from a leadership position in terms of trade as well as a globalizer. And we're deglobalizing. That has tremendous complications for all of the world. The other economy that I would note is China. China has been reducing its trade dependence on the U.S. for the better part of a decade. That apparently is the right move because China is also going to be relatively sheltered despite the fact that we're implementing very high tariffs on the Chinese economy. China is much less dependent upon the U.S. than it was in the past. And as we've been
throughout the trading session, the dollar is increasing relative to the euro and relative to the Japanese yen. And Bitcoin is on the mend. It's now, the ETF is trading at 18.27, and Bitcoin is trading at almost 84,000 per coin.
Rapidly and isolating ourselves increasingly from the rest of the world. That's a very different underlying investing condition than most of us grew up with, where the U.S. was, increasingly pushing for greater globalization, greater relationships, closer ties to the rest of the world, ways to create, more efficiencies in our supply chains. That's not the world that we live in right now. Will we work our way back there at some point in the future? Still remains to be seen. But for now, that's not the world that we live in, and we need to figure out this new world.
Okay, the reality. I just want you to know when I come back in my next life, I want to come back with Gina's brain. I'm just going to put that out there. Gina Martin Adams, Safe Travels Home, Bloomberg Intelligence Chief Equity Strategist, with us from San Francisco. Coming up next, we've got a few takes from the C-suite, including why one CEO says the tariffs are devastating for his business. This is Bloomberg Business Week Daily.
Yeah, but why don't you cover about all those businesses because of globalization that went under because of the push from Walmart? Please go to my store, the-studio-reykjavik.com, and get the resveratrol. Resveratrol is something that I've been taking for decades. It's really important. It's an antioxidant. It helps to slow down the aging process. How does it work? It gets rid of cells that are in senescence. And that's important to rejuvenate your cells. It also helps with youthful gene expression. Resveratrol will help with mitochondrial health, help to boost up your energy levels. It's an antioxidant. It's going to soak up free radicals. It stacks really well with C60, NAD+, and ubiquinol. So please go to my store, the-studio-reykjavik.com, get the resveratrol. Now let's talk about C60 for a second here. So C60 you can get in extra virgin olive oil, avocado oil, or MCT coconut oil. Now, C60 is a 60 carbon molecule that looks like a soccer ball called a fullerene or a buckyball. And that is important because the electrons that are floating around on the C60 molecule will help to soak up lots of free radicals. Hundreds of times more potent, almost 1,000 times more potent than vitamin C. All right. So it's really important to take a teaspoon a day. Take it on an empty stomach for best absorption. And if you work out, take it before your workout. It'll soak up the free radicals that you're generating during your workout, and you will recover quicker. In addition, C60 will help with your mitochondrial health. It'll soak up those free radicals, reduce the stress in the cell and in your tissues. And so your cells will perform better, and the mitochondria that are in the cell will perform better, and you'll have more ATP. That's why you'll have more energy. When you have more energy and healthier ATP, guess what? Your other organ systems will perform better. Your immune system will perform better. Your endocrine system will perform better. Your neurons will perform better. Your organ systems will perform better. And over time, you do this on a regular basis, a teaspoon a day, you will notice that you're aging slower. So please go to my store, the-studio-reykjavik.com, get the 2 ounce, the 4 ounce, or the 8 ounce configuration. Higher ounce configuration is cheaper per ounce, so it behooves you to get the higher ounce configuration. Again, get the C60 and MCT coconut oil, extra virgin olive oil, or avocado oil. C60 has to be in a lipid. So that's why it's suspended in an oil. So please go to my store, the-studio-reykjavik.com. Take a teaspoon a day. It's part of my 4-pillar protocol. The first pillar is max 35 or max 14 to boost up your immune system. C60 is the second pillar to soak up free radicals. The third pillar is turmeric, ashwagandha, and lignans to bring down inflammation and boost up your immune system. And the fourth pillar is Boomer Boost to boost up your energy levels and your metabolism. Take the C60 every day and slow down the aging process. Use discount 5 and you get $5 off any order. If you spend more than $150, if you spend $150 or more, you get a free gift until supplies last. All right, so let's go to Bloomberg again.
Lows, we've got the S&P right now down 276 points, 51.19. That represents a drop right now of 5.1%. Steep losses with the Dow now down 1,860 points, a drop of 4.6%. The Nasdaq Composite Index is down 834, a decline there of 5%. Bottom line here, the sell-off in stocks is deepening. Bonds rose, oil trading at a 4-year low. The 10-year 3.97%, with the 2-year 3.64%. Spot gold down 3%, $3,022 the ounce. And West Texas Intermediate crude is plunging 7.3%, $62.07 on a barrel of WTI. Bitcoin higher by 1.8%, $83,766 on Bitcoin. Stellantis, the parent of Jeep, Chrysler, and Fiat, is offering employee discount pricing across its brands as the car maker seeks to lure buyers into its showrooms after President Trump's tariffs sparked fears of rising car prices. Ford shares, meanwhile, they're up by 1%. Stellantis down by 5%. Recapping, stocks are selling off. Keep it locked into Bloomberg Radio and Television for the very latest, and we'll keep you updated right through the close and beyond. S&P again down 5.2%. I'm Charlie Pellets. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, yeah, safe to say, the understatement, it's been a tough week for investors, for business owners, for global leaders. We've got a global market sell-off underway. We've got that because a global tariff war is certainly underway, or feels that way. We'll have to see how it plays out over the next week. For the United States, in terms of tariffs, it takes us back to rates of nearly 100 years ago. Talking with those from the C-suite is super, super crucial for us. And someone who has a front row seat to this week's tariff news is Rob Rich. He's CEO of the Optical Foundry. They're based in Minneapolis. They sell eyeglasses to opticians in the U.S., Canada, and elsewhere. He joins us from Minneapolis on this Friday. Also with us is our own Nina Tretman. She's senior editor at Bloomberg News. the author of the CFO Briefing newsletter, which you can sign up for at Bloomberg CFO Briefing, Bloomberg.com/CFO Briefing. And Rob, by the way, is in this week's Bloomberg CFO Briefing newsletter that comes out on Sunday. Nina is why we are talking to Rob. Rob, we're so glad to have you here with us. We know you sell eyeglasses, but kind of lay out your business so that the Bloomberg listener and the Bloomberg viewer understand what you guys are all about.
Well, first, thanks for having me. And glad to be here. So our business is relatively simple. I mean, we design our eyewear and we source it overseas, and then we bring it to one of our warehouses, and we sell it then directly to the provider, being an optometrist, an ophthalmologist, an optician. So we don't sell to the end consumer. So we are in that middle area. And that's really just that's the nuts and bolts of what we do. This tariff has been an issue. We previously we did a little bit of our business with China, and the 301 tariff we absorbed pretty much across the board. But with the new stuff, we don't have the ability to absorb it. So we're just formulating exactly how big the price increases that we're going to implement are and when we're going to do that.
Yeah, maybe that's a good opportunity for me to jump in. Rob, thanks again for joining us here on the radio program. Talk to us a little bit. You said China is in your supply chain. I think Japan also is an important component. So how do you feel about those Japan tariffs that were implemented this week or announced?
Well, when we were talking the other day or yesterday, I guess, was when those were literally in the middle of our conversation when the Japan tariffs were announced. And I said to you, that's just a shot to my heart because that's where all of our production comes from for our products. And, I was hoping that there might be some exemptions for medical devices because that's one of the exemptions that has helped us in the past. It helped us with the Canadian retaliation from the last round was medical devices were exempt, so we did not have that issue with our Canadian business. But now with the 25% that we put in, I think the retaliation is going to be greater. So we've got it kind of coming and going, really. Bringing it in, our main source has been hit yesterday, which we have to figure out, again, what we're going to do. And then on the outbound, we're going to be hit because we do sell outside the U.S. So, when I say hit on that side, our buyers, meaning Canadian in this case, opticians, are going to be hit with a bill larger. And, it's going to certainly slip.
Why isn't Bloomberg talking about all the businesses that went out of business because of the unfair trade practices in the United States for the last 35 years? No, they don't want to talk about that because they're globalists.
Nationalism and anti-U.S. feelings when it comes to buying American products. And we were absolutely feeling that in the last month with our business in Canada dropping 30 to 40%.
Wow. So kind of like a triple whammy to your business just in the last few weeks. Rob, imagine if a member of the Trump administration's economic team were sitting right here. They would say, in response to you, this is exactly what it is designed to do. Instead of you contracting with firms in other countries, we want you to contract with firms here in the United States and build those eyeglasses here in the U.S. Are you going to do that?
No.
Why not?
It's even because the cost to make that happen, first, it's cost and timing, quite frankly. You've got a reasonably healthy investment. You can go automated to a degree, but that doesn't help the job market that they're looking to increase. There's a lot of labor involved in making quality eyeglass, even if you have a lot of automation. And quite frankly, people are not going to pay, I'll say, wages that would have to be paid in the U.S. To get that same exact product that even with Japanese, the way the Japanese do it, I can't speak to exactly how they're doing it, but I can tell you that we as a labor force right now are not competitive. And that is the biggest barrier I see. You know, we can get machinery, we can make that investment, but
Rob,
the other side of the coin.
I want to ask you about rising costs, but first I want to ask you.
You know why?
Is this possible?
I'll tell you why. Because the United States hasn't had individuals in high school and in college learning a trade, learning skill that is part science and part art. Coupling that whole, straddling both of those worlds, where there's the intellectual side of it and then there's the artistic side of it. And what has happened is you got a lot of lawyers in the society now and not enough craftsmen where they know how to make a really quality shoe or know how to really make quality eyeglasses. So we have lost that skill set of producing goods. And this is why I said, when you shift manufacturing away, you lose innovation and know-how and skill set. He just proved what I've been saying early on in this transmission, almost 5 hours ago.
The exact answer in terms of the magnitude, we're working on that right now. It's really the timing that I'm contemplating. I mean, quite frankly, as I just said, everything changes on a daily basis with this administration. And, you know, a lot of bluster and a lot of bullying, and who knows what the response is going to be and how quickly it'll be. I mean, I think maybe I don't necessarily implement the price increases next week. But if this does continue on, I would imagine by next month we'll fully reprice. The stuff we have in house right now will carry us for that month that has not been hit, and then our inventory starts to thin, and we need to replace. We already have a lot of our production cycle is long between creating and getting. It's usually about a year process really before an idea becomes a finished product. So
I'm sorry for jumping in. We only have a couple minutes left. We have a few more questions on the pricing.
Yeah. Bloomberg's a fucking bunch of bullshit. Please go to my store, the-studio-reykjavik.com. Get the collagen. Take it every day. Take a look at the typical amino acid profile on my website. You can read the label more carefully. Take this every day. It's a powder. You get a big scooper. This is a dual purpose product. It's going to help your skin and your hair and your nails, but also your joints, your cartilage, your bone structure, your musculature. Take it every day. Take it with soft foods. It's the way I take it. You can take it with filtered water, a smoothie. Some people mix it with milk. Some people even put it in their coffee. But take it every day. You get a big scooper. This is about a month's supply. And if you're going to be strengthening your bones, do that resistance training and those vibration exercises that I talked about, where you're lifting your body off your toes, with your toes, and then have your heel hit the ground, and then you're getting that vibration through your bone structure, through your legs, into your hip, and then up your spine. That signal is going to help to replenish the bone matrix. So as you get older, you start to lose bone matrix. Well, you need to deposit more bone matrix so you have more density. So doing resistance training, taking collagen, taking calcium, and doing these exercises they're all going to help for you. So take the collagen every day. Use discount 5 and you get $5 off. So please go to my store, the-studio-reykjavik.com. Spend $150 or more and you get a free gift. Go to my store, the-studio-reykjavik.com.
Probably will have to be some changes.
Do you, just thinking about changes, you've mentioned pricing to us, do you also consider other changes to your business at this point? Like I know one of your stores is called LAI stores, so could you consider rebranding? Could you do something else in order for people to not realize that you're a U.S. company?
And Rob, just got about 50 seconds left.
Okay. No, I don't see that. LA Iwerks is an iconic brand in the optical business. It's been around for 46 years. It is, really a jewel, and there'd be no way that I would rebrand that name under any circumstances, quite frankly. So, no, I have not thought through that question beyond really the next month. Right?
All right. So now we're the S&P 500 is now trading at 5,104. So we may break the 5,100 barrier, all right, but that's not a very strong support level. So we broke that 5,150 and 5,120 barrier, but that's intraday. So we'll see where it closes. It doesn't look like the institutional investors are coming in to purchase. They sometimes come in at 2 o'clock and they come in at 3 o'clock. All right, so we have about 25 minutes before we start seeing institutional investors potentially rebalancing their portfolios. All right, tactically. So we'll see, but there's a high probability that we broke that 5,120 barrier that I was talking about earlier. And that means that the next support level psychologically is 5,000. And that's not a strong support level. All right. Let me plug two more supplements before we go to Bloomberg again. Get the clarity factor. This will get rid of that brain fog. This is important to take every day, especially for you to focus on your work or focus on school. If you're retired and you're not working, you're not in school, it's important to take anyways because it's going to get rid of that brain fog and your neurons are going to be firing more. So that means you're going to be thinking better. That means you're going to help with your memory. This supports memory. And when you're learning new things, you're helping with that neuroplasticity, that positive neuroplasticity. That's really important for your overall health. And getting those neurons firing will help with that strengthening those neural networks and building new ones, additional neural networks. Now, it's also important to do proper exercise. You need to do all 4 modalities. You need to do resistance training because that's stimulating certain types of muscles in certain types of neurons. Doing cardio that will help with blood flow, which is good for your brain. Balancing exercises is going to activate that cerebellum and activate those neurons for kinematics. And stretching exercises activates other neurons that are attached to the ends of your muscle. So doing all these modalities are very important for neuroplasticity and strengthening of the neural network. So please go to my store, the-studio-reykjavik.com, get the clarity factor, help with your memory, get rid of that brain fog, make sure you drink filtered water. Clarity factor is very powerful. Take it every day. Really important. Myotrol. When you get older, you start losing muscle mass, especially when you hit age 40. Taking Myotrol is going to help with the gene expression so you can build muscle. It has flavonoids, polyphenols, and lignans to help with the gene expression for building muscle. It also helps with the health of your mitochondria. If you're age 40 or older, you should be taking Myotrol now. Go to my store, the-studio-reykjavik.com, take the Myotrol, do some resistance training to build muscle. This stacks really well with Gladiator Barley to build muscle. Gladiator Barley is a high-density protein. Myotrol helps with the gene expression. Please go to my store, the-studio-reykjavik.com, and stack. This stack right here helps with your muscles and helps with your brain. It's a great way to get healthy. If you spend $150 or more on my store, you get a free gift until supplies last. Please go to my store, use discount 5, all caps, number 5. You get $5 off any order.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Lows of the day right now on the S&P 500 index. 1 hour, 20 minutes to go until we wrap up the trading week. We've got the S&P 500 index right now plunging by 306 points, down 5.7%. The Dow is down more than 2,000 points right now. 2,098 on the Dow Jones Industrial Average. That represents a drop of 5.2%. Again, to put that in context, the S&P is down 5.7%. In the year-to-date column, the S&P is down 13.55%. NASDAQ right now down 5.7%, down 936 points on the NASDAQ Composite Index. The NASDAQ 100 Index down by 5.8%, and the 10-year 3.96%, the 2-year 3.63%. Gold is down 3% now at $3,021 the ounce. West Texas Intermediate crude is plunging 7.3%, 62.08 a barrel on WTI, and Bitcoin up 1.9%, 83,885. Bottom line here, the losses are continuing. S&P down by 5.8%. Wall Street banks are enduring another sharp sell-off after China retaliated against President Trump's tariffs with a 34% levy on U.S. goods.
Now here's an example. Here's an example of what I mean by the 5,000 is not a good support level. S&P 500 now is trading at 5,089.88. Okay, so S&P is down almost 5.8%. Now that's only 87 points to 5,000. It's not strong. It's not going to be strong. So what's happening is that you have people taking risk off during the weekend because they're worried about additional retaliatory tariffs that will happen potentially over the weekend, and then so people are trying to take risk off. So when the markets open on Monday, they have less risk exposure. But the thing is the VIX has spiked to 44 now. Okay, after hours trading last night, VIX spiked at 45. So right now we're close to the after hours trading of the VIX when the European and the Asian session were open. So what is important here to understand is that 5,000 is not a good support level based on Fib sequence, the Fibonacci sequence. It's only a psychological one. So there's a high probability that it's going to get broken next week.
Alan Guarino is back with us. He's vice chairman in the CEO and board services practice at the executive search firm Korn Ferry, joining us from the West Coast. Alan, nice to have you here on a week that's been a little hectic, to say the least. A lot coming at business leaders, a lot coming at the markets. What are you hearing from the business community about the macro environment?
Well, thanks, Carol. It's always great to come on with you and Tim. What we're hearing is, what we've been hearing other than the last 48 hours of what I think we would all categorize as shock to the system. And so let's just recap. So we had a big jobs number on one hand, then we had tariffs on the other in the last 48 hours. Someone could say a trade war, right? But we had a strong economy going into this, people would argue, and we had low unemployment. So I think the best thing to describe this is that, if I were a CEO today, I'd feel like I was driving a race car with one foot on the gas we want to put on the brake.
Wow.
And I think what that means is that, as much as we'd like to have really solid, smart predictions, I think it's a wait and see, and I think that wait and see is probably in the window of 90 days. Will, U.S. labor be competitive? Should manufacturing be able to return in some measure to our shores? It's just early times right now.
Listen, one thing I want to get to, though, too, uncertainty, no doubt about it. I'm looking at a market that is just getting worse, and we've got about an hour and 15 minutes to go, and we're looking at our major equity averages, Alan, at the lows of this session, something we haven't seen in a long time. S&P 500 is down 6%. Dow Jones Industrial Average almost 2,200 points to the downside, down about 5.5%. NASDAQ 100 down almost 6%, down 1,100 points. That does rattle businesses and leaders. Certainly if you're publicly held, you look at your share price. What does this make you stop to, do? What will you do as a result of all of this?
So, Carol, honestly, go back to Adam Smith. I think he said something to the effect that, understanding history will empower you to know what to do. Let's think back, sadly, to the pandemic. I think we had a 30% peak to trough market move within a very short period of time. The market came back. So CEOs don't usually run their businesses based on the stock market. Yes, they run their businesses based on creating the right earnings, trying to defend their multiples, but I don't think 30, 60, 90-day windows in terms of market reactions to clearly identified outside shocks is going to change that. You're going to have some CEOs, let's just say there's job dislocation in this market. I don't think there will be, but if there was, that means that if some companies cutting back, there's going to be a smart CEO who's going to step in and acquire that talent. Just like, quite frankly, people are going to over the next couple of months, if this market continues to, trade lower, are going to step in and start taking on stock positions that they would have liked to take previously that they thought were overpriced. So with all of this, let's call it somewhat chaotic market activity, it doesn't short-term change the way CEOs run and make decisions, especially on hiring.
So at this point, you're not hearing from CEOs that need to pull back on hiring. They need to start cutting their workforce because, look, we did get a great number this morning from the March payrolls report. It's backward looking, but if we start to see stress there, that could actually prompt the Fed to move rates lower. You're not hearing any of that from the folks you talk to?
We're not hearing anything right now. I think it's because of the foot on the brake and the foot on the gas situation. If anyone says they have enough clarity to make those decisions right now, I would tell you that they know something that 99.9% of the rest of the world doesn't know. So I think we'll start hearing that in probably, I'm going to say, 45 days, 60 days. And again, I think we'll hear it from both sides of the thinking here. Some that may want to cut, and others may want to take advantage of the opportunity that this talent is in the market. But right now, there's nothing shocking happening in terms of employment.
Alan, I want to go back to something that you said about these tariff announcements being a shock to the system. Why was this so shocking to the folks you work with each and every day? It was clearly telegraphed by the president when he ran. He told our own editor-in-chief, John Micklethwaite, that tariff is his favorite word in the English language. We knew he was going to do this. Why was it still so shocking to the markets and shocking to the executives?
Everyone's asking that question today. It's a smart one.
The word's called cognitive dissonance. But Bloomberg is too stupid to fucking say that.
In that, they had to process not the idea that we had tariffs. And I'm not going to comment on whether tariffs were a good idea or not. I'm not an economist, and I don't think anyone knows how this plays out mathematically and in terms of actual market equilibrium. But I think the shock to the system was the scale, and there's shocks to the system frequently, and people get past it.
Hey, one of the things I wanted to ask you, and here we are again, just to remind everybody, since we're so focused on the market, a second day of some extreme selling, S&P down about 5.6%, Dow down 5%, and the NASDAQ 100.
Don't be fearful. Remember what JP Morgan said, back in the 1800s, early 1900s. Never let me repeat, never bet against the United States. All right? Never, ever, ever. Every time someone tried to bet against the United States in the long term, you lost. Never do it. Buy into this market. Trust me on this. I've done this for a long time. I know what I'm talking about. Take the pain, buy in. You will gain a lot of money when the equity market starts to turn and it goes past 6,000. All right? Because think about it. You're already close to 20%, we're not that far away from a 20% decline. We're not that far away from a bear market in the S&P 500. 4,800 is a bear market. All right? We're not that far away. This is the time to accumulate shares. So when it starts to turn up and it gets to 6,000, 6,100, 6,500, boom, you have made a lot of money. Don't be fearful in this. Buy in.
To kind of buy this idea that there will be lots of investment or more investment in the U.S., that we will see factories built, make things, create lots of jobs, and it will lead to an economic boom. I know what economists say and what history tells us, but what do leaders that you talk to say this? Do they buy this action and this expectation?
I again, not hearing enough to say, wow, there's a big trend here, but what I do hear is, there are places in this country where people could make a reasonable dollar per hour wage that wouldn't be egregious in terms of being competitive and have a terrific quality of life. And certainly that's not necessarily in the big cities. But if we bring in a situation where, free market of sorts starts to see some green shoots in terms of light manufacturing,
right,
then yes, the answer is it could be. And by the way, there's another thing to remember, it's something Korn Ferry does, is this notion of upskilling. So, as these jobs materialize, if this particular strategy works, then we're going to have people right now that are in, let's say, lower order jobs that make less per hour, perhaps get some upskilling and be able to go into a light manufacturing opportunity where they can make more. All of this is still speculation.
Okay.
Because each of us can argue both sides. I quite frankly don't have a particular bias here. I try to look at it as measured as possible.
20 seconds. Everybody's not screaming recession or stagflation or the end of globalization. Just quickly.
People are worried about stagflation. Okay. People are expecting, recession because we've been expecting recession for 20 years. And again, I think we talk about the market. If we look at the market today, I think if you look at the 2-year S&P, today it's still up 35% over those 2 years or so. It's a big number.
Yeah.
So, a lot of the money is theoretically coming off of people's portfolios today.
Don't worry about it. Buy in. Buy in. 6 months, 9 months from now, you're going to be thanking me. Please go to my store, the-studio-reykjavik.com. Get the Boomer Boost. Boomer Boost will help to boost up your energy levels and speed up your metabolism. You will lose weight, and guess what? You're going to notice the differences of taking this within 72 hours. 72 hours, you will feel healthier, and you will be getting healthier. All right? You can slow down the aging process with Boomer Boost. You can target your heart health and your vascular health. Your brain health will improve. Your musculature will improve. Your strength will improve. It has a very expansive supplement profile. Go to my store. Take a look at the label. Extremely impressive what's in here. You should be taking this every day. There's a big scooper. Mix it with soft foods. That's how I take it. You can mix it with filtered water, with milk, or in a smoothie. It's up to you, but take it every day. You want to take it for your breakfast or for your lunch. I take it for my lunch. I mix it with hummus. And what you'll notice is that you're going to start losing weight. You're going to be controlling your blood glucose levels. You're going to have a steady burn of energy throughout the whole day. You're not going to have spikes and then crashes. Steady burn. You're gonna have a more mental acuity. You're going to be able to sleep better. And when you sleep better, you're consolidating memory, you're detoxifying your central nervous system, and you're going to be well rested. And good sleep reduces the chances of early onset of dementia, because if you're chronically sleep deprived, your memory is going to go down. So Boomer Boost, really impressive stuff. It's like almost magic, all right? It's almost like magic with the stuff, all right? It's really impressive. You're not going to be finding too many things that can outcompete this, all right? There may be things that maybe are similar, but there's nothing that would outcompete it. So please go to my store, get this, take it every day. It's part of my 4th pillar of this core protocol. Max 35 or max 14 to boost up your immune system, C60 to soak up free radicals, turmeric, ashwagandha, and lignans to help boost up your immune system. And guess what? Boomer Boost is the last pillar of that core protocol to speed up your metabolism, boost up those energy levels. So take this every day, all right? You're going to get healthy fast, all right? Now, it works even better when you do this holistic protocol, all right? Proper diet, proper exercise, stay away from processed foods, make sure you filter your water, mindfulness or spirituality, calm down your central nervous system, go into parasympathetic, really important. Learn new things. Make sure you do all 4 modalities for exercise. Now, also, I have gladiator barley and heirloom barley. These are high-density proteins. The gladiator barley focuses on strength and building muscle, and all the benefits that are in heirloom barley, which are detoxification, bringing down inflammation, and soaking up free radicals with superoxide dismutase. When you bring down inflammation, that's going to help your body to heal after a workout, so you're recovering quicker. But not only that, bringing down inflammation helps with your cardiovascular, and bringing down inflammation helps with your immune system. Now, the heirloom barley does that detoxification, bringing down the inflammation and soaking up those free radicals, just doesn't focus on the strength side of it. It's a high-density protein. Both are high-density protein. You take a scoop, a half a scoop, or a full scoop. I take a full scoop. And what you want to do is mix it with soft foods. Now, you can mix it with filtered water or milk, but the best is to stack it with the Boomer Boost. And then you're going to be able to control your blood glucose levels even better. All right, so you get that high-density protein. This is heirloom barley. You can't buy this anywhere you can't buy the high-quality barley that's this at a grocery store. All right, so take them separately, or better yet, take them together. You're going to lose weight, and you're going to get healthy, and you're going to get healthy fast. All right, now you do all these other modalities, this holistic approach, and you stack, other supplements that I've told you 1,000 times on how to do. You're really going to slow down that aging process. All right. People have been watching me for more than 5 years. Have you noticed I'm not aging? You wonder why? Now take a look at one of your YouTubers and look back 5 years ago and compare their content today and the way they look and 5 years ago. How many of them look younger? How many? Most of them look older, like a lot older, especially if they're in their 50s. All right. I don't look like I'm in my 50s. All right. And I'm positive I am more fit than Alex Jones. Positive on that. So please go to my store, the-studio-reykjavik.com. Get the Boomer Boost, get the Gladiator Barley, or the Boomer Boost and the Heirloom Barley. Do those workouts, do this holistic approach, stack this with other supplements that I have, slow down the aging process. You do everything that I've been talking about, and you've just mimicked what I do every day. All right? Now, if you want to save money and get these products in your hand, the best way to do it is to get the Boomer Boost and your choice of Gladiator Barley or Heirloom Barley by buying the Longevity Boost Box. It's at a discount, built-in discount, so it's cheaper to get the Boost and your choice of barley by getting the longevity boost box. And you can apply discount 5 on top of it. Or you can purchase them separately. It's up to you. But the point here is that these products, that all of them that I've been talking about, do major benefits for your health. Now, if you stack them the way I told you to, you're going to be targeting different systems. You're going to be slowing down the aging process, boosting up your immune system, and you're going to have more longevity. Now, I am the proof of this. All right? So please go to my store, the-studio-reykjavik.com. Get the products. If you spend $150 or more, you'll get a free gift. Now, I guarantee you, the cost of this container and the cost of this container, and you do these together, is cheaper for the month than how much you're spending for your monthly breakfast or for your lunch. Take this for breakfast or for lunch, and you will lose weight and get healthy fast. Please go to my store, the-studio-reykjavik.com. And by the way, it helps your daily detoxifying your body too when you're doing that. Let's go to Bloomberg because they're aging faster and they're stupid.
We're going significantly lower by the end of the year. That's next on Bloomberg Business Week Daily. The close is next on TV.
All right, since they are on break, let's go to Al Jazeera. I think they're talking about oil here.
Well, here's a look at what that looks like live. With an hour of trading still to go, the Dow Jones Industrial has lost more than 2,000 points, or 5%, for the second session in a row. Analysts say the markets are poised for their biggest two-day loss in history. American companies have lost $5 trillion of value in 2 sessions. The S&P 500 and the NASDAQ are down even more. Well, Kristen Sweeney joins us now from New York. So, Kristen, the market's looking extremely unhappy at this. What's the latest you can tell us?
Yeah, it's the second day in a row that the markets have taken a beating, and the latest moves downward coincide with the retaliatory tariffs that were enacted by China, 34% on U.S. imports in response to tariffs imposed by the United States on China. This is all sparking fear of a global trade war and possible global recession, and that's what we're seeing play out here in the markets today. Comments by the Federal Reserve Chairman and the President seeking to calm investors and the greater public don't seem to be working. We've seen the Dow Jones Industrial Average, representing blue chip stocks here in the United States, tumble. It's on track for its worst week in 2 years. The NASDAQ, which features a lot of tech companies, is seeing huge declines. It is now 20% lower than where it was just in December. And that is considered bear market territory. And that's the worry here for all of these stock indexes, that they are looking and flirting with bear market territory. What's a bear market? That's when the market is on the decline, when there are, they usually coincide with an economic slowdown and higher unemployment. So that is the worry. The concern is that, that this will continue, and so we're seeing this huge sell-off.
But meanwhile, Donald Trump has sent a message to the head of the U.S. Federal Reserve urging him to cut interest rates.
He did, but Jerome Powell did not want to go there. He said that, that will be decided at a later time. He did acknowledge that the United States outlook could be changing. He insisted that the economy is still strong and in a good place, although growth is slowing. He pointed to the jobs report that came out today as a positive development. That report came in higher than expected, 228,000 new jobs created in the United States in the last month. But this is just a snapshot of what's happening in the U.S. And it was taken before these latest tariffs were announced, and also before the federal job cuts that Elon Musk ordered went into full effect. So there was a note of caution from Jerome Powell as well.
While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent.
And he said it's not only tariffs that are going to impact the economy, but also things like deregulation, fiscal policy, immigration policy, all that will have an impact on the economy. And that needs time, he said, to play out. He said there will be pain in the short term. Longer term is harder to gauge. Clearly, markets did not find that reassuring. Investors.
This tourney season, send and spend like a champ on Venmo. Split the eats, get in on the game, ride to the party. With Venmo, you win.
It has a large armory that we can see how it works. It is not a black box. Basically, you can see what's going on inside of it. You know how the alerts run. It allows us to be able to customize stuff really fast, to just tweak something and get an alert out the door that works in our environment without a heavy lift on making sure we're ETLing all of our data sources. We don't have to ETL all data sources. You can start getting benefits out of the gate with it. But yeah, and just learn too. If you're not sure how to make stuff, you buy a black box. You can kind of get some ideas on what they're doing also, and then do better yourself. Each one makes the other one better, and it feels so natural and slow.
Communists targeted a residential building and killed at least 19 people. Without heavy machinery, digging for bodies under the rubble is practically impossible.
This is where more than 80 members of my family lived. It housed my grandparents, uncles, and more than 40 children. Most of those killed were women and children. The building was directly targeted by Israeli missiles without any warning. There's no justification for pounding this residential building. This is a war crime committed by Israel.
Aaron Abazoum reports now from Deir al-Balah.
The Israeli military has intensified its military operations across separate geographical locations in Gaza. The Israeli military officials say that these operations aim to force Hamas to back down and to release more Israeli captives, but facts on the ground completely drove another picture that we have seen over the course of the past days, where more displacement orders were issued for civilians to evacuate heavily and densely built up neighborhoods, and now they find themselves struggling to look for safe places. We have heard from the military spokesperson of Al-Qassam brigades, Abu Ubaidah, saying that half of the Israeli captives are right now in areas that have been marked by the Israeli evacuation, and he added in his statement that the Al-Qassam brigades will not relocate those captives in areas elsewhere, but they will take ultimate precautions in order to guarantee the safety, clearing the Israeli Prime Minister Benjamin Netanyahu the full responsibility for endangering the lives of those captives without heading into the political discussion on the table of negotiations that will only guarantee their release from Hamas's custody. It's understood the sign of pressure made by Hamas this time, but the civilians are caught between the political demands of both parties and bearing the brunt of this deadly ongoing Israeli war in Gaza that has no end in sight. Tariq Abazoum, Al Jazeera, Deir al-Balah, Palestine.
A funeral has been held for a Palestinian man killed by Israeli forces in Jenin in the occupied West Bank. Hussein Hadan was killed on Friday morning. The Palestinian Red Crescent says the 42-year-old's body was handed over by Israeli troops at an Al-Ama military checkpoint. Israeli forces have been focusing their raids on Jenin for 73 days. Thousands of Palestinians have been displaced and homes destroyed. But Israel says it's targeted and killed a Hamas commander in an airstrike in southern Lebanon. The attack destroyed at least one floor of a residential building in Sidon. 3 people were killed. Israel says one of them was Hassan Fahat, who's accused of taking part in plots against the Israeli military and people. A Russian missile has hit the Ukrainian city of Kryvyi, killing at least 16 people, including 6 children. More than 50 others were hurt after the strike with a residential area. The city is the hometown of President Volodymyr Zelensky.
Let's go back to Bloomberg
is faced with
On Bloomberg surveillance, the trade fight weighed hard on shares of industrials and materials companies, including such firms as Stanley Black & Decker, the tool company. Also today we had Caterpillar down 5.6%, Stanley, by the way, down 4.6%, Harley Davidson now down 1.1%, and Whirlpool lower by 2.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pollard. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Well, just after the U.S. election, when Wall Street was all in on the prospects of a business-friendly President Trump, Peter Berezin was sounding the alarm. He and his team at the research shop BCA predicted that broad-based unilateral tariffs were coming, and that the new administration's proposals would go well beyond what had been implemented in Trump's first term. He was right, and now he says we've got a long way to go, lower before the end of the year. In other words, the worst is yet to come. Peter Berezin is Chief of Global Investment Strategist at BCA Research. Their clients manage some $34 trillion. He's featured in one of the most read stories on the Bloomberg in the last 8 hours. He's based in Montreal, Canada. Peter, welcome to the program. You've got a 44.50 call on the S&P 500. We're at about basically 5,100 right now, so roughly 15% decline from where we are. Why are you so bearish?
I don't think the stock market has
44.50 is way too. It's 400. I'm sorry. It's 4,810 is where I'm calling it. 4,810, not 4,450. That would be too much of a market sell-off.
That one would expect to go down in a recessionary scenario. So we're starting to see that being priced in, but we're not there yet. To get down to 44.50, which is my target, you don't need to make any wild assumptions. All you need to assume is that the forward P multiple drops to 18, and the earnings estimates fall by 10 percentage points. That's not crazy at all. On average, between 2015 and 2019, the P multiple was 16.8. I'm talking about 18 in a recessionary scenario. So if anything, my target, even though going into this year, it was 1,500 points below the nearest person, might actually turn out to be a little bit too bullish.
No.
Could we even
He's missing the point. He's totally missing the point. It's a complex system with lots of feedback loops. One of the feedback loops that's going to be positive for the equity market to move up is negotiations with certain countries with lowering tariffs and de-escalating this tariff war. Tax cuts at the end of the year by passing by Congress. I'm telling you, 4,810.
To roll their money over into low-yielding long-term bonds. I mean, this is crazy, right? The treasury market is the ultimate risk-free asset. If we undermine the sanctity of the treasury market, then we're looking at a worse financial crisis than what occurred in 2008.
This was supposed to be the year.
Wait, you said we could. Sorry, Tim.
Wrong. 2007, 2008, that's Lehman. That was because of all this interconductivity between the banks with these dark operations with the swaps, the subprime mortgages. That was way the contagion of that was way different than what's going on now. No way. No way. This guy is... A Lehman event is every 50 or 100 years. No, this is totally fucking wrong.
A risk off currency. You buy treasuries when everything is going to hell, and that requires more dollars, and that pushes up the value of the dollar. The fact that the dollar is weakening now is telling you that increasingly investors are losing confidence.
Oh, really?
In the US.
The dollar is weakening? Dollar's weakening? Really? Take a look at the dashboard right now. The S&P 500 is going down, but right now it's trading at 5,116. All right, below that support level, so that's bad. But the Euro USD trade is actually today's trade right now. Dollar has been strengthening. Japanese yen, the dollar has been strengthening. Fucking idiot.
Great again.
Not quite, no.
It raises the question about how much damage can be done before you believe that Trump will reverse his policies, if that is something you believe.
Well, I think for one thing, we've already sort of passed the event horizon. I think at this point, it's going to be very difficult to avoid a recession just based on everything that's already happened. The economy wasn't that strong going into the latest escalation of the trade war. In February, real wage and salary income was only up 1% year over year. The CPI swap market is telling us that these tariffs could push inflation to well over 3%. We're potentially looking at negative income growth. That's going to be very difficult to maintain.
Don't bet against America. Don't bet against America. J.P. Morgan, from his grave, whispers every day into the ether, don't bet against America. She will always surprise you.
30 years about how he wants to build this protectionist wall around the U.S. I don't understand where this groupthink came from, where people were just saying, it's going to be a negotiating point. It's not a negotiating point. He wants something that resembles autarky.
Okay.
We're going to pick up on that, but we got to do a headline.
There's a headline crossing the Bloomberg terminal. I'm going to work it into a question here. eToro is set to delay its IPO roadshow amid market volatility. Put that on the list of companies that we've heard from today or have been reported.
Of course the IPOs are going to go on hold. You think they're going to be releasing an IPO in this volatile market? I mean, come on. That's not news. It's common sense.
Being financial conditions tighten too much right now, we could start to see some sort of panic or freeze.
Yeah, we estimate that easing financial conditions last year, mainly because of rising stock prices, added around 0.5 percentage point to growth. The fact that financial conditions have tightened, mainly because stock prices have fallen, credit spreads have widened, is based on kind of a very back of the envelope calculation, will shave around 0.5 percentage points from growth. And that's not huge, but the risk is that you get kind of in this feedback loop situation where stocks go down. That means people feel less wealthy. That means they spend less. So there's less sales, less profits, and even lower stock prices.
But if you take this as an opportunity, because Trump just gave you a major gift, at the end of his term, most likely the S&P 500 is going to be at 8,000, 9,000, or 10,000. Now, if you take this opportunity to actually invest in the market right now, you are going to make a lot of money. Never bet against the United States. Don't bet against the United States. This clown saying, just invest in Europe or something bullshit.
Where the market could actually rally.
There's certainly scenarios, and I wouldn't be surprised if over the weekend there's some comforting words from the Trump administration, but that's not my base case.
That's going to be a dead cat bounce. It's going to break 5,000, and it's going to trade in between 5,000 and 4,810. And then the tax cuts come in, and boom, the market's going to rally.
There's two flaws with that argument. The first flaw is that most rich countries don't actually have very large tariffs against the U.S. and don't really have very large non-tariff barriers against the U.S. I mean, they have regulations. All countries have regulations, but they're not specifically targeted at U.S. companies for the most part, for the exceptions, of course. So there's not.
Oh, and then let's say, okay, there's a lot of baby boomers that are starting to pass away, right? That first wave. My parents were the first wave of the baby boomers, all right? They're in their 80s, they're dying. They're in their late 70s or early 80s, they're dying off. There's going to be a wealth transfer that takes place during the Trump administration with that first wave of baby boomers. That's going to be an accelerant for the economy.
You know, one of the things I also wonder is that, is it possible that, this, I guess what I'm thinking about is what you said before, autarky. And that is the idea that, right, the U.S. produces everything that we need within our borders. Is that really, you think, the goal of President Trump? Because I think that's one of the things that we've tried to figure out with the tariffs, is that what's really his end game? What's really his mission here? But do you believe that his mission is that the U.S. is kind of self-sufficient?
Bloomberg. Trump said this on Oprah in 1980, literally. I'm not joking. He said America's getting ripped off, and the only way to stop it is to push back.
As exploiting the U.S., ripping the U.S. off, as he likes to say. He doesn't see trade as something that can lift all boats, which is the way most economists see trade.
Yeah, but most economists are fucking wrong. Saltwater economists and freshwater economists, they're both fucking wrong.
To buy NVIDIA stock or treasuries. That has been a vote of confidence in the financial system. And yeah, if you force people to not buy U.S. assets, you'll have a weaker dollar and a lower trade deficit. But is that really what you want?
Hey, you mentioned politics a little earlier, at least from the Canadian perspective. Here in the United States, I'm wondering the sort of guardrails that you see on this president and his policies. Because we're getting news now that Senator Ted Cruz, who's usually a staunch supporter of President Trump,
why do we need guardrails on life, liberty, and the pursuit of happiness? Bloomberg.
Midterm elections. He said this stuff on his podcast, which was released today. This from our team at Bloomberg News. How do you see the guardrails around this president here?
So I think that's going to be what happens next. You're going to see more and more Republicans abandon Trump, and we're going to have real discord within the Republican Party.
Oh wow!
But unfortunately,
what's amazing with the host on Bloomberg when he goes, "Wow, he's a young guy and he's not very experienced." All right, went to a decent school, and guess what? Because you're not experienced, you don't understand like the real world. And the reality of the situation is, because there is stress, people are going to get worried because they're all about the immediate bread and circus. And so they're worried about their constituents blaming the Republican Party, and they're worried about their next election. But not so much the average voter. They're a little bit concerned about that because that's what's going to get them reelected. They're more concerned about the globalists because, like what I said, what Trump's doing is attacking the Achilles heel of the globalists. And those rhinos, those ones that say they were supporting Trump, but they're not willing to go through the pain to fix America, all right, and they're gonna drift away from Trump. It's because they're listening to someone speaking in their ear that's from K Street, because they're a globalist and they're a transnational capitalist and they're a multinational, and they're whispering in those ears of those representatives in Congress, especially Republicans, saying, we don't like what Trump's doing. It's hurting our business. And those representatives are willing to bet against the middle class and vote for, align with the globalists. Now, like what I said, this is a new revolution that's taking place for life, liberty, and the pursuit of happiness. It's not muskets. It's not smoke and fog on the battlefield. And it's not a general on a white horse this time. It's an economic war. We are not going to lose this. But be aware, you're going to have Republicans and Democrats siding with globalists that is against the middle class. And that has been happening for the last 35 fucking years.
And Tesla is slumping by 9.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Well, just before we came on air, we got the news that President Trump has said that he's decided to extend the deadline for Chinese firm ByteDance to divest TikTok's U.S. operations and give his administration more time to finalize.
Now look at how young he is. Look how young he is with the stupid glasses.
ByteDance an additional 75 days. Remember, it was April 5th.
And he's going to tell you how the real economy works.
His deadline.
And let's not forget it.
He's going to tell you on all the nefarious things that went on with NAFTA.
Then we had to get it back.
You know, like Snoopy and Charlie Brown and Lucy. Was it Lucy that always like pulled the football out? That's what it feels like constantly. Sorry, TikTok football. All right, go on.
I think you're right. They were supposed to agree to this deal that would sell TikTok's U.S. operations to an American buyer and avoid a ban that was set to take effect as soon as this weekend. For more, we don't want to bring in Michael Shepard, Senior Editor for Technology and Strategic Industries at Bloomberg News. Also, Kurt Wagner joins us. He's Bloomberg News technology reporter. Kurt is also the author of Battle for the Bird, Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul. Michael, I want to start with you out in Washington, D.C. At ByteDance, we got some comments from ByteDance. They've confirmed that the talks are ongoing as Trump announced this extension. What are the proposals right now that are being reviewed?
Well, the one that seems to be gaining the most favor and is viewed as the leading contender would actually not completely wipe out ByteDance as an owner in this new U.S. app that the plan would call for. Instead, what you would see is their holdings diluted to below 20%, and that would allow it to fit within the parameters of the law that Joe Biden signed last year, calling for Beijing-based ByteDance to divest to below a certain point and lower some of the national security risks associated with that. They would no longer have a controlling stake in it. Instead, you would see investors including Oracle Corp, Blackstone, and perhaps Andreessen Horowitz also join in buying up, together with other investors, a 50% portion of this venture. And then ByteDance American investors would buy another 30%. And the idea would be that it would be an American operation, still with some nominal connection to ByteDance, but that in doing so and allowing this ByteDance ownership to remain, that would perhaps make it easier for the company to sign off on the deal and then also win the blessing of authorities in Beijing, which is no small matter.
All right, wait a minute. First of all, I don't even know who to ask. I want to ask both of you. Kurt, let me bring you in. Is there even a nominal connection to ByteDance? Is that even possible? If the concern is about any connection with China, potentially the Chinese government, is that even possible?
So the ownership breakdown that Mike described is possible under the law. I believe ByteDance could own, as long as it's less than 20% of this company, that would be allowed. But what would not be allowed, and where the sticking point is, in my opinion, is on the technology itself and control over the algorithm that people, that is used to show people posts in their feeds. So under some of the previously reported kind of discussions and plans that have been floated to Trump, ByteDance, even though they'd have under 20% ownership, would still control this algorithm. And according to the law, that is not allowed. And so ByteDance doesn't want to give up control of the algorithm. The law says they have to give up control of the algorithm. So to me, it's less about the ownership here that's the sticking point, and it's probably the technology and who gets to control it that's the sticking point.
Right, the holy grail that makes TikTok TikTok. Michael, come on back in here. Is that what's kind of making these negotiations tricky? I'm curious what you guys are hearing from the White House, because it is interesting that it's not like we just said, that's it, TikTok's done. They keep expanding, the timeline here and extending it. So is that what's holding it up, is what's up with the algorithm and who really controls it?
Carol, it's a good question. We don't have that much visibility into what is exactly happening behind closed doors in these talks. But the algorithm certainly is a sticking point. The law was very clear about whether ByteDance or any Chinese entity, for that matter, could remain in control of this really valuable technology that also allows potentially a window into American users and also a vehicle for perhaps disseminating propaganda in the U.S., which was another concern cited by U.S. policymakers when this was passed. So that is certainly one of the sticking points. But there are many others too, including ByteDance, for instance, just overall doesn't like the idea of this sale. They found it objectionable all the way back in 2020 when Trump first pushed the idea. Remember, he originally signed a ban, an executive order banning the app, and that set about trying to find a U.S. buyer. Of course, those efforts kind of just fell apart during the pandemic, among other things, and legal challenges too. But for ByteDance, this has from the start been a non-starter. The fact that they're confirming some discussions today is news, and it's really the first we've heard from them saying that they are in talks with the U.S. on this.
Hey, Kurt, who do you think in your reporting is the most serious contender to take over ByteDance's U.S. operations, TikTok's U.S. operations?
Well, I think there's a difference perhaps between who's the most serious and who's the most likely, because I think there are actually a lot of serious contenders, including, Frank McCourt and Project Liberty. I mean, they're very serious about wanting to do this. But do I think they're maybe in the driver's seat? I would say probably not. I think Oracle, maybe to get to the real, point of your question, like who's the most likely?
Yeah.
I think Oracle is probably the most likely to be involved here for a couple reasons. Number one, we know that they were part of the consortium of investors that was reviewed in the Oval Office on Wednesday by Trump and some of his aides. We also know that they have an existing relationship with TikTok. They already work with TikTok on cloud services, on data storage. And we also know that Oracle Chairman Larry Ellison is a Trump supporter, a Trump donor. And because of those reasons, I think Oracle has sort of taken the lead in terms of who is almost guaranteed to be in a proposal from Trump. Now, again, as Mike pointed out, a lot of this depends on whether ByteDance and the Chinese government ultimately agree, which they may not. But the proposal that Trump puts forward, I think we all expect to have Oracle probably involved.
Michael, one of the things I wanted to ask you is how much of those conversations are also related to the tariffs imposed on China. I'm just curious if it all kind of folds into one.
Well, in the end, we joke here in Washington that it's all